How difficult was it to go to investors and say, invest, give money, put money into a travel tech company within this environment?
It wasn't that difficult because TravelPerk is doing much, much better than the rest of the industry. In fact, we are at the moment growing at 4 times revenue of pre-COVID numbers.
Let's get more on the regional impact of the Ukraine situation with our equities expert, Farah Al-Bahrawi. Farah, how do Middle East markets then fit in the wider volatility we've seen? Because it was almost like they were on a different planet in the last trading session.
Absolutely, Yusuf. Middle Eastern markets, I think, are in a very unique situation right now within global markets. Any potential exclusion of Russia from the MSCI Emerging Markets Index would be a huge positive factor for Middle Eastern markets because of that flows story that we constantly discuss. Saudi Arabia would of course be the biggest beneficiary as a heavier weight, even heavier than Russia on the index, with these flows being reallocated to the country. So yeah, Saudi and UAE top gainers on that front, and that's according to Arqam Capital. But really, with oil prices and commodity prices in general being where they are right now, Gulf stocks in particular could really be poised to benefit and rally even further this year more than last.
And then we had a company-specific development around Ma'aden. They finally came in with a profit after 2 years of losses. What are analysts telling you?
Absolutely, Yusuf. It's that same exact thing that we're seeing with the commodity play with Ma'aden, but really yesterday was taken very positively by the market. You were asking about that. It soared as much as 8.3%. It hit a record high. Again, it just goes to show how well positive earnings are, treated in Saudi Arabia. With Ma'aden in particular, they announced a capital increase, 1 bonus share for every 1 held to help boost its growth. And again, that's something that the Saudi market tends to really like.
I want to circle back to what we were talking about in sort of the first question, and it relates to the reaction of regional equities and pricing in the rising risks. So the higher oil prices is good for a lot of names, but the rising derailment and geopolitical tensions is bad news for aviation, for hospitality, for tourism. How does that set Dubai up later today?
Absolutely, Yusuf. That's really one to watch out for. Dubai, in general, the reopening play. We have Air Arabia here in Dubai. We have Jazeera Airways in Kuwait. Again, with these oil prices that high, this could actually also be a negative impact on these airlines. We also have the tourism plays in Egypt. If you remember, we have several companies with hotels in Sharm el-Sheikh and the likes, like Talat Mustafa and Rascom Housing, or Rascom Development rather. So these are also different names to watch as the market opens later today, with the potential tourism being impacted.
Farah, thank you very much. As always, that's Farah Al-Bahrawi there. We still have much more to come on Daybreak Middle East. This is Bloomberg.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
Dear colleagues, you see that not only are the Western countries engaged in unfriendly actions towards our country in the economic field, I'm talking about the illegitimate sanctions everyone knows about very well. But the top NATO member countries' officials allow themselves aggressive statements towards our country as well. That's why I'm ordering the defense minister and chief of the general staff to switch the Russian army's deterrent forces onto a high alert mode of combat standby duty.
A worrying warning from President Putin. The European market open is just a couple of hours away. Futures indicating a rough session ahead. Bloomberg's Francine Lacroix joins us now from London. Francine, what is going to be front and center for investors as we count down to the beginning of trade in some of these European capitals after the very eventful weekend that we had?
Yusuf, good morning. Now, it's very clear that a lot of the trading desks here in London have asked their traders to come in about 3-4 hours ago to make sure that they're ready for any kind of volatility or lack of liquidity. Now, you see it playing out in European futures because if you look at geographically, the place that will lose the most if Russia were to not only attack Ukraine more with extra troops also from Belarus, but in general for the, to stop the gas from flowing into Europe, of course, is Europe, which is why we're seeing the brunt of the losses when it comes to equities in Europe with the Euro Stoxx futures down some 3.5%. What I'm looking for, Yusuf, that could play out today in the next couple of days or could not play out is some kind of freezing of assets. If you see the double whammy of, excluding the 5 Russian sanctioned bank from SWIFT with freezing, of course, the Russian central bank possibility to prop up the economy, you could have a contract, which we're not foreseeing at the moment, that could freeze up, that could actually make life a lot more difficult for the world economy and the financial system. So that, I guess, is worst case scenario, apart from, the threat of nuclear war, which I guess traders are also, if not trying to price in, on tenterhooks about.
Yeah, I mean, that's something to consider, isn't it? Like, for decades, you work with a paradigm, a view of the world that kind of works based on global cooperation and stability and sort of rational decisions, and that's really being tested at a minimum at the moment. How has it brought into focus a potential European unity on a wide variety of issues where there were very heated differences in the past?
Yeah, you really see, Yusuf, for the moment, this kind of Western alliance that held out strong with Canada, the UK, the EU, and of course the US over the weekend with sanctions. Now, I'm hearing a lot of insiders or a lot of hope from leaders in saying, look, this alliance has to hold. My question longer term is if Europe gets hit by huge soaring energy prices, if inflation's out of control, what's the front line or what's the amount of pain that leaders will be able to inflict on their citizens without having to do a 180? So for the moment, you see strong sanctions. You saw swift sanctions after a lot of people saying that they were dwindling, but I don't know how long it lasts. I think all will depend on the economic pain that this, Europe, but also this region will be able to endure.
Fran, really appreciate getting you on the show and some of those insights. That's Francine Lacroix in London. I want to get straight to the market action again. We talked about how equities are getting crushed in terms of the Euro Stoxx futures, but it's also quite a bit of weakness coming through to the downside for the S&P 500 Mini to the tune of about 2.1%. How does that affect the view on stagflation later in the year and beyond? How does that potentially alter how aggressively the Fed is able to deliver in terms of front-loading rate hikes in the first 6 months of the year? A lot of things to digest. Let's get to the Treasuries board on that note, because the front end of the curve is outperforming as the market gets to grips with these escalating sanctions, and especially the SWIFT component to it that caught the market a little bit off guard, because there was a thinking that there might be a breakthrough on the negotiations front. There's still hope that the meeting that gets underway in the next few hours on the border between Belarus and the Ukraine produces anything meaningful. This is Bloomberg.
We know that it's highly transmissible. We know that 2 doses of vaccines, Pfizer vaccines specifically, neutralize the virus, but not as efficiently, because various studies showing that reduction up to 40-fold, meaning that a 3rd dose is a must for it to successfully neutralize the variant. What we don't know is still that what are the effects of mix and matching between vaccines, and what are the capabilities of antibodies produced from this mix and matching in neutralizing Omicron. Because as we know, many parts of the world use different types of vaccines. And that would be a great data to look at. It will be also great to look at, because majority of the studies done uses a small sample number, and most of the time when you translate it to real world, the data changes. So it will be really good to look at large-scale data of the ability of antibodies from vaccines to neutralize this variant. Grateful here today that the virus, Omicron variant, still uses ACE2 receptor as its main entry. It means that all of the vaccines which are designed with spike in mind still works. Imagine if it uses a different receptor other than ACE2. None of the vaccines would work today. So I think that is the best news that we got from all these studies which came recently, the past couple of days.
However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
This is Bloomberg Daybreak Europe. I'm Danny Berger, and these are the stories that set your agenda.
I'll say frankly, like always, I don't believe that much in the result of this meeting. But let them try so that not a single citizen of Ukraine has any doubt left that I, as president, used every chance to stop the war, even a small one.
The ruble plunges as Ukrainian and Russian officials prepare to meet at the Belarus border, hours after President Putin put his nuclear forces on higher alert. Stock slump and oil surges the most since 2020 as Western nations target SWIFT and Bank of Russia assets with new sanctions. Metals and wheat jump. Plus, BP moves to dump its shares in oil giant Rosneft, while Norway starts to remove Russian assets from the world's biggest sovereign wealth fund. Good morning. Happy Wednesday. The tail risk has now become the base case, with Russia amplifying, intensifying its invasion of Ukraine and the West moving to isolate Russia. The fear, the risk is now that this is a market whose plumbing is about to freeze and the market turmoil seizing up. The ruble exemplifies the danger that we've seen this morning. At one point overnight, you had banks quoting as much as a 50% discount on the ruble. It is down some 30% this morning. It continues to trade at significant levels versus the dollar. And over at Credit Suisse, Zoltan Pozsar really says what the risk is that central banks need to stand at the ready with daily swap lines. He writes that exclusions from SWIFT will lead to missed payments in giant overdrafts, similar to the missed payments in giant overdrafts that we saw in March 2020. Banks' inability to make payments due to their exclusion from SWIFT is the same as Lehman's inability to make payments due to its clearing bank's unwillingness to send payments on its behalf. In other words, this is March 2020. This is Lehman's all over again. Let's give you a quick check on these markets because it is turmoil again. The fear of freezing due to SWIFT, that the financial plumbing isn't going to work, that the funding stress will be present. I already showed you the ruble, but here's wheat prices also jumping more than 5%. Brent crude, it is above $100, 102. Euro stocks 50, down 3.5%. The euro also plunging this morning, not on the board there currently, but the euro down more than 1%, its biggest fall since March 2020. Flip the boards, let's look at your U.S. assets, your U.S. stocks falling as well. A little more insulation, but it is that bid to bonds. It is the safe haven play. The front end of the curve getting the most bids. Those are down about 8 basis points. 10-year yields, those are down 6 basis points. And the dollar spot, that Bloomberg dollar spot, that is playing that haven trade through. That is up 0.6%. Now, to the top story, the story today. The weekend saw more escalation in the war in Ukraine. Let's get the latest from our reporters across Europe. Chad Thomas is in Berlin with a view from Germany. Maria Tadeo in Geneva for international reaction to the latest events. And Paul Wallace in Dubai for the corporate fallout. But first, we'll begin with our reporter in Russia. So the U.S. has significantly ratcheted up the sanctions against Russia over the weekend. What sort of impact are we seeing from Russia on the ground at this moment? All right, looks like we might have
people have been.
Yes, go ahead. Go ahead. Sorry, audio breaking up there again.
Yeah,
but yes, tell us the impact on the ground.
Yes, hello again. It's a sense of panic. Ordinary Russians have been rushing to try and withdraw money from ATM machines. As you mentioned, today the ruble is expected to collapse even more, 30% as we stand today, but the market opens in about an hour, and it could be even worse. The biggest measure that was taken was the decision to freeze the euro and dollar reserves of the Russian central bank. And this is, if you look, in some way you could describe it as Putin's war chest, the money that has been built up over years exactly to withstand a situation like this. So clearly Russia at the moment, the markets are going to be in free fall today.
On the ground in Ukraine, can you also describe what the current situation is? It's clearly fast moving, but what do we know so far?
Well, as you mentioned, there are talks which are due to take place between Ukrainian and Russian officials on the border with Belarus. But at the same time, the military campaign, the Russian invasion is ongoing. The bombardment taking place in the capital, Kiev. The second city of Kharkiv, there is fierce fighting taking place over the control of that city. So, there's no let-up in the fighting at the moment.
All right, thank you very much. That's our reporter there in Russia. Now let's move over to Chad Thomas. Chad, in Germany, we saw them significantly boost their defense spending. I mean, this feels like quite a significant about-face from the German government and how it approaches defense spending.
Yeah, Danny, this is a real sea change here in Germany. German Chancellor Olaf Scholz yesterday, in a special session of the Lower House of Parliament, the Bundestag, announcing that Germany will create a 100 billion euro fund to modernize the military. That fund will be spent this year already. They also said they're going to boost defense spending over the coming years. They will boost it to more than 2% of GDP in the coming years. Of course, that is something that as a NATO member that they actually have been required to do, but they haven't been meeting those spending targets. They've been at about 1.5% of GDP in recent years. So this is really a big sea change here in Germany. Germany is saying that they need to take action now to modernize their military in the wake of this invasion of Ukraine.
Chad, what other measures is Germany planning to help Ukraine?
Yeah, the other really interesting announcement from Germany over the weekend is that Germany said that they will send military equipment to Ukraine, both via third countries, and they will also be sending some equipment there directly themselves. This is also a real big shift in German policy. Germany has historically not sent military equipment into a conflict zone. This is because, of course, Germany's history in the 20th century being the aggressor in 2 world wars. And the German foreign minister, though, said yesterday that it was time for Germany to step up and that no one could be neutral in this conflict.
All right, Chad, thank you very much for the update. And I should say over the weekend, the EU and its allies also upped sanctions on Russia. Take a listen.
Important Russian banks will be excluded from the SWIFT system. We will also ban the transactions of Russia's central bank and freeze all its assets to prevent it from financing Putin's war.
There's a range of escalatory steps we have as options.
President Putin's decision to pursue his aggression against Ukraine is a terrible strategic mistake, for which Russia would pay a severe price for years to come.
For more, let's get to Bloomberg's Maria Tadeo in Geneva. Maria, walk us through what the EU's announced exactly.
Well, Danny, where to start? Because this is really a mega package that the European Union agreed and put together in 48 hours. And it really tackles everything from the military. We know they're going to provide a facility for 150 million euros for lethal weapons, another 50 million euros for fuel. That's on top of the measures that have been announced by individual countries. We also know there's a heavy economic part of this package where, of course, we talked about cutting off Russia from the SWIFT. We know it's going to be a certain number of banks. We don't know specifically the number that is going to be included, but of course the stellar measure here is the central bank. Yesterday, the top European diplomat, Danny, said 50% of Russia's central banks are going to be frozen. They're going to be restricted. They're in G7 jurisdictions, and that is now going to be sanctioned. The other big part of this, of course, has to do with misinformation. We know that Russia today is going to be taken off the air in the European Union. They're shutting down their airspace. That includes also, by the way, flights that are owned but also registered by Russians. And the goal here is that oligarchs are not going to be able to fly around the continent just like that. And then there's humanitarian aid. We know we're expecting an influx of refugees trying to flee Ukraine. It's been already 5 days of heavy fighting in the country. And Danny, the question is, how come this came about so quickly? 48 hours for the European Union, very slow usually in decision making. I had a European official that told me two things. One is Zelensky, the strength of this man putting up a fight. And the second one is that the Europeans have seen that the Ukrainian army can put up a fight. So one official told me at this point they've made a decision to resist and we have to help them.
There's been certainly a lot of commentary that Putin as well was surprised by the swift and united action of Europe. Maria, the UN Human Rights Council also begins in Geneva today, the meeting there under the cloud of this invasion. What are we expecting?
Well, look, Danny, for starters, we're going to see, or we're expecting, at least for the time being on paper, that Sergei Lavrov, the Russian foreign minister, is going to be here and is going to participate in that assembly. Now, this is the first time that we're going to see Russia on the international sphere. Until now, remember, it has been just very short videos that are very carefully choreographed by the Kremlin. We've seen Vladimir Putin, but only for a very short amount of time. And this is the first reaction from the Russians on the international sphere. Remember also the pressure on international political figures from Russia, but also some of its main international names. We've seen the businessmen and the oligarchs also affected from this. Now, the question is, what do they do from this point? Do they continue to support Vladimir Putin openly, and do they continue to say this invasion was justified and was guaranteed? The other thing I would point to, of course, which does show perhaps how Russia has been pushed to a corner, is Vladimir Putin saying yesterday, I do not like the unfriendly economic measures that the West is taking, and I view a lot of the language, especially coming out of NATO, as very aggressive towards Russia. So that may mean that I have to call in the nuclear deterrence to protect our country. That, of course, took a lot of people by surprise yesterday. A European official told me that making a threat like that is just crazy.
Maria, thank you so much. Great update as always. Now let's get over to our Paul Wallace in Dubai, who's tracking the corporate impact. Paul, yesterday we learned that BP is going to exit its Rosneft stake, about its 20% stake. First off, how much of a discount in this stake could they be taking, and who can they even sell to at this point?
Hi, Danny. Those are very big questions. We think, based on what they've said and what they've told us, that they could be taking a hit of as much as $25 billion, which includes a write-down on the value of that stake in Rosneft, and also some accounting hits that would be required, and which they say will be revealed when their first quarter results come out in May. This was a surprise. As of last week, it very much was not expected that that BP would do this. It's one of the biggest single investments in Russia from companies anywhere, and it goes to show just how far Western powers how far they'll go to try and punish Vladimir Putin's government for the invasion of Ukraine last week. On the question of who would buy it, that is an extremely tough one to answer. On the face of it, there's no one obvious out there. I think it's fair to say that Russian assets right now will be seen as toxic by just about anyone, especially in the West. But even beyond that, it's difficult to see anyone buying the stake.
Well, to that point, Paul, we were just showing a graphic of the other Western companies that have exposure to Russia. We know Equinor also announced that they'd be exiting some JVs with Russia. But is this just what we should expect, all these Western energy companies en masse trying to unload their Russia assets?
It's certainly something that we could see over the course of this week and beyond. We could see other Western companies following BP's lead. If you look in the oil sector, you've got Chevron, you've got Exxon, you've got Shell. They've all got pretty significant investments in Russia. None of them as significant as this 20% stake of BP's in Rosneft, and nowhere near as big. But nonetheless, it's got to be the case that they will be looking at how to deal with these assets. And maybe now they've seen what BP has done, they'll go the same route and effectively just write off those assets.
Paul, thank you very much. That's Paul Wallace there in Dubai. And also thanks to our reporters in Moscow, Geneva, and Berlin. Now, coming up, we're going to continue to bring you live coverage of all the latest surrounding the war in Ukraine. We're also going to dig into the market reaction with Martin Lone from Alpha Book next. This is Bloomberg.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
How difficult was it to go to investors and say, invest, give money, put money into a travel tech company within this environment?
It wasn't that difficult because TravelPerk is doing much, much better than the rest of the industry. In fact, we are at the moment growing at 4 times revenue of pre-COVID numbers.
In crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
Euro now testing the lows that you saw on Thursday. So to me, that indicates that the market is going to be quite risk off as we open to try to understand particularly these intricacies about the payment system.
But these are extreme measures for Russia to react, let's face it. These are not permanent measures, I believe, and that's what these sanctions are trying to achieve.
It's a flight to safety, flight to quality sort of dynamic. And in that regard, we are running an overweight on the US dollar.
Guests there on the U.S. and EU agreeing to cut off some Russian banks from the global SWIFT system of payments. Joining us now is Martin Malone, Chief Economic Advisor at Alpha Book. Martin, great to have you on the program this morning. Already seeing a dramatic reaction in markets, ruble falling by some 20%, European stocks 3%, euro down nearly 1%. As you look at the market this morning, I just want to get your first observations on this first few hours of trading. How are markets functioning? What signs of stress are you seeing?
I guess we're currently in a sort of a financial crisis situation. The European Union made significant changes over the weekend, as did Germany, and they've basically thrown out the rule book. The European Union used 3 words: unprecedented, historic, and a defining moment. And that's why any sort of views about what markets will do we have to be very, very careful. But flight to quality is the bottom line here, and that means that liquidity and where U.S. Treasuries can trade is going to be the most critical issue for all investors this week.
Martin, Zoltan Pozsar over at Credit Suisse called this a Lehman's moment, called it a liquidity crisis like March 2020. Things are moving so quickly that you do have this fear and panic that markets will break, especially with money markets. Do you see any signs of that?
Yes, I think I would agree with him, and I think he's spot on. And for instance, the sanctions that have been announced go to issues that we've never seen before. So, for instance, banning a global central bank, particularly a G20 central bank like the Central Bank of Russia, from accessing its $640 billion worth of foreign exchange reserves. All of the G7 countries have banned the Central Bank of Russia from liquidating assets that they have in their country. So this basically will have very, very much unattended consequences, and that will deliver more flight to quality issues. So the 1.5% two-year yield we have today, we could easily see levels like 1.2 or 1% before the week is out.
Yeah, and right now we're looking at a chart of funding stress in the U.S. dollar, FRA, OIS swaps, rising that gap there, widening pretty significantly, Martin. So, Martin, let me get this straight. You're looking at a huge flight to bonds. Previously, going into this year, the playbook had been a tightening of central banks from Europe to the U.S. You have your thesis going into this year, before this crisis, before this war in Ukraine. Have you just completely ripped up the book, Martin?
Well, in a quick answer, the word is yes, simply because of the shifts that the G7 countries, the EU, have taken. And we have to be cognizant, when you've got a no-fly zone in Europe, when you have a complete freezing of all Russia's financial assets and private sector assets, these are sort of 1998 style, 2008 style, or the pandemic March 2020 style factors. So it's sort of a crisis management 101 book has to be taken out this week.
All right, Martin, we're going to ask you to dive more into that Crisis Management 101 book and how this plays out in just a moment. That's Martin Malone, Chief Economic Advisor at Alpha Book, who's sticking around with us. Let's get a quick snapshot of these markets that are in turmoil. You're looking at a ruble that's plunging 20%. This comes after last week's turmoil. Yes, there was a bounce on Friday, but increased and tougher sanctions coming out of Europe, including that SWIFT payments icing out of many Russian banks, causing a fall there. The euro also dropping 0.9%. It is off the lows of the morning. If we can go ahead and jump into what the markets are doing. So euro down 0.9%. The commodity space also is moving pretty significantly. You're looking at wheat prices, those jumping 5%. Brent crude up back above $100 a barrel. Yes, there aren't the sanctions on oil, but does a blocking of payments effectively freeze the commodity sector coming out of Russia as well? Also looking at the pain in stocks, European stocks taking the brunt of the beating. We don't expect Russian equities to open for some time, for a few hours this morning. I did try to look at the MOEX website this morning. It is frozen, which is not the best indicator for how markets will function in Russia, but we do expect their FX markets to open around 10 a.m. local time. S&P futures tumbling 2%. You're looking at tech underperforming, falling 2.2%. And it is a flight into bonds, into safety, the perceived safety. Two-year yields up by nearly 10 basis points, and your dollar stronger by 0.6%. Coming up, we're going to stick with this topic, stick with the fallout, both in terms of Ukraine and markets. This is Bloomberg.
What do you think is the impact of the Prime Minister on the market?
As Mr. Suzuki, who is the Financial Services Minister, he mentioned at his own press conference, and share buybacks is widely used to return profits to shareholders and improve ROE. And how to share out the profits from growth is totally the decision of the management of each company after carefully taking all the stakeholders into consideration. And I believe Mr. Kishida has a quite cautious stance on the uniform regulation of share buybacks. And I think because he is giving a consideration to each company's individual circumstance and decisions.
Welcome back to Bloomberg Daybreak Europe. I'm Danny Berger in London. Markets continue to sell off. The ruble continues to crash as we monitor the fallout from an invasion in Ukraine that's ramping up. Breaking lines on the UK. The UK intention to take further restrictions that have restrictive economic measures. They're going to target the Central Bank of Russia. They're going to prohibit any UK person to deal with the Russian Central Bank. They say they're taking these measures on Russia in concert with the US and EU. So again, targeting the Central Bank of Russia, there's a question to how much of the reserves, about $600 billion worth of reserves in the Russian Central Bank, they can actually use at this point. They're also, again, prohibiting any citizen from transacting with the Russian Central Bank. Let's get back to our guest for this half hour. It's Martin Malone of Alpha Book. Martin, as much as an economist, as an observer of this market, you're also very much so a historian of this market as well. Is there any historical corollary that you look back to in this moment to help give you guidance of how to function, how to act as the situation unfolds?
I think most people will recognize, first of all, the financial crisis, so the Lehman moment in 2008. And similarly, the Asian, Russian and LTCM crisis in 1998. And maybe the latter, the 1998 crisis, is the best to use today. And that is a sort of a financial implosion of a large country like Russia. It's basically been imposed on them by G7, EU, UK, US actions that were basically announced over the weekend. And that basically changes the entire rule book of how we're going to trade these markets, and that is very much we're in crisis management mode from first thing this morning.
I mean, how do you manage it if you have Russian exposure? For example, if you're an investor and you have Russian bond holdings right now, how do you even get rid of that?
Well, unfortunately, you will be able to. And to transact those positions, it clearly will depend on which investor type you are. But we've already seen, for instance, from Norges Bank Investment Management, they will park their sizable Russian holdings in a special unit, and those bond or equity positions will be worked off over a period of time. And that could be this week, or it could actually take months.
Martin, I want to go back to these breaking heads of the UK prohibiting any UK person from dealing with the central bank, also saying that they're targeting the Central Bank of Russia. When you look at the distribution of what they hold, about 5% of their assets related to the UK, does this push the Bank of Russia closer to China? About 30 seconds here, Martin.
Yes, in a quick word, China, Japan and other countries have seen significant investments by the Russian Central Bank away from the G7 countries over the last 10 years since Crimea. They may or may not be able to liquidate those, but the UK decision this morning is just joining what the ECB and the Fed decisions made over the weekend.
Right. Yeah. Again, there is that question of how much of the currency reserves can the Central Bank of Russia actually access. Martin, thanks so much for joining this morning. That's Martin Malone, Chief Economic Advisor at Alpha Book. Now, coming up, we're going to be speaking to Stanislav Mitrikovic, a leading expert at Russia's Natural Energy Security Fund. That's next. This is Bloomberg.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
The capital markets can really help the shift to sustainable and decarbonized global economy. What are you noticing in that as ESG is now the buzzword literally everywhere?
It is definitely the topic of conversation in most meetings I have with company CEOs, with investors, with industry groups. It's amazing.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
This is Bloomberg Daybreak Europe. I'm Danny Berger, and these are the stories that set your agenda.
I'll say frankly, like always, I don't believe that much in the result of this meeting. But let them try so that not a single citizen of Ukraine has any doubt left that I, as president, used every chance to stop the war, even a small one.
The ruble plunges as Ukrainian and Russian officials prepare to meet at the Belarus border after President Putin put his nuclear forces on high alert. Stock slump in oil surges the most since 2020 as Western nations target SWIFT and Bank of Russia assets with new sanctions. Metals and wheat jump. Plus, BP moves to dump its share in oil giant Rosneft, while Norway starts to remove Russian assets from the world's biggest sovereign wealth fund. Well, it is concerns of a market that has gone into turmoil. Is funding stress not just going to play through when it comes to Russia, but with targets of SWIFT and the Russian central bank? Does this end up in a seizing of the entire plumbing of this market? We're already seeing funding stress show up in the front end of the funding market in the U.S. This is the ruble. You are looking at a jump of 34% from that level just 3 business days ago. This morning, it is a drop of 20%. Again, I say jump. Obviously, it's the dollar jumping versus the ruble, which is in free fall this morning. Let's get straight to the markets. So the ruble down about 22%, but it is a euro where also stress is playing through. Right when markets opened this morning, the euro was down about 1%, currently down about 0.9%. So off of the lows, but still on track for its biggest loss since March 2020. Martin Malone, our last guest, saying that March 2020, a Lehman's moment, he is seeing echoes of that today. Again, the concern is all about free freezing of assets as that frees the entire financial system. Wheat futures also higher. Ukraine is the breadbasket of Europe. That's higher by 5.6%. Brent crude still easily above $100. Let's flip up the board because stock market stress playing through as well. European stocks down 3.4%. Russian equities not set to open for a few hours. We'll keep you updated on that. S&P 500 futures also feeling the pain. How much contagion is that? Also big to the front end of the curve. Malone also pointing out that he thinks that the Fed might rip up the playbook and not even hike this year. Also, dollar acting as your haven, up more than 0.5%. Well, let's get more on the international reaction to the war in Ukraine. And Bloomberg's Maria Tadeo is in Geneva through us. Maria, walk us through what we've learned from the EU, what's been announced thus far.
Well, Danny, this is a huge package that's been agreed by the European Union in 48 hours alongside the United Kingdom and the United States. The European package, the side of this European agreement to combat and help Ukraine defend itself, includes a huge military facilitation capability. Would include 150 million euros for lethal weapons, 50 million euros to buy fuel for Ukraine. But then, of course, the focus this morning, and we've been doing this for 30 minutes now on the show, is the financial aspect of it and the economic sanctions that will come from this package. Of course, we know that a number of Russian banks will be cut off from the SWIFT. There was huge pressure for the Europeans to agree to this. They have now done it. We're waiting for a final list of institutions that will be hit by this. And then, of course, we have the measures taken at the Russian Central Bank or against the Russian Central Bank. Yesterday, the top European diplomat, Josep Borrell, said that 50% of Russia's central bank assets will be frozen. The reason for this, of course, is that operations are now restricted under this package, and 50% of Russia's reserves are in G7 jurisdictions. So they argue this will be a huge move. And of course, we're waiting to see the real-time market reaction this morning.
And of course, we've just learned this morning that the UK is joining in as well with targeting the Russian Central Bank. Maria, you're in Geneva right now. The UN Human Rights Council is set to meet, a beginning that's set to start today, but it's meeting under this cloud of invasion. What are we expecting to happen?
Yeah, Danny, absolutely. And you've seen the response from the international community that they're horrified at the brutality of this attack from Russia into Ukraine. Remember, on Monday and Tuesday, especially, when Vladimir Putin came out and gave a message, he said this is just going to be a peacekeeping operation in eastern Ukraine in the Donbas region. Now we're seeing that Russia is attacking Ukraine from essentially every front, as the east, the south, and then, of course, operations happening from Belarus. Now, today, of course, there will be also focus on the Russian delegation for the time being, and on paper, Sergei Lavrov is due to be here, and we're keeping a very close eye on the international response from Russia. Yesterday, we heard from Vladimir Putin saying that he did not like the unfriendly economic measures, and he did not like some of the threatening language coming out of NATO countries against Russia. Remember, he said in response to this, I will now call on the nuclear deterrence and explore perhaps future options. Now, it doesn't mean he's going to do it, and we have to be extremely careful when we talk about nuclear weapons. Yesterday, an official told me that this looked a lot like bluff, but at this point, it's very hard to read what Vladimir Putin is intending on you. And again, one told me it's very dangerous to push Russia into the corner. At one point, there's got to be talks between everyone here to try to de-escalate the situation. That is exactly what we're expecting, by the way, between Ukraine and Russia. The Ukrainians are saying these talks are happening without any preconditions from either side.
Maria, thank you so much, as always, for keeping us updated. That's Bloomberg's Maria Tadeo in Geneva. Now, it's not just governments taking action. Companies are also getting involved, and BP is moving to dump its shares in Russian oil giant Rosneft. And Norway is removing Russian assets from its $1.3 trillion sovereign wealth fund. Joining us now is Bloomberg's energy and commodities editor Andrew Janes in Singapore. Andrew, this 20% stake of Rosneft from BP, put into context for us how significant it is for BP to unload this.
Well, very significant, Danny. Yeah, it's a 20% stake in Rosneft. They haven't sort of said if they're going to sell or going to walk away, but they have said that it's possible they're going to take a $25 billion write-down. So that's obviously pretty massive. And it'll come as a pretty big shock to investors in BP, particularly given BP was just a few weeks ago staunchly defending its presence in Russia. it was actually one of the first oil majors into Russia after the collapse of the Soviet Union, and it has the biggest presence there. But it seems to have come under a lot of political pressure from the UK government. The CEO, Bernard Looney, was summoned to a meeting with the UK Business Secretary late last week. Its shares are up about 15% this year, but there's obviously going to be a big drop when it opens later this morning.
Well, BP's exposure is obviously huge here, but of course, other Western energy companies also have exposure, from Equinor, which has said that it's pulling out of its Russian JVs, to Exxon. Are we expecting other energy companies to follow suit? Is this inevitable that everybody is going to be trying to remove their exposure from Russia in the oil space?
Yeah, so we've seen Equinor, as you mentioned already, announcing it's exiting its JVs. In terms of the other oil majors, it's hard to answer that with any certainty. But, I mean, after BP, Total Energies probably has the most presence in Russia. Russian business accounts for around 5% of its cash flows. Shell has a holding in an LNG project with Gazprom. Chevron and Exxon have a presence in lubricants. Actually, a bank used by Exxon in Russia to pay its staff was one of the ones that was sanctioned. So, yeah, it's hard to say with any certainty. Will obviously depend on what kind of pressure these companies come under from their respective governments, Danny.
All right, Andrew, thank you very much. That's Bloomberg's energy and commodities editor, Andrew Janes, in Singapore. Now joining us is Stanislav Mitrikovic, a leading expert at Russia's Natural Energy Security Fund and international relations researcher in Russia's Financial University. Stanislav, thanks so much for joining us this morning. It is a quickly evolving situation, but in your role there, you also study the influence of political factors on energy industry. You have many clients also in the energy space. As we look at these oil majors looking and contemplating offloading Russian assets, what is the dilemma and issue that they are currently facing? Take us through the thinking of one of these companies at the moment.
Hello, thank you for having me today. You definitely mentioned some of the companies of the Western countries that do work in Russia and that are in a very hard position now. Well, I can name other companies. For example, Air Products from America, which is behind the technology required for the most important Russian LNG project that's called Yamal LNG. Also Halliburton and Schlumberger that are responsible for oil and gas services in Russia, and more and more and more. And of course, it will be very hard for them to sell now their assets just because maybe there will be no time or there will be no technical possibility to do it just because of the restrictions from the Russian side. Or maybe they can do it, but with a huge discount. So losses will be great. Well, once again, everyone knows that sanctions are a double-sword weapon. It punishes both sides.
Yeah, speaking of both sides, we learned this morning Russia banning foreigners from selling securities. Of course, that's partially aimed at averting a fire sale. But Stanislav, I mean, who can even buy at this point? Who could some of these Western companies sell to realistically?
Well, as I told you, I think it will be a very hard problem. Maybe there will be no technical possibility at all to sell this asset. If there are possibilities, maybe Russian companies they themselves can buy it with a discount. Theoretically, maybe Chinese or Indian companies, not right now, maybe in some time. As for now, well, you know that Russian assets, assets of Russian central bank are frozen in the Western world. It means that theoretically there could be a counteraction from the Russian side, just freezing these assets in Russia. For example, just these assets just could be nationalized, for example. It's also one of the options that is on the table if there are no other talks to de-escalate the situation. I personally hope there will be inevitable de-escalation maybe sometime in coming weeks, I don't know, months or years, but there will be possibilities to de-escalate this. But as for now, I'm not thinking that this selling will be just easy possible.
Right. Yeah, we're certainly all hoping for de-escalation. I do wonder, as we look at a freezing of payments in SWIFT, of course, sanctions haven't directly, completely at least targeted the Russian oil and gas sector. But if we do have a freezing of payments via SWIFT, does this indirectly stop the flow of Russian oil and gas? Is that a present threat at this moment, Stanislav?
Well, I think the most important threat, both to Russia and for world economy, is a trade embargo. Trade embargo is a little bit different from the sanctions that were already imposed. Because all these indirect sanctions that influence banks and traders that do help oil and gas companies, they are not the most important things. If there are ways how economy and oil traders and gas traders can adapt to the situation. If there is a trade embargo, in this case, the adaptation will be much more difficult. Let's just look at Iran. Iran continued to sell the oil even through the period of sanctions. But it is much harder to do it when Iran was on a situation with a trade embargo. And when trade embargo was just a little bit moved away, I mean, in the year 2016, when Obama's administration lifted partially sanctions, of course, the Iranian economy and Iranian oil export was in a better shape.
Well, frequently when people talk of Fortress Russia, one of the things that they discuss is a Russia that starts to move towards China, and China enabling them really to continue trade to help them prop up their FX reserves through a yuan. Can you walk us through what that scenario looks like of Russia really tapping help from the East in order to stay functioning, to have a functioning financial plumbing?
Well, I would call it a pivot east Russian version. You know that Obama's administration first used this term, and then it was somehow copied in a Russian way by Russian authorities. Pivot east, both strategically, economically, politically, I don't know, culturally, and so on and so forth. For example, when you cite Western officials that are saying about Russian central bank, they are basically saying about information that is several months late, so to say. Maybe after a few months, these reserves have changed in favor of yuan. That could be the case that was happening in previous months. As for trading with yuan and using yuan, some of Russian companies, for example, Gazprom Neft, they started selling oil to China using yuan several years ago. So they have been preparing for this scenario just a little bit. Still, there is a shocking situation, but they try to prepare it to some extent. As for payment systems, you know that China is developing their own analog of SWIFT. It's called Chinese cross-border interbank payment system. There could be as kind of a joining of the system with Russian system of financial transactions. So still there will be possibilities to sell oil and gas to China, even if there is trade embargo from the Western countries. And still there are many discussions to what extent Western countries will be united to keep this embargo, theoretical embargo, for a prolonged period of time. Because in economical pain, of course, in Russia, but at the same time in the Western countries. So maybe the situation could change in several months or years at least.
Stanislav, really great to get your thoughts this morning. Thanks for joining us. That was Stanislav Mitrikovic, a leading expert at Russia's National Energy Security Fund. Now, one of the biggest steps taken over the weekend was the move by Western countries to cut off some Russia banks from the international SWIFT payment system, what we've been discussing this morning. It is used for trillions of dollars worth of transactions around the world. For more details on this, we're joined by Nicholas Comfort, our European finance reporter. Nick, everything has been very fast moving. So first, I think it'd be very helpful if you just break down for us what exactly the moves have been in terms of these SWIFT restrictions.
So good morning. So first of all, let's think SWIFT as the Gmail for banks. So, I mean, it's not a payment system in the sense that there's money that moves via SWIFT, but banks use SWIFT to communicate with one another and to confirm payments in different currencies. So when we say that the banks which were already sanctioned last week have now been booted off, we're saying really that they can't make payments via this, communicate via this system, and from then on, it really means that they can try and find alternatives to make these payments. But let's face it, I mean, if you are a company trying to make payments at the moment, your banks are probably pretty overwhelmed. And so even if there are alternative ways to make payments than the SWIFT messaging system, it's going to be very hard, just operationally, to get money to move from Europe to Russia or the other way around.
Nick, when we look at some of the cutoff from SWIFT from Russia banks, is there a possibility that we see more self-imposed sanctions from banks? So it really goes beyond sort of the face value freezing out of some institutions from, as you say, the Gmail of international payments.
Yes, that's a really good point. I mean, So the last time that the U.S. imposed a round of fines on banks for sanctions busting, it was very, very expensive and going to the billions of dollars. And banks are still stinging from that. They remember what it was like. And this time around, they may say to themselves, you know what, the Russian business really isn't worth the hassle to expose ourselves to this risk. And then you could end up sort of over-egging it in terms of this, cutting Russia off and not doing business with a series of clients because of exposure to Russia.
Okay, Nick, thank you so much. That's Nicholas Comfort, our European finance reporter. I want to bring us some breaking lines on the Russian central bank. Bank of Russia is raising its key rate to 20%. A huge raise. It had been at 9.5%. Bank of Russia saying that the external conditions have drastically changed, clearly tilting their hat at what's happening. And the Russian Bank of Russian governor, is set to speak at 4 p.m. Moscow time. So again, raising the key rate to 20%, saying that this rate hike is necessary to make bank deposits attractive. So a 20% hike. Let's get to Scott Johnson from Bloomberg Economics. Scott, lines coming fast and thick, really a quickly moving situation. But I do want to get your initial thought on this. Bank of Russia, again, their key rate is moving to 20%, had been at 9.5%. They're saying that this is necessary to make deposits attractive. What's your initial thought on that?
It's an extraordinary move.
Yeah.
I think it shows you just the significance of this event. That's a bigger hike than we saw in December 2014, which is one of the more recent analogs we can look back to. It's really an extraordinary action by the central bank.
Well, also, there's this question of reserves at the central bank. What's accessible for them? What's not accessible for them after this weekend? What's the current read on that?
I think those are still unknowns and very important unknowns. We also don't know what kind of workarounds they have, potentially to work with other countries to establish swap lines. I think the broader question is not just whether the central bank could run out of reserves in a situation like that. It's what's the confidence in the broader financial sector. I think that could be a bigger issue for them at this point. And as we see this 20%, this hike to 20% is obviously an attempt to restore confidence.
Right. So you mentioned some of the levers that they have, this hike to 20% being one of them. What are those? Is it mainly just looking to other countries to help with their FX reserves?
Well, there's been a huge demand for cash. Obviously, we saw queues at ATMs over the weekend. The ruble is plunging in offshore markets. So I think, when we look at their options at this point, some form of capital controls. We've already seen restrictions on foreigners selling Russian assets. So we could see more of that. So it doesn't necessarily mean this continues as a run on the banks, because there could be capital controls that would step in.
When you look at contagion risks, how are those likely to evolve? If you can look into your crystal ball, what are the wider implications from Russia emanating to the larger global economy?
I think at this point, the main channels for disruption of the global economy would be energy prices and then a global risk-off scenario. We were last week, even ahead of these latest sanctions, we were looking at 3 scenarios, and one would be something a little bit like what markets have priced in last week, where you see, I think there were expectations of a relatively brief crisis that could see energy prices stabilize. But with these additional actions, I think we're looking more at our second scenario, which is more severe disruption. There's potential for disruption to the energy market. I think we've already seen some signs of uncertainty over supply, but to a limited degree. And I think in that scenario, we're looking at more inflationary pressure in Europe and the U.S. That doesn't necessarily mean that the economy is running off track, but it certainly raises the risk of a downturn in Europe. For the U.S., it's a little bit more removed, and so I think we're looking at still in that second scenario, we might still see a Fed rate hike in March. The more extreme scenario is more disruption to energy markets.
It is really a complicated proposition because so many of your inputs need to change. You have perhaps a move to change the energy sector as a whole, remove their reliance. You have Germany and all of Europe potentially spending more on defense. How have those factors changed the longer-term economic outlook for you and the team when it comes to Europe?
Well, I think these are really longer-term questions, and I think that's going to be a little bit more slow moving. At the moment, events are moving very, very fast as we try to get a hold on what's happening.
Scott, thank you so much. Really great to get your immediate reactions on these. That's Scott Johnson, our Russia economist from Bloomberg Economist. Let me bring you again some of these lines. Interfax also reporting that Russian companies will have to sell 80% of their FX reserves. Again, this is coming from Interfax. We also have heard again that the Bank of Russia has raised their key rate to 20%. We're just talking with Scott Johnson, our economist, talking about how drastic of a move this is. They're raising the key rate in hopes that this will increase the attractiveness of deposits. We're also expecting the Bank of Russia governor to speak at 4 p.m. Moscow time. Again, these are controls that the Bank of Russia is hoping to put in place to try to stem any of the contagion, any of the financial distress, as we've seen a run to cash in Russia. So again, a hike of the key rate to 20% from 9.2%. And also there are now concerns about Russian companies selling their FX reserves, again, in an attempt to shore up the reserves at the central bank. Now, a quick look at what we're seeing in these markets. The Russian ruble falling this morning, plunging 20%. It is off of the lows that we've seen this morning, falling as much as 25% this morning. So that means your ruble is now trading at 105, just under there versus the dollar. A euro dollar also under stress today. There's a lot of questions about what this means for the European economy. It could mean more pain for the European economy, especially as gas prices rise. So I do also want to point out Russia introducing mandatory FX revenue sales for companies. Again, this is based off the Interfax line that I was just mentioning. So again, the impact to the ruble, we're looking at the ruble continuing to weaken this morning, down 20%. A yuan that's little changed. There are questions as to whether the yuan becomes one of the currencies of choice to help shore up reserves. So we are seeing 0.1% of a rise of the yuan versus the dollar this morning, and Brent crude continuing to move higher. That is $103 so far this morning. So again, let me reiterate some of these breaking lines that we've been seeing, that Russia introducing mandatory FX revenue sales for companies. This is off the back of that Interfax line, that they'll have to sell 80% of FX revenues. The central bank trying to store up its reserves. Here's your look at the stock market. Stocks continue to fall drastically, especially in Europe. We don't have Russian stocks yet, but European stocks futures down 3.3%. S&P 500 futures down 2%. It is a move into bonds. That bond buying easing up, but still yields lower by 9 basis points. Now let's get to the Bloomberg First Word News, and Juliet Sally joins us in Singapore. Juliet Sally is not here in Singapore. I will go ahead and take you through the first word lines, and we are looking at Ukrainian officials who have agreed to meet with their Russian counterparts at the border of Belarus. This is hours after President Vladimir Putin put his country's nuclear forces on higher alert. In other recent developments, Belarus is reported to be preparing to send troops into Ukraine to help its ally Moscow. And the EU has agreed to send 450 million euros of military aid to Ukraine for lethal weapons. Foreign Policy Chief Joseph Borrell says the package may include supply fighter jets to the Ukrainian Air Force. It's the first time the European Union has ever supplied arms to a country at war. Member states say that don't want to contribute lethal weapons will be able to abstain or make a parallel contribution of non-lethal aid. Chancellor Olaf Scholz has announced plans for a massive boost in German defense spending. The historic policy shift triggered by Russia's invasion of Ukraine will see Germany channel 100 billion euros this year into a fund to modernize the military. Scholz has also committed to spending at least 2% of GDP each year on defense by 2024. That's in line with a NATO target that has Berlin consistently failed to meet. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. Now, let's get to your check on markets this morning. And I should say the Istanbul Borsa, the first to open, declining 1.8% at the open. That's on the top left of the screen there. So it is this contagion concern of the economy, the wider spillover that we're monitoring. But of course, it's not just the contagion to the economy, it's the financial system with much of Russian assets frozen. What does this mean to oil, to gas? How much further does it move? At least a 3 standard deviation move in Brent crude and WTI, easily trading over $100 a barrel. Markets continue to act in turmoil. We'll keep on top of it. This is Bloomberg.
We know that it's highly transmissible. We know that 2 doses of vaccines, Pfizer vaccine specifically, neutralize the virus, but not as efficiently, because various studies showing that reduction up to 40-fold, meaning that a 3rd dose is a must for it to successfully neutralize the variant. What we don't know is still that what are the effects of mix and matching between vaccines, and what are the capabilities of antibodies produced from this mix and matching in neutralizing Omicron. Because as we know, many parts of the world use different types of vaccines. And that would be a great data to look at. It will be also great to look at, because majority of the studies done uses a small sample number, and most of the time when you translate it to real world, the data changes. So it will be really good to look at large-scale data of the ability of antibodies from vaccines to neutralize this variant. Grateful here today that the virus, Omicron variant, still uses ACE2 receptor as its main entry. It means that all of the vaccines which are designed with spike in mind still works. Imagine if it uses a different receptor other than ACE2. None of the vaccines would work today. So I think that is the best news that we got from all these studies which came recently, the past couple of days.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Good morning. Welcome to Bloomberg Markets Europe. I'm Anna Edwards, live in London. Mark Cudmore, our Markets Live managing editor, joins us from Singapore to take us through all of the market action this hour. The cash trade is just less than an hour away. Here are your top headlines.
I'll say, frankly, like always, I don't believe that much in the result of this meeting. But let them try so that not a single citizen of Ukraine has any doubt left that I, as president, used every chance to stop the war, even a small one.
The ruble plunges as Ukrainian and Russian officials prepare to meet at the Belarus border, hours after President Putin put his nuclear forces on higher alert. The Russian central bank more than doubles its key interest rate just in the last 15 minutes. Stock futures slump and oil surges the most since 2020 as Western nations target SWIFT and Bank of Russia assets with new sanctions. Metals and wheat also jump. Plus, BP moves to dump its shares in oil giant Rosneft, while Norway starts to remove Russian assets from the world's biggest sovereign wealth fund. Good morning, everybody. Welcome to Bloomberg Markets Europe. It's just gone 7 o'clock here in London. Mark is with us from Singapore. Mark, good morning. A very busy weekend. What are the markets saying to you?
Good morning, Anna. Well, dollar and commodities are higher, stocks are lower, but the abiding sentiment from Asia is one of confusion. The market situation around Russia moved immensely over the weekend, and people are struggling to catch up with exactly what it means. So confusion and a little bit of fear out there.
Confusion and a little bit of fear, and all of that reflected in the futures picture. Let's get just under an hour away, of course, from the start of cash equities trading here in Europe. Let's get to the futures picture, and it is, as you would expect, a negative one. Down by 3% on Euro Stoxx 50 futures, down by 1.5% on FTSE 100 futures, which remarkably still positive year to date, the FTSE 100. But that is the exception, not the rule. DAX futures down by nearly 3%, as you see. US futures also to the downside, down by more than 2% on E-minis and on NASDAQ futures. So, Mark, mounting sanctions against Russia, including against the Russian central bank, removal of some Russian banks from SWIFT, a lot to digest, a lot for markets to come to terms with. And we are seeing, obviously, some big reactions on the GMM. Take us through what you're seeing there, the things that immediately stand out: weakness in the ruble and emerging market currencies, and strength in commodities.
Yes, very much so. Look at commodities. This is the one where we're seeing the really big shift, and we might see the real lasting shift. Obviously, particularly oil prices are generally higher, more than 5% in both WTI and Brent, but it's feeding through to commodities right across the board. The other big takeaway is dollar strength. We're seeing that against a lot of EM currencies, particularly ones that are regional, but notice the Mexican peso in there as well. So generally higher vol, higher yielding currencies getting hit as people are generally de-risking. This is the offshore ruble showing down about 20%. But I know that initial prices on the MySex exchange are coming in dollar ruble a little bit lower than that, so not quite as dramatic. And that is just in the wake, obviously, with the central bank raising rates from 9.5% to 20% only about 15 minutes ago. So it's really dramatic there. In equities, it really depends where we closed on Friday. Remember, the European markets closed at probably the height of optimism on Friday, so we are expecting some real kind of downside there in European markets when they open in about an hour's time. Generally in bonds, we are seeing developed market bonds markets bid. We're seeing yields lower, but of course, because of that de-risking, we're seeing emerging market bonds get hit and the yields go higher there.
Right, Mark, let's get back to the source of all of this tension in markets, and that is, of course, the developing story around Russia and Ukraine. The weekend saw more escalation in the war in Ukraine. The US and its European allies stepped up their response to the conflict, announcing plans to sanction Russia's central bank and cut off various Russian lenders from the critical SWIFT financial messaging system.
Important Russian banks will be excluded from the SWIFT system. We will also ban the transactions of Russia's central bank and freeze all its assets to prevent it from financing Putin's war.
There's a range of escalatory steps we have as options.
President Putin's decision to pursue his aggression against Ukraine is a terrible strategic mistake, for which Russia will pay a severe price for years to come.
Let's bring into the conversations our reporters across Europe for the latest situations on the ground where they are, and indeed in the markets that we follow. Chad Thomas is in Berlin for The View from Germany. Maria Tadeo is in Geneva for international reaction to the latest events. We also have our reporter on the ground in Moscow, and let's start there. Now, the US and allies significantly ratcheting up the sanctions against Russia over the weekend. What impact then are we seeing, and what response is expected from Russia?
Yeah, good morning. Well, we see that the Russian central bank has acted, first of all, by hiking interest rates to 20%. Secondly, they appear to have entries a fixed rate for the ruble, which fell by 8% this morning to 90, although in short trading, it was down far more than that. And there are capital controls also being introduced. Russian companies now have to sell 80% of their foreign exchange revenue. So these are emergency measures which clearly are aiming to try and stem the rout, but they are unprecedented.
Good morning. And on the ground in Ukraine, how can you describe the situation at the moment?
Well, there are peace talks which are supposed to be taking place between Ukraine and Russia in Belarus, but the fighting is very much ongoing. Kiev, the capital, under bombardment, major fighting for control of the second city, Kharkov. There are now reports that troops from Belarus may enter Ukraine to join the Russian campaign. So that the Russian assault on Ukraine is accelerating.
Yeah, interesting that we see talk, of course, of these talks taking place on the Belarus-Ukraine border, but at the same time, talk of further troops coming through from Belarus. So lots to digest, lots to understand about really what is the situation on the ground. So that's the latest from Russia itself and indeed from on the ground in Ukraine. Chad, let's come to you on what's been going on in Germany. An incredibly busy weekend when it comes to the German story. We saw Germany boost its defence spending. Just how significant a move is this?
Yeah, it was a real historic shift here, Anna, in Germany over the weekend. German Chancellor Olaf Scholz addressing the German parliament yesterday and announcing plans to significantly boost defense spending here in this country. He announced that Germany will set up a €100 billion fund to modernize the military. They also said they're going to boost the spending, the defense spending as a percentage of GDP to more than 2%. That's a real big hike as well. They've been hovering at around 1.5%. Of course, as a NATO member, they're supposed to be at that 2% mark, but it has been something that they have not been meeting in recent years. The real shift here, we're hearing also from the German foreign minister speaking yesterday, saying that it's time for Germany to step up, that no one can remain neutral in this conflict. And it does seem like they have public opinion behind them in this shift. Just behind me here at the Brandenburg Gate here in Berlin yesterday, more than 100,000 people turned out for a mass demonstration in support of Ukraine.
Good morning, Chad. What other measures is Germany planning to do to help Ukraine? And specifically, are there any plans on the energy front? At the moment, European benchmark gas prices have opened up more than 30%. Now, this is the kind of volatility we've seen quite regularly recently. It was down about that much on Friday. Are there any measures expected on the gas front, or what other measures can we expect from Germany to help Ukraine?
Yeah, well, first of all, in terms of what they're doing to help Ukraine, Mark, another real big shift for Germany here. Germany said over the weekend that they are going to send military equipment to Ukraine, both via third countries and also directly. They will send surface-to-air missiles and anti-tank missiles as well. Real big shift for Germany because Germany has historically not sent any sort of military equipment into conflict zones. This, of course, for historic reasons, Germany being the aggressor in two world wars in the last century, but Germany again saying that they needed to take this step to help Ukraine. In terms of on the energy front, some of the things that they were talking about yesterday, the German Chancellor Olaf Scholz, were really a bit more long-term planning, things that they want to do in terms of opening new LNG terminals on the North Sea coast are some of the things they're looking at, also boosting their own strategic reserves. But of course, those are things that you don't do within a matter of days.
Yes, a long-term story there. We are seeing very instant reaction to some of this news flow in terms of those energy markets. Mark was talking about gas, natural gas prices spiking up. Chad, I see that German 2023 power contract prices jumping 13% with surging gas prices. So there's a lot of movement in terms of the commodities markets and the impact that this is going to have on European buyers of energy and the European economic story. Chad, thank you. Maria, let's come to you. Talk us through the EU package and what was approved overnight, because there are many strands to this.
Well, many, Anna, and this is a mega package that was put together in 48 hours. Remember, we always criticize the European Union for being so slow to take action. In this case, the response was different. And as I said, we're looking at a mega package that includes, of course, the economic aspects. We've talked about SWIFT. We've also got to talk about the Russian central bank. Yesterday, the top European diplomat, Josep Borrell, said that 50% of Russia's central bank assets, including the reserves, will be frozen because they're right now held in G7 jurisdictions, and that is now going to be restricted. Then we also had the military arm of this. We know that individual countries have been sending weapons, but now the European Union has put together a European peace facility that they call for 150 million euros in lethal weapons financing and 50 million on fuel for Ukraine. They also talk about sending humanitarian aid. They've taken some of the Russian affiliated channels like Russia Today and RT off the air. They say say this is a propaganda machine. And then, of course, they're working on a plan to deal with the influx of refugees. So this is now going in many different fronts. But yesterday, a European official told me there's two reasons why the European Union decided to work and put this plan together. One, of course, is Ukraine's President Zelensky. He has shown that he can rally people. And then, of course, the second is that the people of Ukraine have shown they can resist. So having made that decision, Europeans believe that this was now the right time to act.
Thank you very much. Thanks to our Bloomberg reporters in Geneva. Thanks to reporters in Berlin and in Moscow as well. Mark, that gives us lots to talk about from the geopolitics. That's the driving force behind all of these market moves that we're seeing. And of course, we continue to focus on the day-to-day, what is taking place tragically in Ukraine. In terms of these market moves, we've touched on some of them, but let's start the clock and have a think about where we are here. Do we have any sense of panic in these markets? I know we'll talk about this more in 15 minutes or so, but I suppose it's worth us continuing to monitor this. How does the things are moving very quickly, and we are on the lookout for any signs of panic, I suppose.
Yet there isn't any panic. It's important to emphasize that despite the fact that US equity futures are down more than 2%, whether you look at the NASDAQ or S&P 500 E-mini futures are down more than 2% today, and yet they are higher than when the invasion started on Thursday. So overall, we are not seeing panic across markets. We're only seeing oil prices up about 5% since the invasion started. Yes, it's big moves, but not crazy out there. Now, it's important to emphasize that at the moment there's a lot of confusion, and the situation is evolving very rapidly. Just over the weekend, with the freezing of CBR's accounts and also some banks being blocked from the SWIFT system, we are worried about funding markets today. We are worried what might be the follow-through on that. But overall, I don't think there's a panic out there, and I think that markets will soon look beyond this with low confidence. I like a very low conviction. I actually think markets will trade higher this week as they realize the Russian blow from the economic side is not very large. The main impact of Russia on the world economy is through commodities, and at the moment they are excluded from the sanctions and they are exemptions.
And you wonder how the developments on the ground in Ukraine might influence that view, whether we see the various protagonists sticking to current plans or whether things change drastically. Let me ask you about energy markets then, Mark, because you mentioned, yes, oil prices only, quote unquote, up by 5%. That doesn't seem to chime with some of the news flow we're seeing, although important to make the point that commodities still not included in the sanctions, which maybe is why we're only up by 5%. And gas prices, yes, up 30% or so, 25 actually. That sounds dramatic, but we were down by more than that during Friday's session. So volatility seems to be one of the few things we can be confident of.
Very much so. And we've got to remember that we have an energy crisis in Europe. We've had an energy crisis in Europe since last summer. We talked about this all last summer. And, you know, obviously Russia has then struck on Europe at this most vulnerable time. And that's where it thought it had a lot of leverage in negotiations. So we have this backdrop already. The energy crisis in Europe is not going to go away. And that is feeding through to a food price crisis and obviously the big inflation problem. Those underlying fundamental problems have been there for months. They're going to be there for the rest of this year. They are made worse by this conflict. But the direct economic impact will not be that large outside the commodities avenue. So at the moment, people aren't going to rush to take risk. In fact, they are de-risking as they get worried. But overall, people are not going to be selling down assets just because of this conflict. They're going to be worried about inflation and commodities angle.
OK, and we're going to talk more about this. And I know you have some interesting thoughts on FX markets, and we will talk with our guest around FX shortly. Mark, thank you for thoughts so far. Remember, you can get details from the rest of the Markets Live team. MLIV Go, that is the function to use on your terminal. Coming up, we will continue to bring you live coverage of the latest surrounding the war in Ukraine. This is Bloomberg.
The U.S. has announced it's moving 8,500 more troops to Eastern Europe. if they're not being deployed to Ukraine specifically, why is that so important, and does that risk further provoking Russia?
Well, there's two things going on. So what the United States recently announced is that we are going to put 8,500 troops that are part of the NATO response force on high alert. That means they'll be ready to deploy on a moment's notice should we need those forces anywhere in Europe to protect NATO territory. In addition, the United States is also looking at possible additional moves that they might make to move U.S. force posture into Central and Eastern Europe. The reason we're looking at that is because a lot of the members in that neighborhood in Central and Eastern Europe feel concerned. And so we are looking at what measures we might take in the name of reassurance and deterrence.
From New York City.
Here in London, in Sydney.
In San Francisco.
9 a.m. in Beijing and Shanghai. Good morning, everyone.
Have a great evening.
To recap the headlines.
You do not want to miss this
How
story.
are you thinking about those dynamics?
Welcome back to Bloomberg Markets Europe. 17 minutes past 7 here in London, so 40 or so minutes to go until the start of equities trading. Futures you will appreciate to the downside here for European stocks. Joining us now, Jeremy Stretch, head of G10 FX strategy at the Canadian Imperial Bank of Commerce. Jeremy, really nice to have you with us. Lots of questions around the FX impact of all of this. And of course, we're drawn to the ruble. That is one of the big movers of the morning. 29% to the downside on the Russian ruble. We know that 2/3 of their FX reserves at the Russian Central Bank or in G7 countries is going to be difficult / impossible, you can tell me, to sell those now to prop up the currency. But they have come forward with a big hike in interest rates. Where does all of this very fast-moving story around the Russian Central Bank, where does it leave the ruble?
Well, you're absolutely right. There are an awful lot of cross currents regarding Russia and the ruble. I think when we were thinking about the impact of the escalation of hostilities last week, we looked at that Russian central bank war chest and thought, well, that will be an opportunity for Russia to be able to offset some of the economic pain that will be upcoming. But now we've seen this freezing of foreign central bank assets. That ability to support the ruble does look significantly curtailed. And so accordingly, we have seen the ruble under significant pressure into the start of the week. Yes, we've seen the central bank trying to alleviate the crisis by hiking rates, by talking about domestic companies being forced to sell foreign currency and move it back into ruble. So there are attempts to try and stem the slide, but it does feel as though the ruble is going to continue to be the epicenter of the crisis, or at least the obvious risk factor in terms of the degree of stress in terms of the Russian financial system.
Good morning, Jeremy. You talk about stress in the Russian financial system. Obviously, another aspect of this morning's trading is the massive bid for the dollars, which has strengthened against almost every other currency out there. And part of the driver of that is concerns about funding markets generally. We've seen a widening of the FRA-OIS spread and shows there's a little bit of concern, but nothing too dramatic yet. Do you think there will be a problem in funding markets generally, or is this just a very isolated, focused on Russia issue?
Well, of course, it would be very easy to say this is just focused on a Russian issue, but clearly we are seeing once again a testing of the global financial infrastructure. Now, I think we have seen attempts over the course of the last few years to try and deal with some of those infrastructure issues in order to preclude immediate funding stresses coming through very dramatically. And we, of course, saw those funding stresses back in the early stages of the pandemic. So I think markets are mindful that there could well be some degree of liquidity squeeze. Yes, we're seeing a rush for dollars, and the dollar liquidity is definitely king. But I think markets are still feeling relatively calm in the context of the sort of the broader perspective. I think largely due to the fact that we have seen these previous funding stresses, and we've seen attempts by the central bank authorities to put in place measures relatively quickly. So I think that is assuaging immediate market fears. But nevertheless, we are just seeing a little bit of widening in terms of those funding levels as we start the week.
Jeremy, what do you expect to see in the Chinese currency, in the yuan? Because some suggest we could see weakness there because if the Russian central bank can't sell euros, can't sell pounds, can't sell dollars, can't sell global currencies like that, they can sell the Chinese currency perhaps. Others say, well, that just shines a light on the increasing role that the Chinese currency plays in the global economy and therefore speaks to strength. What do you expect to see away from the day-to-day moves around the Chinese currency?
Well, I think China are in a very interesting position because, of course, they are perceived to be one of the areas or avenues where there could well be a sort of a more friendly and convivial relationship between the Russian central bank and some of its funds. But, of course, as we were aware last week, the Chinese did abstain in terms of the Security Council motion. So I think China is in a rather difficult position here. Yes, the Russians may be able to access those funds at the central bank, and that could have a little bit of an impact on the Chinese currency. But I think China doesn't necessarily want to be caught in the firing line of this particular issue. I would suspect they'd be rather happy to stay on the sidelines. So I'm not sure necessarily that the Chinese will be actively providing too much in the way of explicit support for Russia. I think if we are going to see just a little bit of a liquidation of those funds, then it may well be a case that the Chinese currency will continue to underperform or will underperform against what continues to be a resurgent US dollar on the liquidity argument.
Jeremy, thank you very much. Jeremy Stretch, head of G10 FX strategy at CIBC, with your briefing after all of that weekend news flow. What does that mean for FX markets? Thanks very much to Jeremy for spending time with us this morning. Coming up on the programme, SWIFT cutoff. We look into the latest sanctions announced by the West, including cutting some Russian banks from the international payment system SWIFT. What exactly does that mean? This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
As a company grows, there are more challenges. What do you worry about the most?
The market opportunity for us is enormous, and so our challenge is to continue innovating, driving, and pushing ourselves every single day to go after the most attractive profit pools in this incredible global beauty and wellness market.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Welcome back. 35 minutes to go until the start of equity trading. Equity futures to the downside, bonds jumping this morning, as you might expect. Now, one of the biggest steps taken over the weekend was the move by Western countries to cut off some Russian banks from the international SWIFT payment system. It is used for trillions of dollars worth of transactions around the world. Joining us now with more is our reporter Natalia Drozdiak, who's in Brussels. Natalia, walk us through very quickly, if you could, what was decided over the weekend?
So Western nations took a major step this weekend when they decided to cut off some Russian banks from SWIFT. So only some banks will be cut off, but this could be extended to others, officials say. And they're trying to carefully choose which banks to maximize the impact on Russia and minimize the effect on European countries.
And good morning, Natalia. Why is this such a big deal, and why were EU leaders initially reluctant to go for this measure?
Well, this means that transactions with Russia could be slower and more expensive. So basically what SWIFT is that it's like the Gmail of global banking. It allows for orders and confirmations for payments, trades, and currency exchanges to go through. EU leaders were initially reluctant to go for this because they've termed this the nuclear option because they need some sort of system to pay for their oil and gas to Russia. And they were also concerned that cutting Russia off could inadvertently promote alternative systems, including Russia's own version of SWIFT.
Natalia, thank you very much for giving us the briefing. Bloomberg's Natalia Drozdiak with the latest in Brussels on the SWIFT system and is concerned about that impact, the way it makes it more difficult to use the SWIFT system with Russian entities, that perhaps is putting that upward pressure on oil prices. We'll get to the commodities markets a little bit later in the programme. We'll also focus on financial services. Bank of Ireland reporting underlying full-year profit. We'll talk about the earnings, but also volatility in markets, how that plays out for the CEO. This is Bloomberg.
Soaring energy prices and a short supply of key chemicals that produce synthetic fertilisers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertiliser helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down, the manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Welcome back to Bloomberg Markets Europe. Half an hour until the start of cash equities trading. Heightened sanctions on Russia, heightened measures taken against the central bank, the ruble and Russian assets reacting a lot this morning. What does all of that mean for European equities? Well, futures point to the downside, down by, in particular, over on the German market, the DAX futures down by 2.6%. Let's get the latest on the very fast-moving sanctions story over the weekend. The EU has announced plans to sanction Moscow's central bank and cut off various Russian lenders from the critical critical SWIFT financial messaging system. And this is not just Europe. This is a number of Western countries taking these measures. Bloomberg's Europe correspondent Maria Tadeo is in Geneva for international reaction to the latest events. Maria, talk us through the EU package then. What was approved overnight and what does it mean?
Well, Anna, remember on Thursday when the European leaders met, this was a completely passive reaction. In 48 hours, however, the picture has changed dramatically. We know that the European Union has approved and signed off a mega package that really tackles pretty much every strand, every aspect of a response when it comes to the Russian aggression. They say, of course, that there will be very hefty economic sanctions. We know the SWIFT is going to get cut off for a number of banks. The top European diplomat also yesterday repeated that move. 50% of Russia's international reserves are going to be frozen as a result of these restrictions. They're being now held in G7 jurisdictions. And of course, we know the sanctions are going to kick in across the bloc. We also see a military facility that is being put to work in record time, I should say. It's 450 million euros would go to lethal weapons. That is so Ukraine can finance their defense response to the Russian invasion. And then, of course, 50 million euros to provide fuel. Poland says it will act as a distribution hub for all of this. We also have the misinformation aspect of this. The European Union saying they will cut off Sputnik and Russia Today, RT now as it's known. They say this is a propaganda machine. And then we also have the humanitarian response. So the European Union, of course, is now prepping for what could be a significant influx of refugees. But it's interesting to see how this time around the language is different. Yesterday, the head of the European Commission, Ursula von der Leyen, saying these are people fleeing war. They are Europeans, and we're going to welcome them as such.
So the UN Human Rights Council begins in Geneva today, where you are, under the cloud of this invasion. How does Russia plan to react to this?
Well, you know, Mark, I think this meeting that was supposed to happen today really does tell you and reflects on all the sanctions that we've heard over the past 24 hours. Sergei Lavrov, the Russian foreign minister, was supposed to participate in this meeting by the United Nations here in Geneva, but we actually understand that he is not going to be able to participate. At least that is what we're being told this morning. A lot of this reflects the personal sanctions on Sergei Lavrov, but also remember yesterday the European Union shutting the airspace across the Union to Russian planes, Russian-owned and Russian-registered planes, which means that for a Russian official to now get and fly across Europe to get to Geneva today will be extremely hard. So again, we hear that this participation from Mr. Lavrov may actually not be doable in practical terms, and he's not going to be able to attend the meeting as planned.
Maria, thank you very much. Maria Tadeo in Geneva for us, keeping across all of the European and indeed perhaps G7 angles on the sanctions story. A lot of coordination coming through there. Let us talk to you about an earnings story, but also use it as an opportunity to talk about how the banking sector is coping with this seemingly quite unprecedented level of news flow and these geopolitical developments. Bank of Ireland has reported underlying profit for the full year that beat estimates. This as European investors face increasing uncertainty over the implications of the Ukrainian crisis. I'm pleased to say the CEO of Bank of Ireland joins us, Francesca McDonagh. Francesca, thank you so much for your time. I'm sure, you know, you're trying to keep up with all of the news flow, just as everybody else in financial markets is, when it comes to the Ukraine, the war on the ground in Ukraine and what that means, how banks should react. Let's quickly deal with your earnings story, and then we'd like to get a sense of how the bank is prepared. So underlying profit coming in above estimates. What do we need to know about the full year story and how it delivered at Bank of Ireland?
Yep, thanks, Anna. So we've seen a strong rebound in our performance for 2021. That reflects economic growth in Ireland and other markets, but also really positive continued momentum in how we execute our strategy. And despite the geopolitical developments, which I imagine we're going to discuss, confidence in our growth outlook for 2022 and beyond. And as you said, I mean, we've seen the best performance since the global financial crisis for Bank of Ireland in 2021. And even pre-impairment, we're seeing operating profit up 53% year on year and up 25% if we compare ourselves to 2019 pre the pandemic.
Good morning, Francesca. Great results, as you say. Congratulations on that. Your capital ratio, 16% versus 15% estimated. But are you making any new plans to build up your capital ratios or to build up your reserves, or any special plans around funding this week, given what's happened over the weekend in terms of Russian banks into SWIFT and the freezing of Central Bank of Russia accounts?
No, I mean, I'll answer that in two ways. First of all, capital is actually a highlight of our 2021 results. We had 185 basis points of organic capital generated in 2021, and we're using our strong capital position for two things. One, we're doing two transformational acquisitions in Ireland, which we've announced, of a leading wealth management provider and also of KBC Ireland's portfolio. Those are the plans. And we're also announcing today the recommencement of distributions to our shareholders. So we're in a very, I think, a very good, favourable position to be able to do both. In terms of the Russia and the Ukraine situation, I mean, obviously what we're seeing is a humanitarian and political crisis unfold. As Bank of Ireland, we have no direct exposure to Russia or the Ukraine, and both of those countries aren't major trading partners to Ireland and our customers. The consequences for us are more on the second-order impact. So first of all, sanctions, and sanctions are being rolled out, and we stand ready to respond, and we have responded to everything we need to do, and we'll do more as required. And the second major impact is obviously on European energy and commodity prices, and the impact that may have on inflation for our customers and in the Irish economy.
Yes, and in the very short term, Francesca, are you seeing any signs? Does the volatility we see in assets give you cause for concern? Is this a sort of constant, daily, maybe even hourly talking point amongst the management team at Bank of Ireland, just as we imagine it might be for other banks?
We're obviously keeping a close eye on developments. It's incredibly fluid. There's a lot of uncertainty. Like I said, it isn't in any way, Russia is not a part of our business, but we respond to the volatility in the market as you'd expect.
As you said, one of the main ways this will have a sustained impact is through the inflation channel. Do you think the ECB will be more focused on that, or do you think they'll be worried about the growth impact when it comes to their next policy decision?
Yeah, I mean, it's too early to say. I mean, at the moment, we're aligned to market consensus that ECB rates are likely to increase to 0 later in 2022, and the market has expected further increases of circa 50 basis points over the following 2 years. Obviously, the situation in the Ukraine creates uncertainty and potential for increased inflation, and that may have a read across in terms of different outlooks for ECB rate rises. But I think we continue to monitor developments very closely.
Monitoring developments very closely. I know that our Markets Live team have been thinking about the inflation story, where this leaves the European growth story, for example, and asking a question about how long it'll be until the next European recession, Francesca. I mean, none of us has a crystal ball, and there are plenty of unknowns right now. Are you thinking about the way that the Eurozone economy develops differently now, given the latest developments?
Yes, although I would say that in our home market of Ireland, I mean, we've just seen 15% GDP growth last year, and our forecast is for 7.5% this year. Now, an important part of that does come from foreign direct investment, but also our domestic indigenous economy. And we've seen Irish household balance sheets really strengthen during the pandemic. We have deposits up at 23%. And a very strong rebound in employment. So even though there's obviously uncertainty, the fundamentals of the Irish economy, with a lot of deleveraging in recent years and positive employment outlooks are favourable, and that informs our continued confidence in our growth outlook for 2022 and beyond.
Francesca, you're moving back into the wealth management business again, and I think this has been a theme of Irish banks kind of getting involved and kind of getting back out during previous squeezes, now getting back in. Is this for the long haul this time?
Absolutely. I mean, we are very excited about the acquisition of Ireland's leading wealth management provider. We look forward to completing that transaction subject to final approvals in 2022. Wealth and insurance has been a really important part of our strategy since 2018, and already wealth and insurance is about 42% of our group business income, which has been growing, and we've had a very good performance in 2021, and I'm positive about the future. the underlying demographics of the Irish economy are very supportive to wealth and insurance. You've got a young, well-employed population, probably underprovided for in terms of pensions and savings, who are looking for advice and ways to protect and grow their wealth. So we would feel very excited and look forward to welcoming Davy customers and colleagues to the group later this year.
Francesca, thank you very much. Thank you so much for your time. Francesca McDonough, Bank of Ireland CEO, talking about the earnings and the strategy, but also helping us understand how banks are coping with this fast-moving geopolitical situation. Coming up on this programme, another company trying to pivot as the geopolitics changes course. BP moves to dump its shares in the Russian oil giant Rosneft. That story next. This is Bloomberg.
The Omicron variant and the latest wave have an impact on not only consumer trends, but your business. And do you expect the booster shots to make a difference?
Yeah, booster shot will make a huge difference. I think it's been accelerated by the huge leadership of the current Prime Minister Kishida. And I'm hopeful that our business will come back in Japan around perhaps mid-February to end of February, because we expect that a peak time will come around that time. And then the government will shift toward the reinvigoration of consumer. That will help us. And we had seen the huge comeback of the business in December when the things were toward the normalization. So I believe the business will come back, and I'm very much hopeful.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
We want to take every step to maximize the impact and the consequences on President Putin while minimizing the impact on the American people and the global community.
That was the White House Press Secretary Jen Psaki there speaking about the actions being taken by the West against Russia. Let us talk about where the markets are. Where does all of this fast-paced, fast-moving, the story around the geopolitics, the war that is developing on the ground, where does that leave financial markets, Mark, and any signs of stress? And I know one of the places we like to look for stress is the rate at which banks will lend to each other at, and how much higher that is than overnight rates. And what do we see on that particular measure?
Yeah, Anna, this is the FRA OIS spread. The FRA stands for Forward Rate Agreement. It's a 3-month contract for lending between banks, and the OIS is the Overnight Index Swap Rate. So basically, this spread is the gap between being locked into a 3-month contract versus an overnight contract. Now, normally in reliable counterparties, when there's abundant liquidity, it gets pretty close to zero. So when this spread widens out, it shows there's stress in the funding system. Now, Credit Suisse's very prominent macro strategist, who is very good in this funding markets, wrote a note Sunday warning that this could be a real serious problem for the international banking system, that some Russian banks have been taken out of the SWIFT system. And he compared it to March 2020 and even perhaps like a Lehman moment, that it might be much more problematic than people realize. So we are seeing a jump, almost a doubling in this spread overnight, up to 22 basis points as I speak. Yes, that looks dramatic. It's the highest level since 2020. That sounds quite bad. But it's important that we're nowhere near March 2020 levels. So really, we're not seeing any dramatic stress yet. We're seeing a little bit of funding stress, but nothing dramatic. And just to put this in context, I want to show this chart going back to include the Lehman crisis back in 2008. And you can see that this bounce really really is nothing. This is the 2020 spike. Yeah, it looks a bit more dramatic there, but this is what happened in Lehman. Now, the big difference is central banks back then, they got it wrong. They didn't realize that the financial system would freeze when Lehman went down, which is why they let Lehman go bankrupt and then had to backstop all the financial institutions in the coming days. They now have much better systems in place to provide liquidity. They are ready to provide dollars to banks that need them, to the banks that have access to them. And therefore, I don't think we're going to have a situation anywhere like that anytime soon. History does not repeat, it rhymes. So the funding crisis will work in a slightly different way this time, and I don't even think one is coming.
OK, well, we'll see how that develops then in the days and the weeks ahead. But really important to consider the way that central banks have learned so much since the financial crisis. And as you point out, we saw that quick action during the global pandemic and how that quickly got markets back on course. Let us talk about a sector, though, that has been shaken and will probably continue to be shaken by all the news flow around Ukraine. BP is moving to dump its shares in the Russian oil giant Rosneft, and Norway is removing Russian assets from its $1.3 trillion sovereign wealth fund. Earlier in the month, we discussed BP's Russian assets with the CEO of BP, Bernard Looney, and got a very different view. Take a listen.
There's obviously no impact currently on our operations in Russia. If we step back, Russia is a large part of the global energy system. It's a member of OPEC Plus. As we know, it's a large supplier of energy to Europe. And BP, like many of our peers, have a presence in the country. We've been in Russia for over 30 years. And our job, Anna, is to focus on the business of business. We avoid the politics that served us well in many countries around the world for many, many decades. That's what we're doing. And obviously, if and when there are sanctions, we will comply with whatever comes our way. But for now, there is no change. We're focused on the business at hand, and that's what we are doing and will continue to do.
And that was just 20 days ago. Clearly, enough has changed in the view of the management at BP to take action on this stake in Rosneft. Let's get to our reporter in Moscow who can fill in some of the blanks for us. How significant, then, is BP's move to sell its stake in Rosneft?
Hello from Moscow. BP's participation in Rosneft's capital was one of the major foreign investments in Russian business. And Rosneft, Russia's largest oil producer, accounting for roughly 40% of Russia's total oil and condensate production, always took pride in such a partner. Repeatedly, they showed that BP's participation, which equaled nearly 20%, was a big honor for the Russian producer. And BP stood ready to support Rosneft even after 2014, when the Kremlin decided to annex the Crimea Peninsula. Apparently now the mood is completely different. BP said it is ready to take a financial hit of as much as $25 billion by joining the campaign to isolate Russia's economy. Rosneft said in its separate statement yesterday that BP has warned it in advance about the decision to exit its capital. And it said that BP did it under unprecedented political pressure. At the same time, the Russian oil producer added quite widely, the company is still standing ready and is open to cooperation.
So you're talking about unprecedented political pressure, but does this itself set a precedent for other Western companies? Are other Western energy companies likely to sell down their Russian assets in the days and weeks ahead?
Indeed, what we are seeing now is a string of statements from a range of foreign officials, former foreign officials. A lot of companies saying they are also ready to cut all of their ties with the Russian economy. That, as you mentioned, just this morning we received a statement from Equinor. Norway's Equinor said it is exiting its joint ventures in Russia and is stopping new investments in Russia. There are still some other major Russian projects the big foreign companies are participating. I can name Yamal LNG, Russia's largest production of liquefied gas. We also have the first major foreign venture in the Russian oil and gas segment on Sakhalin. We still have no comments on whether those big companies like Total or Exxon are looking to exit their projects. And obviously, Russia is extremely important for their business. But we are seeing at the same time that the momentum is gaining for them to do that.
OK, thank you very much. Our reporter in Moscow with the latest on BP and the thinking there at BP and what we don't yet know about the response from other corporates. I see that Deutsche Börse is saying that trading of several Russian securities is suspended. And you wonder to what extent boardrooms around Europe are going to be thinking about exposure to Russia and either because of sanctions or thinking to get ahead of sanctions, deciding to take action around those assets. Let's get a Bloomberg First Word News update, a full briefing then from Angel Feliciano. Good morning, Angel.
Anna, good morning. Russia's central bank has more than doubled its key interest rate from 9.5% to 20%. It's also banned brokers from selling securities by non-residents in a bid to shield assets from Western sanctions. The move comes after the U.S. and EU agreed to penalize the central bank, potentially blocking access to much of the government's $640 billion of reserves. Earlier, Western countries agreed to cut off several Russian lenders from the critical SWIFT financial messaging system. Ukrainian officials have agreed to meet with their Russian counterparts for talks at the border with Belarus. This hours after President Vladimir Putin put his country's nuclear forces on higher alert. In other recent developments, Belarus is reported to preparing to send troops into Ukraine to help its ally Moscow. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Anna.
Angel, thank you very much. Angel Feliciano here in London. Coming up on the programme, we'll take a look at the stocks to watch, indeed sectors to watch, including German defence company MTU Aero Engines. We'll keep an eye on all of the names in the defence sector as Berlin plans for a massive boost in military spending, a real pivot in German foreign policy. How is that going to be absorbed by defence names across Europe? All of this with the aim of assisting Ukraine. This is Bloomberg.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
How difficult was it to go to investors and say, invest, give money, put money into a travel tech company within this environment?
It wasn't that difficult because TravelPerk is doing much, much better than the rest of the industry. In fact, we are at the moment growing at 4 times revenue of pre-COVID numbers.
Welcome back to Bloomberg Markets Europe. But still 6 minutes to go until the start of cash equities trading. Let's get the sectors that are very much in focus this morning. Danny Berger joins us with a breakdown. Good morning, Danny.
Good morning, Anna. Look, there's a lot that's likely to be on the move. It could be a very volatile day, but some of the sectors in focus, oil is certainly one of them. We were just talking to our reporter in Russia, but you have BP, of course, selling its 20% in Rosneft, but there are other exposures throughout the oil majors that they might look at selling down, so we could see some movement there. Defense companies also in focus. Olaf Scholz, the German chancellor, announcing plans for a massive boost in spending. So there are a couple of companies there that could move. MTU Aero Engines, Airbus, BAE Systems, Rolls-Royce, Dassault Aviation, among others. And aviation, another one certainly to watch as a whole as Europe closes its airspace to carriers from Russia. So a lot of those companies like BA, Lufthansa could be moving too.
OK, so energy, defence, aviation, we'll keep an eye on all of those. Danny, thank you very much. Danny Berger with the sectors we're focused on. Mark, worth pointing out the sort of global risk appetite we're seeing at the moment. I mean, amazing that a lot of the Asia session actually looking really quite calm / positive in terms of risk assets, and European futures may be improving.
Yes, very much so. So US futures are much higher than they were an hour ago. US futures are well up from when the invasion started on Thursday. European futures are only down just over 1% from that period. I think that overall, markets are taking this exceptionally well when you look outside commodities and FX markets, and I think that is the right reaction for the moment, but there's still a lot that's uncertain.
Yeah, there's a lot that's still uncertain, a lot we still don't fully understand about the impact of the announcements over the weekend. We'll keep focusing on the situation on the ground, of course, as well. Thanks to Mark for spending the past hour with us. The Open is up next. This is Bloomberg.
I'm here at the Delhi airport, and behind me you can see SpiceJet's 737 MAX aircraft. SpiceJet Chairman Ajay Singh earlier today said that Boeing is going to compensate SpiceJet in form of cash and aircraft. There's a big celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet Chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
But we need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
The capital markets can really help the shift to sustainable and decarbonized global economy. What are you noticing in that as ESG is now the buzzword literally everywhere?
It is definitely the topic of conversation in most meetings I have with company CEOs, with investors, with industry groups. It's amazing.
Welcome to the European Market Open, everyone. A minute to go until the start of cash equity trading. I'm Francine Lacqua here in London. Your top stories: Ukrainian and Russian officials prepare to meet at the Belarus border hours after President Putin put his nuclear forces on higher alert, while the Russian central bank more than doubles its key interest rate. Global stocks slump. Oil surges the most since 2020 as Western nations target SWIFT and Bank of Russia assets with new sanctions. The ruble plunges. Plus, commodities surge and energy companies, including BP, look to divest from Russian businesses. We'll speak to Jeff Curry, Goldman Sachs head of commodities research, this hour. Now, the key question which we'll try and answer this hour, the effectiveness, of course, of these sanctions. It seems all depend on three things: the implementation and the degree to which Russia will be able to mobilize reserve assets held in more friendly jurisdictions, i.e. China, but also the global financial system being robust enough, and of course the flash flow of hard currency proceeds from oil and gas. Futures down, Danny, and we're looking at the open.
Exactly. Markets just opening up. I should say, as we headed into the start of cash equity trading, we did see some of the pain in European futures ease a bit. Of course, it still, to be clear, is pain, but a little bit more orderly than what we saw in Asia. So we're getting the FTSE 100 just opening up, Francine. That's down 0.9%, 1% now. So continuing to fall as we open. We have to remember the FTSE 100 has a lot of these commodity type companies which might help it perform better than other indices. Of course, BP selling down its Rosneft stake. That will hurt the company quite a bit. Getting Spain just opening up the IBEX down 2.3% as well. So it is losses. It is a risk-off day as we look of the contagion effects of the war in Ukraine, both when it comes to the economy and the global financial system, as more banks added to the ban of SWIFT, the communication system for banks and payments. So again, just Spain and the UK opening up down more than 1%. Italy now on the board down 2.25%. Let's get your look cross asset, because really it is the currency space where we're seeing a lot of the pain. Russia has moved in trying to stem some of the declines in the ruble. At the moment, the ruble down about a third versus the dollar, 33.3%. Russia not only has it upped its central bank key rate to 20% as a hope to make deposits more attractive, it's also on the onshore ruble trying to put a band on the trading, again stemming some of the declines. This is, of course, offshore. We're seeing that pain. The euro, it was down more than 1% to start the morning, now just down 0.7%. Again, questions as to what the economy will look like after this. We're also looking at a yuan that's higher by about 0.1%. Does this become the currency of choice to try to stem some of those declines in the ruble? In the Bloomberg dollar spot, this really has been the haven currency throughout the turmoil. That is up nearly 0.5%. We're also seeing, in terms of havens, this bid to bonds. It's occurring on the front end of the curve. I was talking to Martin Malone from Alpha Book earlier, who said the move from the central banks and the Fed might be not to hike interest rates. The playbook has been ripped up, so we're looking at yields lower by 5 basis points. You're also looking at natural gas, wheat, crude. All of the commodities continue to surge. There haven't been strict sanctions put on commodities coming out of Russia. But, Francine, one of the thoughts is that by freezing SWIFT and therefore putting payments from Russia on ice, that could also turn into some of the goods flowing from Russia freezing as well, because, again, you need payments to make the goods flow.
Yeah, it's really interesting. If this messaging system, the most simple explanation is that you can still do some of these payments through another messaging system, like the good old emails.
Right.
But if it's a hassle, then maybe some of these commodity producers just won't do it. Danny, thank you so much for a great roundup of all of the market action. Of course, Russia trying to stem some of the outflows with capital controls, and we're also hearing that the governor, Nabiullina, will be speaking at 4 p.m. local time in Moscow. So Ukraine has agreed to hold talks with Russia at the Belarus border, hours after President Vladimir Putin put the country's nuclear forces on high alert. Meanwhile, the U.S. and its European allies stepped up their response to the conflict. Now, they've announced plans to sanction Russia's central bank and cut off various Russian lenders from the critical SWIFT financial messaging system.
Important Russian banks will be excluded from the SWIFT system. We will also ban the transactions of Russia's central bank and freeze all its assets to prevent it from financing Putin's war.
There's a range of escalatory steps we have as options.
President Putin's decision to pursue his aggression against Ukraine is a terrible strategic mistake, for which Russia will pay a severe price for years to come.
Let's get all the latest with our reporters across Europe. Maria Tadeo is in Geneva for international reaction to the latest events. Laura Hurst monitoring the fallout for energy companies divesting from Russia like BP. Christina Kino here in London to look at the market reaction. We'll begin with our reporter, though, in Moscow. The U.S. and allies significantly ratcheting up sanctions against Russia over the weekend. If you look at the impact that we're seeing, but also the Bank of Russia response, how much has it abated that angst in the markets?
Well, the ruble is moving within a corridor at the moment. It has been falling, but the central bank is preventing the currency from collapsing. So, you could say that that is successful, but of course, this means that, they've abandoned convertibility of the currency.
So is there anything more? I don't know whether we look at Venezuela or Afghanistan or Iran or even Turkey and some of the capital controls that they put in place. Is there anything else that the Bank of Russia or Russian authorities can do?
Well, they have taken other measures. So they are requiring Russian companies to convert 80% of their foreign exchange earnings. Clearly these measures will protect the currency. But of course, this is all going to make Russia far less integrated into the world economy.
All right. Thank you so much. Our reporter there in Moscow. Maria, talk us through the EU package that was approved last night. What does it actually mean? How much teeth do a lot of these sanctions have?
Well, Francine, this is a mega package. I guess it's very fair to say that arguably this is the harshest package ever put by the European Union as a single institution against a single country. We know that there's, of course, the economic sanctions that will feature highly here. We've talked about this throughout the show today on Bloomberg. Some Russian banks are going to be cut off from the SWIFT. We know that pretty much the entire political system, including Vladimir Putin, by the way, are now going to be personally sanctioned. And then, of course, what I was told is the biggest weapon of all at this point to cushion this attack from Russia is the central bank. Yesterday, the top European diplomat, Giuseppe Borrell, told us that 50% of Russia's reserves are going to be frozen. Now, they're being held at this point at G7 jurisdictions, and they are all going to introduce restrictions. So they argue that this is going to have significant impact, and we're seeing it, by the way, this morning in the market reaction on Russia. The other aspect, of course, is the military aspect. The European Union has put forward, they call it a European peacekeeping facility. 450 million euros will go to finance lethal weapons for Ukraine. Another 50 million euros for fuel that will be at this point distributed from Poland into Ukraine. Now, the question is, how did this happen in 48 hours? We always criticize the European Union for being so slow. So why was it different this time? Yesterday, a European official, Francine, told me there's three reasons. One, of course, there was a big change of heart in Germany that set up the European machine. Then two, of course, Zelensky changing the narrative around Ukraine. He has proven that he can rally his people. And then three, the Ukrainian army is dealing with this attack. So this official in particular told me they've decided to resist. Now we have to help them.
Yeah, and I have to say that the fact that actually the international community sees Zelensky as this formidable leader probably also helped with sanctions. Thank you so much, Maria Tadeo in Geneva. Laura, what steps have we seen energy companies like BP take? I know they're trying to divest and get away from Russia. BP share price falling 7% as the company said they will exit that Rosneft stake.
Well, yeah, that's the first really big move from the Western majors. And that was the surprise news yesterday that BP is going to exit its stake in Rosneft and all of its other operations, which are a lot smaller. So we don't exactly know what that means in practical terms. They might have to write off the entire investment, which at the moment is what analysts think is going to happen. Or they could try to sell the stake. But as you can imagine, under current circumstances, that's going to be very difficult.
Laura, thank you so much. Now, Christina, I mean, there's so many angles to this, right? And it really permeates through the markets. It could permeate through anything for the financial system, not only in Russia, but globally. The central bank has taken some pretty aggressive moves of their own today. Is it enough to stem this loss in ruble?
Well, Francine, from the price action that we're just seeing this morning, I think the best that they can do is to slow the process of the ruble weakening. This is like pushing a boulder uphill at the moment. There's so much negative momentum just coming through for the ruble, a lot of momentum and just a desire to get rid of these ruble-denominated assets in the market this morning that I think the Russian central bank will really struggle to turn this completely around. And the best that they can probably hope for is probably slow a little bit of the ruble decline this morning until they get more established measures in place. And now the other issue as well that we're seeing in the currency markets in particular is, of course, that of liquidity. It's very, very difficult to make a market in the ruble at the moment, especially given just the discrepancy in what we're seeing, both in terms of the onshore pricing for the ruble as well as the offshore pricing. There's definitely a big gap there. And I think that's something that traders are still trying to work through and clear the confusion. And so at the moment, it's entirely difficult market to navigate.
Christy, if we take a step back, I mean, we've never seen anything like it. This are basically G7 countries going after a G20 country, the 11th biggest actually in the world in terms of GDP. We don't really know where the buck ends, right? Because everything's interlinked. So is the financial system robust enough to deal with this? What does it mean? I mean, does a lack of liquidity in the Russian market, could it be a symptom of something worse happening elsewhere?
Well, Francine, this is definitely the fear that this potential liquidity issue spreads across to global money markets, which of course will be quite a devastating to just how markets function, given that it is very much going to be hitting the plumbing of the markets itself. And so this is definitely what we're going to be watching out for today, whether various central banks across the globe would open up these liquidity facilities much in the same way that they did when we saw the onset of the pandemic in March 2020. And so looking out for signs of potential stress in money markets and potential responses from central banks, that's going to be very important to watch.
Given the number of news and news flow, it's probably the easiest way is maybe one of timeline. So today we worry about peace and of course what it means for ruble. Longer term, we also have to look at inflation. I know Valerie's put together some great chart looking at financing conditions and what it means for the Fed. I mean, is this a game changer for central banks around the world?
Well, Francine, it certainly does throw a lot of cold water on the rate hikes that we're seeing being priced into the markets in just over a few weeks ago. I mean, we're definitely seeing a bit of a climb down in those expectations for the Fed, the BOE and ECB. We know that all three of them will be embarking very, very important meetings in March. There was a lot priced in for each of those central banks, even as early as March. And now we're definitely seeing a bit of a climb down on those expectations. And so I think it is a game changer in the sense that it probably hampers central banks' ability to address the inflation situation in the immediate term because they're dealing with the more immediate fallout of the Russia-Ukraine situation.
Christine, thank you so much for helping me navigate, of course, all of these extremely difficult markets. European gas prices also jumping some 36% as some of these sanctions are spurring energy shortage fears. Our Christina Kino and our Bloomberg reporters in Geneva, Moscow, and London. Coming up, geopolitical deterioration remains top of mind. More on the market fallout coming up. We speak with Patrick Armstrong, Chief Investment Officer at Plurimi Wealth. This is Bloomberg.
This chip shortage is going to last longer than many people believe, likely straight through this year. And I wonder what that means for prices. Will this get worse before it gets better?
I don't know that it will get worse before it gets better, but there's no reason to believe it's going to get meaningfully better anytime soon. The Commerce Department put that data out yesterday, and what it showed is that there's a real shortage. Demand is 20% higher than it was a couple of years ago. There's a huge mismatch in supply and demand. Prices are high, prices are higher. So what has to happen is we need to make more chips. Unfortunately, there's no easy solution. The solution is increase domestic manufacturing of chips, which is what we need to do.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
Welcome back to the Open, everyone. 14 minutes into the European trading day, and you can see European stocks down some 1.3%. The DAX down 2%. Equities sliding this Monday. Sovereign bonds rallying. Commodities, including oil, surging amid this heightened security concerns after Western nations escalated sanctions on Russia for the invasion of Ukraine. Now, the markets continue to react to geopolitical pressures and fresh sanctions threats as experts weigh up the economic fallout.
Euro now testing the lows that you saw on Thursday. So to me, that indicates that the market is going to be quite risk-off as we open to try to understand particularly these intricacies about the payment system.
These are extreme measures for Russia to react. Let's face it. These are not permanent measures, I believe, and that's what these sanctions are trying to achieve.
It's a flight to safety, flight to quality sort of dynamic. And in that regard, we are running an overweight on the US dollar.
Joining us now is Plurimi Wealth Chief Investment Officer. He is Patrick Armstrong. Patrick, thank you so much for joining us. So Raiffeisen shares actually dropping some 18% in Vienna. Of course, this is a bank that relies very heavily on Russia. Away from some of these moves, BP down 7%. Some of the others, Renault down 7% also because it's exposure to Russia. Are you surprised by how the markets seem to be holding up?
Not particularly surprised because in a purely financial context, you look at the size of the Russian economy, you look at the size of the Ukrainian economy. If you want to be as cynical as that and say, what's the economic impact? They're not major. In terms of liquidity, you've had a massive tightening of financial conditions in Russia. That has potential knock-on effects in the West, so volatility is going to go up. There are worries about it. But I think from a pure economic standpoint, it is right. The market focuses on companies with exposure to oil that could be hurt by these sanctions.
See, that's comforting what you say, because it's still, I mean, we've never seen anything like it. This is, G7 countries putting sanctions on the 11th biggest economy in the world, and we actually don't know. Are you confident that the system can take it, be it the SWIFT sanctions or actually be it the Russian assets freeze?
I think the system can take it. I think the West was not slow necessarily, but they've definitely thoughtful about putting these sanctions on. They understand the risks to themselves. They understand the consequences they're putting on to Russia. It does seem deliberately designed that there is a way around that Russia can do some exports, particularly with oil and gas. That's why they said certain banks. So we'll see the flows from Russia in terms of natural gas in the coming days. But that would have the real economic impact on the West and on Europe. It would definitely be recessionary and stagflationary if you did see significant curtailment of Russian exports of commodities.
So at this point, what's your worst case scenario? And of course, we always think about the victims and the loss of life. But worst case scenario
I don't even want to talk about worst case scenarios when Putin raised the deterrent readiness on the weekend. The worst case scenarios are pretty terrible.
So let's not talk about the real worst case scenarios, right? But in terms of economic pain, could he turn off the taps? And what does it mean if tomorrow...
He won't want to turn off the taps. I think it's actually more likely that the West refuses to receive it and has a ratcheting down. On this day, we'll receive this many million barrels. Next week, it's going to be down to this. And you get into the summer by then, and you've got... It's stagflation. It's similar to the 70s that you have commodity prices shooting up, you have economic growth hurt. The massive disinflationary forces of globalization have turned into massive inflationary forces from sanctions.
I want to get onto Fed hikes and the tightening of financial conditions in a second. But first of all, how does Europe survive without Russian gas?
It's going to be a lot more easy in the summer. I think Germany's moved away from nuclear. They've never exported arms to another nation. Taboos that were previously there, I think, are being broken. I think the West will strategically have to move back to other power sources, and I think nuclear will be a big part of that.
Okay, let's look at actually some of what's priced in terms of Fed rate hikes. And this is probably, a longer-term issue, but it's linked like this to energy and inflation. Does it change the path forward for the major central banks?
I think it curtails the hikes. I think the Fed is going to see inflation and see it's not demand-driven inflation. Fed hikes should be designed to curtail excessive demand. The inflation that we're going to experience was demand, and it's going to come from supply issues right now. So you don't want a Fed aggressively tightening and tightening monetary conditions. So maybe reducing their balance sheet, they'll stop the purchases, but not wind down its balance sheet, be a little slower on hikes. The 50 basis points seems to be off the table. It was possible in March now.
All right, Patrick, thank you so much. Patrick Armstrong there, Purimi Wealth Chief Investment Officer, stays with us, and we'll continue the conversation with commodities. I want to also ask Patrick about BP. Of course, this is as Russia faces isolation. We've seen capital controls coming from Russia. We'll see where that ends. We'll also speak to Jeff Curry, Goldman Sachs Head of Commodities Research, later this hour. This is Bloomberg.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
As a company grows, there are more challenges. What do you worry about the most?
The market opportunity for us is enormous, and so our challenge is to continue innovating, driving, and pushing ourselves every single day to go after the most attractive profit pools in this incredible global beauty and wellness market.
Welcome back to the Open, everyone. 22 minutes into European trading day, and this is a picture across the board. European stocks down 1.2%. The CAC 40 bearing the brunt of that, down 2.2%. Equities sliding, sovereign bonds rallying, commodities, including oil, actually surging. And it's very clear we're seeing some of the havens, rallies in the dollar, gold and treasury underlying this demand for havens. The euro, actually interesting, following on worries about risks to Europeans' economy, which relies so heavy on Russian gas and oil. Now let's check in on some of the stocks and sectors on the move at the open with our Danny Berger. Hi, Danny.
Hi, Francine. There are a lot of interesting things happening underneath the surface. I will start with the sectors, which doesn't show the complete story, especially looking at energy. As a whole, the sector performing better than most. I should say every sector in Europe down except for utilities this morning, a clear play for safety. So energy down 0.7%. You have commodities moving higher, which of course benefits energy companies. But then you have this question of selling stakes of Russian exposure, which BP certainly is a factor. I might as well just point out BP price, while I have it next to me, down 4%. Selling Rosneft could take a huge write-off for this. There's a big question as to who will actually buy it. Banks are also down more than 4.5%. It's not just banks with Russia exposure. It's the fear of contagion. Will we see the plumbing of the financial system seize up as there's been freezing out of Russian banks on the SWIFT messaging system? Does it go two ways? Those sanctions, a two-way sword. Travel and leisure, a lot of airlines falling. BA parent IAG falling 3%. Russian aircrafts cannot fly into Europe. So Raiffeisen Bank, that's this one over here. That's one with a large Russian exposure, down 16% rather. And BAE Systems, Francine, one of the few stocks to rally our defense stocks, given Germany ramping up their spending when it comes to defense.
Danny, thank you so much. Our Danny Berger there with some of the movers and some of the sectors we're watching. Now, still with us, Plurimi Wealth Chief Investment Officer Patrick Armstrong. Patrick, one thing that we haven't really touched on is the relationship between Russia and China, and whether actually, this is what we've seen at the margin, the impact yuan, and whether there will be that transfer of wealth from one country to the other.
Yeah, that's a good question. Russian central bank's going to be impeded in what it can do. China has been friendly to it. It may be a market where it can use its gold to China to get liquidity that way. China has a lot of leverage over Russia right now. It'll be interesting to see if it wants to use that right now or save that for another day. But that's Russia's endgame, is relations with China right now, given that relations with the West are completely severed.
So what does it mean as we try and freeze out Russia, which it seems like a huge economy, and it is. I know you're very cool-headed about this. Do you change your portfolio at all?
I think the risks that have always been there in emerging markets and investing in countries that aren't necessarily aligned with the Western view of the world, you do have risks. So there's sanctions put on Russia. There's going to be counter-sanctions put on the West. In World War II, you saw United States say, if you're Japanese, you can't hold American assets, and those are null and void. Russia could say you can't receive a dividend from a company in Russia if you're a foreigner, or China could move to those kind of things. So I think geopolitical risk, we had a peace dividend where multiples went up and you felt safe investing anywhere. Yeah. Everyone's reassessing that right now. You've seen, I think, Norway, their institutional fund said they'll be redeeming Russian assets. Yeah. And it's there's more risks than there were a few years ago. But
you stopped buying VIX?
We owned VIX the day that Russia said they were removing their staff from the embassy in Kiev. We closed that position the next day, basically on a sell the news type thing. I think right now it's an extreme tightening of financial conditionings in Russia. I don't think it's going to have massive knock-ons in the short term to markets. Long term, it's going to have stagflationary impacts around the globe.
All right, Patrick, thank you so much. Patrick Armstrong there, Plurimi Wealth Chief Investment Officer. Now, coming up, the commodities market is thrown into disarray as it reacts to fresh sanctions from the West on Russia. We'll speak to Jeff Curry of Goldman Sachs. This is Bloomberg.
It's almost the end of the year, but Bali is still quiet and empty. I am here in Kuta Legian, one of the main walking streets here that is used to be a tourist spot for beach, dining, shopping, but many shops here are still closed. Most of the outlets are either for rent or for sale as they have run out of business.
Saya kerjanya di sini udah lama, udah ada 10 tahunan di sini kerja. Masih sepi sih, nggak kayak dulu. Kalau dulu kan rame, sekarang ya ada, 1-2 itu ada. Tapi nggak kayak dulu, kalau dulu rame sekali. Sekarang paling dapat jualan ya 100, 120 gitu. 200 ya. Kalau dulu sih ya nyampe dah 1 juta, 1,5 itu nyampe dapat jualan. Bisa sampai 2 juta dulu. Sekarang nggak pernah lagi dapat segitu, sama aja. Belum ada turis ke Bali, masih ya domestik aja.
While Bali has reopened its borders for foreign tourists since October, they're still not coming in. Many international airlines are yet to reinstate their direct flight to the island. Balinese people here really hope they can see more people from Australia, China, and Europe to come visit next year.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Welcome back to The Open, everyone. We're 30 minutes into the European trading day. Here are your top stories. Ukrainian and Russian officials prepare to meet at the Belarus border hours after President Putin put his nuclear forces on higher alert. The Russian central bank more than doubles its key interest rate. Global stocks slump, oil surges, the most since 2020, as Western nations target SWIFT and Bank of Russia assets with new sanctions. The ruble plunges. Plus, commodities surge and energy companies, including BP, look to divest from Russian businesses. We'll speak to Jeff Curry, Goldman Sachs, head of commodities research, shortly. So this is the picture for the overall indexes. A lot of the price action that we've seen overnight, certainly in some of the Asian markets, now stabilizing. European stocks down some 1.2%, with a lot of the brunt actually coming from the CAC 40. The DAX, a close second, down some 2%. The focus on the sectors, and of course, this is not what we're seeing overall, because if you're in energy and you're expected to see the price of your commodity go up, then you're going to be up, which is why utilities are gaining some 0.8%. But overall, equities sliding, sovereign bonds rallying, commodities, including oil, are surging. And again, it's all about what happens next if the sanctions bite, and of course, what Vladimir Putin's next move is. Now, oil surging, soaring, as energy and commodities were thrown into disarray after Western nations unleashed more sanctions to isolate Russia following its invasion of Ukraine. Goldman Sachs raised its one-month forecast for Brent crude to $115 a barrel, up from $95, and says only demand disruption can stop oil shooting even higher. Now, for more on this, we're joined by the global head of commodities research at Goldman Sachs. He's Jeff Curry. Jeff, great to have you on such a complicated today to try and understand the nuances. Now, how much disruption do you actually see to physical commodity trading, even without sanctions, from lack of ships, lack of finance, and even this moral revolution?
You know, our base case is 2 to 4 million barrels per day disruption, which is sizable. And let's not forget, 5 million barrels per day of supply come out of the Black Sea. And then given the operational risk after that coal ship was hit by or struck by a missile on last Friday, the willingness of insurers, charters to take boats up there has diminished tremendously. And then we overlay legal risk of potential sanctions. The other important point about this right now is that energy sanctions are back on the table from the U.S. administration yesterday. You know, whether or not they employ them or not is immaterial, because the bigger issue here is it's the risk of them that call it shadow sanctions that are creating, you know, the inability of even Chinese trade houses to provide commodity finance. So not only the Chinese not doing it, the Western banks are not doing it, and then the difficulty in either, you know, grain ship, metals, or even oil right now is significant. So the pipeline flows are going. It's the seaborne trade that is affected here.
Jeff, we're just getting some breaking news. Ukraine saying that the delegation has arrived at the site for talks with Russia, and they also confirmed that the defense minister of Ukraine, Mr. Rezninov, is part of the delegation. So if we go back to what you were just explaining, Jeff, I mean, how much do these sanctions and what specific sanctions are actually curbing the ability to move raw materials around?
It's not the specific sanctions yet. We have no clarity yet on what sanctions are likely to look like. It's that uncertainty and lack of definition in sanctions that is creating the, call it shadow sanctions, that are creating the disruption side. But it's not just the sanction risk, it's operational risk. Let me ask you, who is going to send a ship up in the Black Sea, given what you've seen with that coal ship on Friday? But I think, in terms of thinking about sanction risk here, what is really different is the potential for, central bank asset freeze. And if that were to happen and they freeze all G7 currencies, the willingness of Russia to export anything beyond what they import starts to drop significantly. Even if they do a carve out for, let's say, spare bank in terms of executing energy trade, the key point here, if they freeze those assets inside the central bank, you see that balance between imports and exports. And then there's a lot of question mark on, what the willingness of either side is to take that kind of risk.
But Jeff, do you see, the possibility of Russia just retaliating and, point blank, just cutting gas off European?
I don't want to get into speculation of those kind of events, but I just want to emphasize that at this point right now, unintended consequent risk, meaning a pipeline outage or something like that, is extraordinarily high. And this is on top of difficulty in getting the seaborne trade up and running. But I think the focal point right now needs to be on the seaborne trade, because that's where the problems are today. We'll leave a big question mark around pipeline flows.
But when are you expecting that then to get easier?
What's the question? What's to get easier?
So the seaborne trade, when are you expecting that, if we don't have extra sanctions and actually energy has been carved out, do you expect that to ease off a little bit? So
yeah, it should, but it's going to take time. It's going to take time to do it. And let's put it into context. It's 5 million barrels per day of supply out of the Black Sea, and it's the operational risk too. So even if they do the carve out, if hostilities continue to increase in the region, it just becomes that much more difficult to get the oil out. If you use something like the Iraq War back in 2003, the outage was somewhere around 3 weeks, and that war was very quick. So we're talking 5 million plus barrels per day, but the total amount of exports is 7.3. This is an enormous amount of oil that has the potential to be disrupted for potentially weeks.
So do you expect the IEA to actually release, stock release, and how big and how soon?
The recent noise out of the administration would suggest, an additional release of 50 million barrels per day. But here is the point. That 50 million barrel per day release from back in November of last year, only 1/3 has been taken so far. Let me repeat that. Only 1/3 has been taken thus far. So, you got to finish that tranche before you can start talking about another tranche.
And so what does that mean is there any chance that actually we're going to see a surprise at the OPEC meeting on Wednesday?
If you listen to the rhetoric coming out of OPEC+, they've been very clear in the transparency of the increases that should be expected of around 400,000 barrels per day per month. So until we hear otherwise, I think you continue to expect those kind of increases. The only last other option in terms of supply increases would come from Iran, a deal from Iran. But even last night, the news of that says it's being pushed off into March. You heard last week people were saying tomorrow and the next day on Iran. I just go back, if it was such a done deal, why hasn't it already been announced? And the higher oil prices go, the lower the probability of reaching a deal with Iran. And even if you got a deal with Iran, you're only talking 500,000 barrels per day of extra supply, which could take months before you actually saw it. Now, I will say there's 80 million barrels of floating storage that could be used, but that's also going to take time to be able to reach market. So, there are options available here. However, given the magnitude of a potential disruption, they still don't look that significant to be able to manage this, which is why we took our price forecast up to 115.
Yeah, 115 with a lot of volatility, Jeff. I mean, how are you expecting that to evolve?
Yeah.
How much
absolutely.
volatility?
I mean, the volatility around this should be massive, like we've seen over the course of the last several days. You know, we went up to 105, came crashing back down to 96, and we're back up to 103 today, back down to 101. So volatility will be significant. Let's not forget what's driving that volatility is low inventories, lack of spare production capacity, strong demand around the globe at this point right now. And this is keeping markets extraordinarily tight and very much too exposed to any potential disruption, which is what's generating that volatility.
Jeff, I'm getting quite a lot of questions from viewers, and actually thank you everyone who's writing in and who's watching us on this important markets day. But this person, Jeff, is writing in saying, look, what's the probability of oil going to 85 as the Iran deal kicks in, and possibly Saudi stabilizes the markets with, you know, Russia-Ukraine cooling off? I know there are many, many ifs, but what kind of probability do you attach to that?
You know, in terms of looking at it, it's definitely a non-trivial probability. And the point we like to say, there's a wide range of outcomes over the very near term. But let's just look at this event. This event is decidedly bullish oil, medium, longer term. What do you think the probability of Russia reaching its OPEC plus quota in June now is? It's pretty low because the ability to access capital, make investments to get production up. The bottom line, any way you slice or dice it, this reinforces that longer-term structural bull market in commodities. Just think about, you know, at this point right now, you have a big idle pipeline, the Nord Stream 2 pipeline. This is that redundancy and the deglobalization factor that's leading to, you know, resiliency in supply chains, which is just raises the cost of everything.
Jeff, given, you know, the plus in OPEC plus is Russia, where does it leave the alliance?
Yeah, you know, at this point right now, I don't want to speculate on the politics of OPEC and OPEC plus, but, you know, I think at this point right now, which is why so far the messaging is, you know, steady as she goes in terms of the production increases. And until we hear further, I think that's the assumption you need to make.
What's the impact of the BP Rosneft exit?
I think it just underscores the shift in mentality of the West yesterday afternoon in terms of their willingness to start thinking about how they're going to clamp down on energy. Before yesterday, you know, even going back to last Thursday and Friday, it was very clear from the West energy was off limits. But what happened yesterday is a clear escalation in potential sanctions, and the fact that energy now is being a industry that is being reconsidered as being off limits.
But so, Jeff, are we going to see more deals like that, or, you know, people trying to avoid at all costs that reputational risk of doing business with Russia?
I think that it goes into that whole point about, you know, operational legal risk and so forth, creating the frictions in trying to keep trade going. Look, by the way, I want to emphasize this is not just about oil. It's about grains. Look where wheat prices are. It's about metals. It's about copper. It's about aluminum. It's about all the different commodities right now. And you know, the inability to move these key commodities out of the largest commodity producer in the world. So, you know, this is a significant event. And let me also make the point that, you know, the times that we have seen central bank, you know, asset freezes, we haven't seen it of this on an economy this large. You saw it in Iran in the late 70s and early 80s, and to a lesser degree in places like Venezuela and North Korea. But this is a significant event. And again, we don't really know what the potential impact here. We don't even know what it's potentially going to look like yet. So the risk here, I think, are significant.
Jeff, thank you so much, as always, for joining us. Jeff Curry, their head of global commodities research at Goldman Sachs. Now, coming up, we look at what's happening on the ground as officials plan to meet on the Belarusian-Ukrainian border, the outlook for diplomatic resolution, and much more with Olga Onuch, professor of Ukrainian politics at the University of Manchester. This is Bloomberg.
What do you think is the impact of the Prime Minister on the market?
As Mr. Suzuki, who is the Financial Services Minister, he mentioned at his own press conference, and share buybacks is widely used to return profits to shareholders and improve ROE. And how to share out the profits from growth is, totally the decision of the management of each company after carefully taking, all the stakeholders into consideration. And I believe Mr. Kishida has a quite cautious stance on the uniform regulation of share buybacks. And I think because he is giving a consideration to each company's, individual circumstance and decisions.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
Welcome back to the Open, everyone. 44 minutes into the European trading day, and you can see European stocks down some 1.7%, the DAX down 2.3%, the CAC 40 actually paying the brunt of some of these losses and flow into havens, with the CAC 40 down 3%. Now, Ukraine officials have arrived to meet Russian counterparts at the Belarus border. That's after Vladimir Putin put Russia's nuclear forces on higher alert. Now, Ukraine's Volodymyr Zelensky has voiced skepticism that the talks would yield results, but said he's willing to try. Meanwhile, the U.S. and its European allies stepped up their response to the conflict. They've announced plans to sanction Russia's central bank and cut off various Russian lenders from the critical SWIFT financial messaging system. Well, joining us now is Olga Onuk, a senior lecturer in politics at the University of Manchester. Olga, thank you for joining us. Given the severity, the swiftness, but also the deepness of some of these sanctions against the Bank of Russia and on some SWIFT, shutting down those 5 banks, what are you expecting Mr. Putin's reaction to be?
Well, I think the issue is that we cannot predict Putin's actions. We do see that he miscalculated quite severely. I believe he did not expect for the West, Europe, North America, and G7 and beyond to be so coordinated, so united on the sanctions. In fact, nearly copying and pasting in each case. I certainly think that his military underestimated their understanding and intelligence around the capacity of the Ukrainian army, but also just simply the resolve of the Ukrainian people. And we know this from studies. This is a citizenry that is extremely attached to their homeland, regardless of the part of the country they live in, regardless of the language they speak. And of course, we're seeing that play out in videos that are coming to all of our homes. So we can't predict what Putin will be doing. Everyone in Kyiv does think he will now try to escalate further, use further airstrikes, because his tactics on the ground are not working.
Olga, escalate to what point? I know it's extremely difficult, and we're also talking about human life, so it's extremely difficult to really extrapolate and think of worst-case scenario. But given the sanctions and given this seems to be taking longer, I mean, does this, if it drags on for much longer, will he lose Russian citizens? And does he even care about that?
I do think Putin does care about his popularity back home, but he lost the Russian citizens quite a while ago. We know from one of the most reputable surveys about the about the Russian population, called the Russian Election Study out of Cornell University. They found that only 8% of the Russian population supported any aggressive action towards Ukraine in December. Now, seeing some of the coverage of what has happened, we can only assume that this is even shakier. Of course, there's some people that are going to rally around the flag, as we say in political science, and have a national sentiment. This is a very small part of the population. Thousands of people are signing petitions. People are risking their lives and protesting. He has lost his people. this makes him actually a very dangerous and isolated figure that I'm certain the world leaders are extremely worried about.
Olga, is there anything that actually, could happen to make him de-escalate? I don't know whether it's the oligarchs and extra sanctions on them, or this, whatever happens will need to be played out over a number of weeks.
In terms of de-escalation immediately, I mean, we're watching what's going to happen today on the border. Reznikov and the rest of the Ukrainian delegation are there to meet. We'll see if there's anything in good faith being offered that is reasonable. I was actually skeptical that the Ukrainian government would agree to sanctions directly with Belarus or on the borders with Belarus. That's where the tanks are coming from, and of course with an aggressor with violence ongoing, but they have, because they truly do want to prevent the loss of lives. I think we should not count on a de-escalation. We should not count on this not being an extremely long and protracted conflict. We should expect further sanctions, and we should expect the damage to the Russian economy and beyond in those markets that are associated with the Russian economy to be hit for a prolonged period of time. This is, of course, not something that your viewers want to hear. This is not what ordinary citizens living in Western Europe, living in North America, living in Australia, elsewhere want to hear. But this is now a moral stance that the world is taking against unprecedented invasion of a peaceful European country.
Who is still actually friends with Russia and will support Russia at the moment? I know there are question marks over China. I mean, apart from Belarus, but is there any major power that if China's no longer friendly and also won't help them out economically, does that change the way Putin thinks about things?
Yeah, I think China, everyone here is looking to China and see what moves they make, what discourse they use in the public sphere. It's a little bit of an unknown. China hasn't obviously shown support for Putin in any way and has opposed the infringement of Ukrainian sovereignty publicly. I think this is positive for Ukraine and its allies. But I don't think we're out of the woods yet. We don't know what deal Putin might try to strike with China. We don't know what China would be willing to go for in this case. As far as other possible allies, I don't think Russia has that many allies that when we're talking about major markets, major economies, large countries, there is a question around how India has behaved in the Security Council. So people are keeping an eye out there. Turkey is a next door neighbor, and Turkey is a NATO member. And although in the past, maybe Erdogan and Putin saw a little bit of themselves in each other, I think Erdogan is pretty clear that his population would in no way support any closer ties or support for Russia. And Turkey has signaled that they are very much a NATO state, very much on the side of NATO and Ukraine and its allies.
Olga Onuk, thanks so much for joining us, senior lecturer there in politics at the University of Manchester. Now, much more coming up on the markets, of course, on Russia, Ukraine. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Welcome back to The Open, everyone. We are 54 minutes into your European trading day, and you can see the CAC 40 down some 3%. A lot of the focus on some of the havens that we're seeing, commodities on the move. We just had a fantastic conversation with Jeff Curry of Goldman Sachs saying, look, it's really the seaborne and the coming and going of raw materials that's a concern more than the actual sanctions. Now, we'll have plenty more on the markets, but now let's get straight to the Bloomberg First Word News with Angel Feliciano. Hi, Angel.
Hi, Francine. Russia's central bank has more than doubled its key interest rate from 9.5% to 20%. It's also banned brokers from selling securities by non-residents in a bid to shield assets from Western sanctions. The move comes after the U.S. and EU agreed to penalize the central bank, potentially blocking access to much of the government's $640 billion of reserves. Earlier, Western countries agreed to cut off several Russian lenders from the critical SWIFT financial messaging system. Ukrainian officials are meeting with their Russian counterparts for talks at the border with Belarus. This hours after President Vladimir Putin put his country's nuclear forces on higher alert. In other recent developments, Belarus is reported to be preparing to send troops into Ukraine to help its ally Moscow. The EU has agreed to send 450 million euros of military aid to Ukraine for lethal weapons. Foreign Policy Chief Joseph Borrell says the package may include supplying fighter jets to the Ukrainian Air Force. It's the first time the European Union has ever supplied arms to a country at war. Member states that don't want to contribute lethal weapons will be able to abstain or make a parallel contribution of non-lethal aid. Chancellor Olaf Scholz has announced plans for a massive boost in German defense spending. The historic policy shift triggered by Russia's invasion of Ukraine will see Germany channel 100 billion euros this year into a fund to modernize the military. Scholz also committed to spending at least 2% of GDP each year on defense by 2024, in line with NATO target that Berlin has consistently failed to meet. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Francine.
Angel, thank you so much. Angel Feliciano in London. Now, we're also getting some live pictures of the Human Rights Council over in Geneva. We're just listening to the UN Secretary General, Mr. Guterres, speak. Now, the Ukraine also said that a delegation led by its defense minister had arrived at the border with Belarus. We'll have the impact on the markets shortly. This is Bloomberg.
Is this going to primarily be chips for your own business, or is this going to be more centered around the foundry business and external customers?
It's going to be both. And what we said today is we're announcing 2 fab modules. It's a large location, 1,000 acres, because I'd hope to build out a full 8 fabs or more on this location. And if we do that full project, it would be $100 billion over the course of the decade or so. So a massive project. Initially 3,000 jobs, 7,000 construction workers, supply chain, et cetera. I mean, this is just fabulous. And the products will be our most leading edge chips. So as we said, this will be the angstrom era when we're going to 2 nanometers and below into the angstrom era. So it'll be the most advanced chips, potentially the largest manufacturing location in the world. We'll use its output for our internal products, but also for those of the foundry customers as well. So it's going to cover both.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
How difficult was it to go to investors and say, invest, give money, put money into a travel tech company within this environment?
It wasn't that difficult because TravelPerk is doing much, much better than the rest of the industry. In fact, we are at the moment growing at 4 times revenue of pre-COVID numbers.
I'm ordering the defense minister and chief of the general staff to switch the Russian army's deterrent forces onto a high alert mode. I don't believe that much in the result of this meeting, but let them try.
Important Russian banks will be excluded from the SWIFT system.
This is Bloomberg Surveillance, Early Edition with Francine Lacqua.
Good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London, and here's what's coming up on today's program. The Bank of Russia hikes its key rate to 20% from 9.5%. Moscow introduces mandatory FX sales for companies. Vladimir Putin places Russia's nuclear forces on high alert. The Ukrainian president is skeptical about planned talks at the Belarus border, but he's willing to try. And equities slide. The ruble falls. Uncertainty reigns the markets as the West isolates Russia. Now, first of all, let's check on the markets. And actually, we're seeing the European stock 600 down some 1.7%. The main focus, of course, is on the CAC 40. Just a short while ago, down some 3%. If you look at U.S. dollar, there's definitely a weaponizing of the dollar. But actually, this time, it's a little bit different to what we saw from 2014 when we had the sanctions after the annexation of Crimea, because it's really a lot of the G7 countries, including euro-denominated debt from Russia, that will be impacted. Bitcoin, 38,337. If you look at what Europe is, I mean, if you look at the regions overall, I wonder whether the uncertainty and the volatility that we saw in the markets will continue into U.S. hours. But certainly, if you're dependent on Russia, like Germany is down some 2.4% for the DAX, you're going to be more impacted than maybe the FTSE, where you're down by 1.5%. Again, this changes quite quickly, so I wouldn't read too much into it right now. But the biggest loser is the CAC 40, down some 3.2%, led by losses by Renault, extremely important because of its relationship with Russia. And also here in the UK, BP down significantly after said it would sell its stake in Rosneft. Now, the Bank of Russia raising its key rate to 20% from 9.5%. The central bank points to cardinal changes in the economy. Now, the move comes as Ukrainian officials agree to meet Russian counterparts at the Belarus border only hours after Vladimir Putin put Moscow's nuclear forces on higher alert.
Dear colleagues, you see that not only are the Western countries engaged in unfriendly actions towards our country in the economic field. I'm talking about the illegitimate sanctions everyone knows about very well. But the top NATO member countries' officials allow themselves aggressive statements towards our country as well. That's why I'm ordering the defense minister and chief of the general staff to switch the Russian army's deterrent forces onto a high alert mode of combat standby duty.
Now, Russian forces have advanced into Ukraine's second largest city, and reports say that Belarus is preparing to send soldiers to Ukraine. The Ukrainian president, Volodymyr Zelensky, has voiced skepticism about the proposed talks.
I'll say frankly, like always, I don't believe that much in the result of this meeting. But let them try so that not a single citizen of Ukraine has any doubt left that I, as president, used every chance to stop the war, even a small one.
Well, the events over the weekend and so far this morning prompt us to ask three main questions. One, how will the SWIFT ban play out? What next for China-Russia relations? And how all of this, including potential sanctions on Russia's central bank, actually affect the inflation outlook. We'll be talking to our reporters across Europe for the very latest. Emma Ross-Thomas is here in London on commodities. Natalia Drozdiak is in Brussels on the EU sanctions. And Christina Kino is here with more on the market reaction. Now, let's begin with our reporter in Moscow. The U.S. and allies significantly ratcheting up the sanctions against Russia over the weekend. What impact are we seeing and what response is expected from Russia? I'm not sure we have actually our reporter in Moscow, so we'll get to that in just a second. Emma, what does it mean for commodities? I don't know whether it's the sanctions that are hurting commodities that are continue increasing, or it's just because why would you take a tanker or rent out a tanker right now to move things around given these sanctions, and we're not sure how it plays out?
Yeah, I think that's right. I mean, remember that we did have the White House yesterday saying that energy sanctions did remain on the table. So even though there has been a carve-out for energy transactions, I think people have still got sort of front of mind that things could escalate. I mean, European gas was up as much as 36% this morning. And that's because, you know, there is real fear that the retaliation to sanctions could be cutting off gas from Russia. Now, obviously, we've had nothing official about this, and this is just speculation in the market. But that fear is what's driving prices. I mean, flows are continuing. They're even up, actually. And European companies are racing, slightly awkwardly, are sort of racing to buy even more of that Russian gas. But that fear that there could be retaliation to those sanctions is sort of front of mind. Oil obviously is up. What we've been, you know, we've been sort of hearing, haven't we, that the US wants a coordinated reserves release. We know that EU ministers are going to be talking this afternoon about their response to that. We had the UK yesterday as well saying that it was considering it. What we've heard from the White House is that they want to coordinate it in such a way that it would have maximum impact.
So, Emma, and you know, a reminder to everyone, this is not only oil and gas. This affects, of course, the broader commodity spectrum.
Yeah, absolutely. In fact, I mean, you were talking about inflation in your intro, and I think we really need to keep an eye on food, don't we? I mean, we've all been getting excited about oil and gas, but Ukraine and Russia really is the breadbasket. And one of the regions that could be most vulnerable, actually, to Ukrainian ports being shut and that wheat not coming out is, in fact, the Middle East. We've got an auction in...
Emma, very quickly on BP. I mean, first of all, it's $25 billion. Is this a hit, or are they going to try and sell it off? And who would buy it? The Rosneft stake.
Yeah, so I think the fact that they have said that the hit could be up to 25 billion tells you all you need to know about the prospects of a sale. BP hasn't actually said they're trying to sell it. They haven't launched some kind of sale process. Very few potential buyers spring to mind, and I think that's probably why they're flagging that hit of 25 billion.
All right, Emma, thank you so much. Emma Ross-Thomas, of course, in charge of our commodities coverage. Let's also get to our reporter in Moscow. We're looking at live pictures of the president of Ukraine talking, I imagine, about some of the things that we're seeing at the border with his defense minister arriving just about 10 minutes ago. Let's get straight to our reporter in Moscow. We've seen some of these sanctions hit Russia pretty hard. We've seen some counteraction in terms of capital controls, in terms of the interest rates going up at 20%. What's been the impact on the economy so far?
Well, the ruble has been falling rapidly this morning, and it certainly seems that there is some effort by the central bank to limit that. But nonetheless, there's been very heavy decline this morning. As you mentioned, some measures have been taken in terms of capital controls, requiring Russian companies to convert 80% of their export revenues. It's not as bad as it was feared, but it's certainly very serious damage.
What kind of impact can we see? And it's unclear to me and to many people on the markets, actually, the relationship between Russia and China. Because if these sanctions are going to have effect, then if China steps in and actually helps them, it's not going to have the effects that the West wants.
Well, clearly that has been, a major effort by Russia to try and diversify, including its assets held by the central bank, and in terms of trade and investment. But there's no doubt about it that the sort of decoupling that we're going to be seeing now from Russia and Western financial market cannot be compensated by China.
Okay, thank you so much, our reporter there on the ground in Moscow. Let's also get to Natalia to talk about some of the sanctions and exactly, if you look at the SWIFT sanctions, but also the freezing of assets of the Russian central bank, Natalia, I mean, combined, we've never really seen such huge sanctions from the West.
Yeah, that's absolutely right. Over the past week, we've seen an array of increasing sanctions, and over the weekend, that's been a major step forward from the West, both with the SWIFT cutoff and with the central bank cutoff, as you mentioned as well. SWIFT, they've been discussing this as a nuclear option in large part because European countries need this as need a system to pay for their oil and gas to Russia. So that's why they've held back, but countries took that step forward over the weekend.
So why were EU leaders and also the US initially reluctant to some of these measures?
Well, another reason, they needed this system, as mentioned, to pay for oil and gas, but another reason is that they were concerned that doing this could inadvertently promote alternative systems, including Russia's own version of SWIFT. But then, as you know, the ferocity of Russia's assault really rallied the public support in the West to do more. So that's why we saw a shift in tide over the weekend.
All right, thank you so much for joining us. Let's also get straight to Christine, our markets editor, here with me in London. And Christine, it's very clear that the central bank action has supported the ruble somewhat. What more can they do?
But yeah, your friend, that is the big question, Francine, because again, I think we spoke about this earlier. This really is like pushing a boulder uphill at the moment in terms of the central bank trying to counteract the really negative and widespread momentum in the ruble at the moment. There's so much appetite to sell at the moment. Traders are really just trying to get rid of their ruble assets, but it's been very difficult to make a market. There's not really a lot of people willing to buy it from them. And so you really have to wonder how much more can the central bank do. We've understood that they are trying to introduce some kind of trading ban for the ruble. We're still trying to get clarity on how exactly they're going to implement this. But at the moment where we're seeing how price action is going, it really is having to, the central bank is having to continually adjust the band, it seems, because the ruble just keeps weakening and matching some of those offshore prices that we saw earlier today.
All right, Christine, thank you so much. Of course, our reporters across Europe looking at the various implications of this. Emma Ross Thomas, Natalia Drozdak, and Christina Kino with me on the market reaction in London. Now, we're also looking at live pictures of the Ukrainian president, Mr. Zelensky. We'll see whether he has an update on how the Russian border talks, or at least the border talks in Belarus, are going with Russia. Coming up, we'll also bring you more on the implications of sweeping Western sanctions against Russia, both for its economy and global markets. This is Bloomberg.
The U.S. has announced it's moving 8,500 more troops to Eastern Europe. If they're not being deployed to Ukraine specifically, why is that so important, and does that risk further provoking Russia?
Well, there's two things going on. So what the United States recently announced is that we are going to put 8,500 troops that are part of the NATO response force on high alert. That means they'll be ready to deploy on a moment's notice should we need those forces anywhere in Europe to protect NATO territory. In addition, the United States is also looking at possible additional moves that they might make to move U.S. force posture into Central and Eastern Europe. The reason we're we're looking at that is because a lot of the members in that neighborhood in Central and Eastern Europe feel concerned. And so we are looking at what measures we might take in the name of reassurance and deterrence.
Welcome back. This is Bloomberg Surveillance Early Edition. Equities falling, sovereign bonds rallying, commodities actually surging, and heightened uncertainty over Western nations escalating sanctions over the weekend on the Russian invasion of Ukraine. Now, to talk more about the markets, to talk more about the sanctions and the impact this will have on the broader economy, Peter Chatwell, head of multi-asset strategy at Mizuho International, and will also be joined shortly by Domitila Sagramoso, senior lecturer in the Department of War Studies at King's College London. So thank you both for joining us. Peter, when you look at some of the impact on the economy, for me it's unclear actually that the world economy is strong enough to withstand this. So it's unclear what the sanction means for a freezing of assets across the world. Are you confident that we can get through this without a major shock like we did in 2008?
I'm not convinced that we can get through. I mean, at least that as a tail risk is growing materially. And I can kind of see that there is this push, some sort of inevitability that we're trending in that direction. When I think about how the voters are going to feel about sentiment, the ability that they might feel that they are prepared to bear some economic cost to support what's taking place in Ukraine.
So, Peter, on the economy, and then I want to get to Domitila talking about the politics side of things. But when you look at the economy, what are the chances that actually Russia wakes up tomorrow and goes for a more aggressive invasion, at the same time just cuts off supply of gas and oil to Europe?
That's a cash flow concern for them. I'm not sure that they would have the resources to be that immediate with regards to sanctions which have just been implemented. But over, say, a 3 to 6 month horizon, I can see that as becoming a much more probable scenario than it currently is.
Domitila, talk to us a little bit, and this is the most difficult question I'll ask all day. I mean, what is the state of mind of President Putin right now? Does he escalate from this because he feels like he's losing, of course, ground on Ukraine, or is this Western fiction?
If you're referring to his economic reactions or reactions on the economic front, I think that he will try, as was explained, to sustain the currency. And as was mentioned by the previous speaker, I don't think he's going to cut off Europe immediately from gas supplies, not only because he needs the funding, but also because it would be really a very strong message to Europe. And it really would have such big implications that he doesn't know really what the result could be. But at the moment, it's very hard to see that Putin is acting in a very rational fashion. It is clear, and it has been clear now for many years, that he is very concerned and very sort of obsessed with what is happening in Ukraine and wants Ukraine to be integrated into Russia, either as a separate state that is fully aligned with Russia, or as integrating parts of his country into Russia. So this for him, in my view...
Yeah, go ahead, Domitila.
I think this, in my view, for him is really sort of lies at the heart of his national interests and of his state survival in the view that he sees Russia. I think he will fight really to the end to get control over Ukraine. And I think any negotiations that apparently seem to be taking place from the Russian perspective are only going to be on what kind of terms can we reach so that Ukraine becomes fully aligned to Russia. This is a very sad scenario, but having studied Russia and sort of the positions of Putin around this and the narrative that has existed for many, many years now, about the relevance of Ukraine to Russia in the imagined view of the Russian community and what we call the Russian world.
But so, yeah. Domitila, when you look at the relationship between Russia and China, I don't know whether China stands behind Russia, and if they don't, whether that means that Putin will de-escalate.
I think that Russia in this whole crisis plays a very important role because apparently last week there were pressures from China to Russia to negotiate a solution, find a political dialogue out of this. And the first cause for dialogue that existed, I think it was on Friday, I think they were really the result of Chinese pressure. Also, China is voting not in favor of Russia in the Security Council, it's abstaining. And that is very interesting. And today we're going to have a debate for the first time in many, many decades in the General Assembly. And that has also been allowed in part because there hasn't been really the Chinese veto. And what is more interesting is that the Chinese have said that they're not going to finance natural resources production in Russia. So this, I think, is really very, very important, that the Russians cannot feel that they can automatically rely on the Chinese. Now, the Chinese also need Russian energy resources. So they are like us playing a very fine balance.
Domitila, let me also go back to Peter Chatwell. So, Peter, is now the base case for the world economy actually stagflation? And how difficult will stagflation be for central banks to deal with?
I think that now is the base case, or if it's not the base case, it's certainly very growing and becoming very high in probability. And what the market is going to struggle to deal with is the fact that the central banks are going to find it very, very difficult to bail them out in this sort of scenario. So a stagflation scenario is one of the ultimate worst case out there, where, other than something more extreme like nuclear. And so this is a scenario where monetary policy may still need to tighten, even though growth is slowing, perhaps going into a recession. And this means that equity valuations, they're not just in line for correction. They have to completely change.
All right, Peter, thank you so much. Domitila Sagramosa from King's College London joining us, and Peter Chatwell from Mizuho International stays with us. Now, coming up, we discuss more markets with Peter Chatwell. We look at commodities, we look at some of the seaborne issues, and of course, we look more at these sanctions. This is Bloomberg.
Soaring energy prices and a short supply of key chemicals that produce synthetic fertilisers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertiliser helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down, the manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
that capital markets can really help the shift to sustainable and decarbonized global economy. What are you noticing in that as ESG is now the buzzword literally everywhere?
It is definitely the topic of conversation in most meetings I have with company CEOs, with investors, with industry groups. It's amazing.
From New York City.
Here in London,
in Sydney,
in San Francisco,
9 a.m. in Beijing and Shanghai. Good morning, everyone.
Have a great evening.
To recap the headlines.
You do not want to miss this story.
How are you thinking about those dynamics?
However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia.
This is Bloomberg Technology.
This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, we're looking at some headlines crossing the Bloomberg terminal. Swedish pensions agency is stopping the possibility to buy Russian funds. Now, again, a lot of these pension funds, and we see really the political outrage across the West, including private companies, for example, BP, saying they're selling their 20% stake in Rosneft, something that was really unexpected. That was announced yesterday. So to talk about the market's implication, we're back with Peter Chatwell, head of multi-asset strategy at Mitsuho International. Peter, we were trying to figure out whether there's something systemic in this. So if there's a freeze, we're at the moment talking about the Russian banking system.
Yes.
But what's a spillover effect to, for example, a U.S. bank or another big bank worldwide that could actually ensue a credit crunch? Like, what's the probability of something going deeply wrong?
Yeah, I think at this moment, with the SWIFT action and with the sanctions on the Russian central bank, that spillover effect is not, as we would term it, systemic yet. But what I see is that this is a wedge. You know, this is something that can be expanded upon in the future. And if it does mean that ultimate trade ties between Russia and the West, or at least Russia and the EU, become on pause, at least, you know, pause for a time, if not, you know, irreparably changed, then that's the point where this becomes systemic to a large degree, because then you've got to work out all of the exposure, second order and third order effects, and that's complex and, you know, for the market very taxing.
I mean, yes or no, is that where we're headed?
Well, I think that's a path of least resistance, based on how I see the geopolitics and I think the sentiment in the euro.
Peter, thank you so much. Peter Chatwell, they're head of multi-asset strategy at Mitsuho International. Coming up, we'll have more analysis of the impact of Western measures against Russia with Loïc Ferry. He's chief executive of Chanavari. That's coming up shortly, and this is Bloomberg.
At the Delhi airport, and behind me you can see SpiceJet 737 MAX aircraft. SpiceJet Chairman Ajay Singh earlier today said that Boeing is going to compensate SpiceJet in form of cash and aircraft. There's a big celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
The Bank of Russia hikes its key rate to 20% from 9.5%. Moscow introduces mandatory FX sales for companies. Vladimir Putin places Russia's nuclear forces on high alert. The Ukrainian president is skeptical about planned talks at the Belarus border, but he's willing to try. And equities slide. The ruble falls. Uncertainty reigns the markets as the West isolates Russia. Good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. So we continue tracking the markets here with your movers. The morning's biggest movers is our Danny Berger. Hi, Danny.
Francine, I do want to kick us off with indices because there's a lot of movement under the surface. But if you look on just a headline basis, it does suggest there's some orderliness to the sell-off. Utility is one of the few sectors in the stock 600 to move higher today. That in healthcare, but utilities by the most, nearly 1%. This is a very classic flight to safety haven type market. So it's not an outright panic. Now, what is faring the worst is stock 600 banks. Raiffeisen, Unicredit, SocGen, those are falling the most. They have exposure to Russian loans. There's a big question of how you offload that exposure. Of course, that valuation is deteriorating very rapidly. But of course, the concerns of wider competed equally in this crisis. Renewables doing extremely well today. Vestas Wind Systems, which makes wind turbines, up more than 10%. There's this idea that renewables will get heavy investments, try to remove the reliance on energy, oil and gas from Russia. On the flip side of that, you have companies like BP offloading their Russia exposure, falling. And finally, defense companies, Francine, surging today with Germany upping their defense.
Danny, thanks so much. Our Danny Berger there with some of the biggest movers. BP down 7%. Now, the Bank of Russia raises its key rate to 20% from 9.5%. The central bank points to cardinal changes in the economy. Now, the move comes, of course, as Ukrainian officials agree to meet Russian counterparts at the Belarus border, only hours after Vladimir Putin puts Moscow's nuclear forces on higher alert.
Dear colleagues, you see that not only are the Western countries engaged in unfriendly actions towards our country in the economic field, I'm talking about the illegitimate sanctions everyone knows about very well, but the top NATO member countries' officials allow themselves aggressive statements towards our country as well. That's why I'm ordering the defense minister and chief of the general staff to switch the Russian army's deterrent forces onto a high alert mode of combat standby duty.
Well, Russian forces have advanced into Ukraine's second largest city, and reports say that Belarus is preparing to send soldiers to Ukraine. Ukrainian President Volodymyr Zelensky has voiced skepticism about the proposed talks.
I'll say frankly, like always, I don't believe that much in the result of this meeting. But let them try so that not a single citizen of Ukraine has any doubt left that I, as president, used every chance to stop the war, even a small one.
Well, the EU has announced plans to sanction Moscow's central bank and cut off various Russian lenders from the critical SWIFT financial messaging system. Bloomberg's Europe correspondent Maria Tadeo is in Geneva for international reaction to the latest events. So, Maria, talk us through exactly that, the package from the EU that really had teeth. What does it mean for Russia, and what does it mean for the rest of the international community?
Yes, Francine, and we're here in Geneva because today there was supposed to be a United Nations meeting. Sergei Lavrov, the Russian foreign minister, was supposed to participate, but actually we hear he's not going to be able to attend because, as you know, the European airspace is shut to Russian planes and Russian registered flights. It's also a problem for Mr. Lavrov because he himself is personally sanctioned now by the European Union. So that gives you an idea of the real impact this is having already. Now, when you look at the package that was approved yesterday, which European officials say it's the biggest they've ever had when it comes to a single country. Well, it touches pretty much everything. We know the economic aspect of this, shutting Russia out of the SWIFT. You have the central bank, the top European diplomat, Josep Borrell, saying that 50% of Russian reserves are going to be frozen because right now they're held in G7 jurisdictions. You also have the humanitarian aspect of this. We know there's a lot of people, particularly women and children, that are leaving Ukraine. And on top of this, a package against what the European Union says is misinformation. Russia Today, Sputnik, all of this they believe is part of Vladimir Putin's war machine. Again, the other aspect to factor here is also the military. We're seeing the European Union put on the table 450 million euros to finance lethal weapons for Ukraine and another 50 for fuel. Now, European official yesterday, Francine, told me the reason why this is happening is two things. Germany has really had a big change of heart, and then two, the Ukrainian President Zelensky has shown that he can fight and keep his people united. At this point, then, if Ukraine has decided to resist, the European Union says they have a duty to help them.
Maria Tadeo in Geneva. Thank you so much. We'll have plenty more from Maria throughout the day. Now, we're also joined by Loïc Ferry, Chief Executive Officer and Co-Chief Investment Officer at Chanavari. Loïc, thank you for joining us. I mean, you're extremely interesting to speak to because of all of your various ways that you're invested in Europe and elsewhere. First of all, is there a danger to the global financial system because of these sanctions? Or given it's 9:34 London time and we haven't seen anything too ugly happen, it should be okay for the stability of the system?
So I think we should always stay optimist, right? But obviously there is a situation today where we are a little bit in unowned territory, and I think that's also the reaction of most of the investors today. I think what we can say is that obviously Putin has been trying to demonstrate that Ukraine should remain within the sphere of influence of Russia, and I think if anything, he has justified the past. He has reminded everyone why in the past 30 years, everyone, NATO included, has been spending on military defense. I think today there is a front, a unified front. I mean, what will happen in Ukraine and the consequence on the global economy is still to be seen. However, the intrinsic ties between, obviously Russia, Ukraine, and especially the banking system in Europe is still an area of concern.
And I was going to ask you about this. I mean, can you really isolate and shut out the 11th biggest economy in the world, the size of Russia, G20 countries with all of its interlinks to China and the West, and not go through stagflation?
Yeah, I mean, we just talking, for example, about the expected impact on oil price, which we've seen already. I mean, obviously now some people are forecasting oil, in the 130 to 150 range. We could see last Friday that the Brent Ural differential, which is usually between 0 and -3, was trading at -11, and no one was willing to buy that oil coming from Ural. So obviously, I mean, there's going to be a long-term impact when it comes to spikes of commodity prices. I mean, we're talking about 2, 3, 4% global GDP impact, with the surge of commodity prices. There's also CPI component, inflation, obviously. Some are forecasting 3 to 4% direct impact just by the rise of oil. So obviously, all those is the direct prices, but there's also the impact on the logistics and supply chain disruptions. So obviously, the links and the fact that we're global economies are facts, and it will take months to get back to a normal environment.
I mean, is there a danger that we're underestimating something seizing up? So a big payment not being made to someone and actually, reliving the 08 crisis?
I mean, before talking about crisis and everything, I'd like to have also some consideration for the Ukrainian and the Russian people, because most of those people today are suffering the consequences, including Russian people, of a leader that has gone clearly off path, right? So I think what is great about those sanctions is that they're trying to inflict significant damage and pressure, and the adequate pressure for that leader to come back. I just hope that he's not going to play an unfortunate poker game that may end up in much more nasty consequences.
Loic, thank you so much. Loic Ferry, their Chief Executive Officer and Co-Chief Investment Officer of Chanavari, stays with us. Now, coming up, we'll also analyze what the Russian central bank's move to more than double its key interest rate could mean for the Russian economy and the broader region. We continue our discussion with Loic Ferry. That's coming up next, and this is Bloomberg.
呢，为开春的时候，为各国运动员和随队官员提供热情周到的服务。
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, oil soaring as energy and commodities are thrown into disarray after Western nations unleashed more sanctions to isolate Russia following its invasion of Ukraine. Goldman Sachs raised its one-month forecast for Brent crude to $115 a barrel from $95 and says only demand disruption can stop oil shooting even higher.
It was very clear from the West energy was off limits. But what happened yesterday is a clear escalation in potential sanctions and the fact that energy now is being an industry that is being reconsidered as being off limits.
To talk more about the markets, so we're back with Loic Ferry, Chief Executive Officer and Co-Chief Investment Officer of Chanavari, and also Bloomberg Intelligence, Damien Sassower, joins us from New York. So thank you both for joining us. Damien, first of all, as an emerging market expert, can the Russian economy weather this, or could it spill over and freeze the global system as a whole?
Well, I think it's a function of time, right? I don't think we're going to freeze altogether anytime soon, Francine. I mean, certainly we talk about the reserves that the central bank has built up, despite the fact that much of it will be off limits, or half of it, 300 billion, will be off limits to it. I think really at the end of the day, just taking a step back, if you just look at all of the money market indicators that comprise any financial conditions index in the world, you look at dollar-yen 3-month cross-currency swaps, 29 bips to negative 64 bips overnight. You look at FRA OAS here in the U.S., up 10 bips wider, that's going to impact spread. So now finally, markets are pricing the geopolitical risk premium, which I think everyone knew was there at the end of last week.
But Damien, I know, most of our conversation actually this morning has gone to history. It's what do the sanctions on Iran look like? I mean, this is Russia. This is the 11th biggest country in the world. What if something bad happens? I'm not talking about the nuclear option, but what does it mean for emerging market investors?
Sure. So, I mean, look, I think, the reality is, there are major central banks, all of which have, lines open with the Fed. So if there is demand for dollars, which is obviously what we're seeing right now, the Fed will be able to step up and provide them with dollars in order to meet those payments. I don't think that's going to change. I think the Fed's going to stand by, those central banks. The problem is, can Russia, skirt some of the issues by dealing with some of the non-sanctioned central banks of the world, And so my guess is probably in the near term, yes, because, the West has really implemented harsh sanctions. Gazprom Bank, for example, Gazprom Bank has not been sanctioned yet. That's how Gazprom basically receives its payments for delivering oil to the EU. So, I think time will tell, Francine, really. But yes, bottlenecks. I mean, when you have moves like this in the front end and in short-term money market rates, bottlenecks show up, and they tend to be quite glaring.
Loic, we also had this move, this surprising move, by BP to actually sell Rosneft. I mean, surprising because just 10 days ago, the chief executive didn't want to talk about Russia, and it wasn't really on the cards that he would divest from it. Is there a moral duty for asset managers to get out of Russia, and what impact does that have on markets?
Yeah, I think there is. I think the same way we see governments pulling out of Russia, imposing sanctions, the same way we see now the public world basically also, exercising pressure. BP is a good example. I think, as asset manager, we have a moral duty, not just to our investors, but who are keen about, knowing about where the exposures are. But I think simply, we don't want that to happen in the world. I don't want to live in a world where, we talk a lot about ESG. And, I think as a principle, we shouldn't have any vulture fund or any investors now trying to jump in and finance the Russian economy. Until this is over, we want to go back to a peace environment.
So, Damien, what kind of impact could that have? If you have more money managers thinking like Loic does, who's head of Chanavari, if you have, companies like BP that either worry about the reputational risk or actually do it because they feel some kind of duty, how far can these sanctions, I guess these softer sanctions, go in hurting the Russian economy?
Well, Francine, you are hitting the nail on the head here. I mean, investors, fund managers have a fiduciary responsibility to their investors. I mean, that is a fact. And, as a fiduciary, how can you justify investing in the debt or the equity of companies and or countries that are promoting what's going on in Eastern Europe right now? So, I think that is the battle. If you expect to be a fund manager and manage assets and do it in the right way, yeah, you're going to be under pressure from your investors. If you have holdings in Russia today. And look, I mean, this is nothing new. We've seen this time and time again in places like, as recently, China. China's being excluded from many fund managers' portfolios due to some of the, tension that's going on with the West. But just looking back at Venezuela, at Iran, at others, this is nothing new. So, from an emerging market manager's perspective, you kind of have to take your licks and move on. But some of these moves, my goodness, Francine, I mean, yes, we've seen the ruble snap back. I think it was as low as 120 earlier. Now we're at 103. Yeah. I mean, some of these moves are just frightening in nature, and the scale of assets at risk here are significantly more than some of the other countries I mentioned. So you make a great point. We're in, rarefied territory, Francine. I really can't tell you where we're going to wind up here, but the market is certainly searching for a clearing price here today.
Yeah, and Loic, I guess there was worry about liquidity at some point. So is volatility the name of the game? And do you worry about these European banks that have still quite a lot of exposure? We underestimate how Europe as a region is exposed to Russia.
No, but the SWIFT exemption is a very bold move from Europe, and we can understand that there's been some reflection before that. Clearly, I mean, you have quite a few large financial institutions that are owed money by Russian banks. You have large financial institutions that have equity in Russia. So you typically, take a risk that, those value may be at risk. But once again, I'd like to, this be seen as a call to my peers, to the big asset managers of the world, not mentioning the Blackstone, BlackRock, Amundi, and so on. I think we have a responsibility to shy away immediately from Russia until this is over.
All right. Thank you both for joining us. Bloomberg Intelligence's Damien Sassauer. Loic Ferry actually stays with us because we'll also look at the Fed's balance sheet and what it means for central banks. Now, the economists over at Bloomberg Economics say the central bank's move could light a fuse to the crisis. Scott Johnson, Jamie Rush, and Tom Orlik write a credit crunch and recession in Russia would crystallize risks for the region, especially for Eastern Europe. Well, Scott Johnson from Bloomberg Economics joins us now. Scott, at the center, of course, of all of this is what central banks will do to deal with higher inflation because of energy prices. What more can they do at this point?
Well, we've seen a dramatic move from the central bank, but not a particularly surprising one. The central bank is looking at plummeting ruble, queues at ATMs through the weekend, and so I think they're trying to prevent a full run on the banks and the exchange rate. What more can they do at this point? They've already announced some capital controls, but I think broadly, this rate hike does make deposits more attractive. They're trying to keep money at the banks. But really, broadly, they're trying to restore confidence in the banking system, and that's a harder task and something that they're going to continue to need to work at.
Loic, the market, of course, is obsessed with central bank balance sheet, what the Fed does, what will they do? Is this a game changer? First of all, if we see stagflation, what central banks has the power, if any, to deal with it? And does it change the way we should look at hikes?
I think there'll be a big dilemma because the disruptions we talked about, are going to lead to very significant inflation pressure. On the other hand, if central bank, need to intervene, they need to lower the rates, right, to facilitate a stagflation or deflation or recessionary environment. So, it's very complicated if you have a recessionary environment with inflation rising from commodities and disruptions in supply chain. So I think, clearly, I think governments will act and will be there probably to support also the too big to fail. Some banks may be under pressure, and so I would expect that the kind of role to support the overall environment will be arising from central banks. However, today we see that the Russian central bank basically freezing of assets, or at least there's a large 50% of those reserves that are held by the other central banks, right? Yeah. So you have also maybe a give and take game at the political level here.
Scott, when you look at interest rates in Russia at 20%, how deep can the crisis go in Russia before they ran out of funds? I don't know whether China will prop up with some kind of swap or some kind of collateral, or how much pain the Russian economy can actually go through.
Well, Francine, those are still unknowns. I think we're getting a little bit of clarity on the sanctions against the central bank. So it's looking like maybe 50% of the reserves are not going to be accessible. But there are also workarounds and capital controls. Within the domestic economy, buy them a little bit of time. But this is a very big fire to put out.
Scott, thanks so much. Scott Johnson there, our Russia economist from Bloomberg Economics. Loic, I actually need to ask also about football, because you're a club owner, and there's a lot of talk about Chelsea, whether it should be sanctioned and things like that. I mean, you called for asset managers to almost rally the call and amplify what governments are asking. Should football clubs do the same?
I think it's obviously we've seen all the main sports involved, like banning first games in Russia. And I think, sports is very little in the overall environment, right? At the end of the day, I think there's a moral principle that applies everywhere. And I think all the sector of activities must apply the due pressure for this for Putin to step back. And the only thing is that he's really cornered now. So I think you were talking about the kind of tail damage it could inflict on the West. That's what worries me today more than anything else.
Yeah, some kind of retaliation. Thank you so much, as always, for joining us, Loic Ferry there of Chanavari. Now, coming up, an exclusive interview with JP Morgan Chief Executive Officer Jamie Dimon from their Leveraged Finance Conference. That's an interview you don't want to miss. It's from Miami. Look for that 2 p.m. in New York, 7 p.m. in London. And this is Bloomberg. The Omicron variant and the latest wave have an impact on not only consumer trends, but your business. And do you expect the booster shots to make a difference?
Yeah, booster shot will make a huge difference. I think it's been accelerated by the huge leadership of the current Prime Minister Kishida. And I'm hopeful that our business will come back in Japan around perhaps mid-February to end of February, because we expect that a peak time will come around that time. And then the government will shift toward the reinvigoration of consumer. That will help us. And we had seen the huge comeback of the business in December when the things were toward the normalization. So I believe the business will come back, and I'm very much hopeful.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, equities falling today. Sovereign bonds actually rallying. If we get that board up for you, you also see commodities surging. There's this heightened uncertainty over Western nations escalating sanctions on Russia for the invasion of Ukraine. We saw rallies in the dollar, gold, treasuries, underlying really the demand for havens. The euro also falling on worries about risks for Europe's economy, which relies on Russian energy. The fresh Western penalties further isolate Russia from global finance, and you can see ruble, a huge volatility, currently at 102. Bloomberg Surveillance Early Edition continues in the next hour. Matt Miller and Katie Lyons in New York, our Anna Edwards here in London. This is Bloomberg.
En nuestro estudio, en nuestro experimento, no hemos pintado todos los edificios de blanco, sino estos más asequibles de pintar. Y ya hemos detectado reducciones medias en el área metropolitana de 0,8 grados aproximadamente en un periodo de ola de calor, y con picos máximos de 4 grados de disminución en un momento puntual del día, en una zona puntual del día. Y como dices, en una ciudad como Barcelona funciona incluso mejor que las zonas verdes. Según las mediciones, nos detectan incrementos, o sea, disminuciones de temperaturas mayores con tejados blancos que con incrementos de zonas verdes, como tienen planteados el plan director urbanístico.
crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
President Putin's decision to pursue his aggression against Ukraine is a terrible strategic mistake.
Under this package, important Russian banks will be excluded from the SWIFT system.
The package that was decided with the proposal of the Commission yesterday night is a strong one, but we are working also for further measures.
There's a range of escalatory steps we have as options.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kaylee Lines.
It's 10 a.m. in London, 5 a.m. in New York, and 6 p.m. in Hong Kong. Our top stories today. Ukraine and Russia are set for talks aimed at ending the fighting. Ukraine's president is skeptical, but says he's willing to try if there's a chance for peace. The West ramps up sanctions. New penalties punish Russia's central bank and will exclude some Russian banks from the SWIFT financial messaging system. And markets are hit by the aftershocks. Stocks fall, oil jumps, sovereign bonds and the dollar climb. Meanwhile, BP may take a financial hit of up to $25 billion as it prepares to offload its stake in Russian oil giant Rosneft. Welcome to Bloomberg Surveillance, everybody. This is the early edition. I'm Anna Edwards, live in London with Matt Miller and Kaylee Lines in New York. Such a lot of news flow over the weekend, Kaylee. Markets dealing with all of that this morning. Our focus still, of course, on the tragic situation in Ukraine itself. But from a markets perspective, the only thing seems certain is volatility.
Yeah, there's obviously a human cost of war, Anna, but there is a massive financial consequence as well. And that is something markets across the world are dealing with. Though I would say there is definitely more angst evident in Western markets than there was in Asia overnight, at least at the equity level, in that there wasn't really much movement for the regional benchmarks. In fact, the MSCI Asia Pacific Index was actually positive on the day by about 0.25%. Where you really saw more action showing up was in other asset classes. In the bond market, for one, where you are seeing that haven bid into sovereign debt, at least when it comes to non-Russian debt. And that was evident in Australia at the short end, that two-year yield coming in 11 basis points overnight. And then in FX, you are seeing a little bit of a bid for the yen. Not really. It is actually just slightly weaker against the dollar right now. But even that makes it an outperformer in G10FX because everything else except the Swissy is much weaker against the dollar than that. Right now, dollar yen sitting at 115.57. And your real weakness in Asia is coming from the Thai baht. By far the underperformer, lagging against the U.S. dollar by about 0.7%, around 32.67. The concern there, Matt, is on higher oil prices and what repercussions higher energy costs could have for the Thai economy.
Yeah, and Anna's going to show us Brent crude in just a moment. I just want to show you what we're looking at in terms of the U.S. picture here. Futures down, but it was after an incredible rally on Friday. We were up more than 2% on Friday on the NASDAQ, on the S&P, on the Dow Jones Industrial Average. So right now we see S&P futures down 1.5%, and assets are going into, or money is going into haven assets. So the Bloomberg U.S. Dollar Index right now at 11.85. Remember, we've been looking at more of an 11.75, 74, 73 all week last week. So a big jump in the dollar index. A bid in treasuries as well, pushing the yield down to one spot, 91.13. So investors looking for the perceived safety of government debt as well. And Bitcoin is interesting because it's up 2.5% or 2%, 2.1%, and it is kind of a risk indicator. But I should point out it came down a bit over the weekend and jumped back up. Remember, Bitcoin trades 24/7, so it's a moving target here. We were at 38,000 on Friday, we were at 38,000 on Thursday, and we're at 38,000 today. So really, it's holding steady. Anna, what do you see in Europe?
Yeah, fascinating story around Bitcoin. And as you say, worth pointing out, it trades through the weekend. And what role will it play in Russia and elsewhere if we start to see the sanctions regime sticking around for a little while? What we're seeing here in Europe is just like we're seeing in US futures, Matt. We're seeing some movement to the downside. We're seeing risk off. That is the dominant vibe across European equities and across other assets today. But we're just giving up some of the gains that we made during Friday's session. So to give you some context, up by more than 3% in some of these markets during Friday. And now we're down by, what, 2.8% on the CAC on 2.4% to the downside on the Xetra DAX. So we are weaker, but in the context of Friday's losses, similar kind of ballpark moves. Let's move it on and show you some of the other assets that are on the move today. The oil price is very much in the mix, but also the Russian ruble down by 22%. This is the US dollar on the rise against the ruble. Of course, we've seen the central bank, their ability to backstop their currency really undermined by sanctions activity over the weekend. So if 2/3 of their FX reserves are held outside of Russia in G7 currencies, and that's not going to be very easy for them to sell right now, what are they going to be able to do to backstop the currency? Well, put up interest rates. And we've seen the central bank doing that in the early hours of the European morning, up by, more than doubling their interest rate to 20% over in Russia to try and tackle weakness in the currency. We still see that weakness coming through. Here's Brent, as Matt mentioned. It is up. It's up by more than 5%, but this is not even a 7-day high for the Brent price. We were up at 105. And actually, oil and energy not in the crosshairs of the sanctions. Yes, they could be impacted severely by geopolitical tensions and by the measures being taken around SWIFT, but we haven't seen sanctions on energy assets just yet. And look at what the Iranians are saying about how the progress is being made there. The banks in Europe really are a point of weakness today. We see the likes of Raiffeisen and ING and Erste Bank, a number of names trading down in the early hours by more than 10%. I put in Rheinmetall, but this is an example of a defence company that is doing very well here in Europe. Others are available. There are plenty in the defence sector that are really moving to the upside, Kaylee, and all of that comes really from the big pivot we've seen in German foreign policy just in the last few days, something we'll certainly have analysis of later on in the programme.
Well, and you're seeing that reading through as well to U.S. defense stocks and pre-market trading. We'll get a check on some of those in just a minute. What I would note, though, is we won't see any Russian stocks trading on the Moscow exchange today. The Bank of Russia saying that no stock trading will take place on Monday, that is today, on the Moscow exchange. Now, as for what will take place today and for the rest of the week, let's start with tomorrow, where President Joe Biden's first State of the Union address will be taking place. I would imagine that a lot of that address will be focusing on foreign policy, specifically on Russia and Ukraine. Then that will also be on the agenda for OPEC Plus when it meets on Wednesday via video conference, and for Fed Chairman Jerome Powell when he testifies before committees in the House on Wednesday and the Senate on Thursday. What does this all mean for the inflation picture and the trajectory of monetary policy? And then on Friday, we'll get the U.S. jobs report for the month of February. That feeds into the Fed's decisions as well. And finally, China's National People's Congress will begin at the weekend, and topics will include growth, fiscal targets, and stimulus. There also could be news on Beijing's COVID-0 strategy, border openings, and Hong Kong's COVID crisis, Matt.
Yeah, so a lot going on, but it's really still focused on Ukraine. Talks between officials from that country and their Russian counterparts could get underway within hours, but the Ukrainian President, Volodymyr Zelensky, voiced skepticism the talks would yield results.
I'll say frankly, like always, I don't believe that much in the result of this meeting. But let them try so that not a single citizen of Ukraine has any doubt left that I, as president, used every chance to stop the war, even a small one.
Our European correspondent Maria Tadeo joins us from Geneva, where the UN Human Rights Council begins today. Maria, what do we know about these talks? You know, they've been kind of on again, off again, and what can we expect from them?
Yes, good morning, Matt. And the reason why we're here in Geneva is because, as you noted, there is a United Nations meeting, and the Russian Foreign Minister, Sergei Lavrov, was supposed to participate. But just to give you an idea of how sanctions are already hitting Russia, we're now here that he is not going to be able to participate because the airspace through Europe is shut for Russian planes and Russian registered flights. And Mr. Lavrov himself is personally sanctioned by the European Union. So that just gives you an idea of how you go from deeper to reality. It's not clear whether he's going to be able to come to Geneva for this United Nations meeting. In terms of the talks, we do know that the Ukrainian delegation is now at the border with Belarus. Of course, the Ukrainian President Zelensky is not there. He's decided to stay in Ukraine for obvious safety reasons. But what the Ukrainians say is that they're willing to talk about anything. There's no preconditions, but there's two things that they really want to get guarantees from Russia before anything else. One is that they pull back the troops, and then of course the other one is that there's a ceasefire that takes place imminently. These are two conditions that Russia would have to agree. And remember, just 2 days ago, the Russians said that if there were to be talks, essentially they wanted total capitulation from Ukraine, to step away from NATO, to step away from the EU, to give back some of their weapons. But you can see now that the Ukrainian government feels bolstered, especially after there has been a radical change of heart on weapons from the European Union. So I would argue if these are the conditions that Russia puts on the table, these talks are going to go nowhere.
Right. So that's what's happening on the Belarus border. We continue to watch that. Hopefully, we watch that with a lot of hope, perhaps attached, Maria. What are we looking at in the Western sanctions response then? Because that is what markets are dealing with this morning, as well as the situation on the ground in Ukraine.
Yeah, so Anna, you know, this package was approved between the United States, the UK, and of course the European Union. There's two big components here. One is the SWIFT. Remember, it's a number of Russian banks that are going to be shut off from it. Some of the technicalities around it are still being worked. But the big thing, of course, here is the restrictions on the Russian central bank. Remember, yesterday, the top European diplomat, Josep Borrell, said that 50% of the reserves held by the Central Bank of Russia are now going to be essentially frozen because they're in G7 jurisdictions. So you're seeing already the response from the Russian central bank to try to quell the panic around the currency. And of course, no stocks trading today happening in Russia.
Maria, thank you very much. Our European correspondent, Maria, today joining us there from Geneva. Now let's get the latest out of Russia with our reporter in Moscow. Give us the latest. We've heard so much news flow around sanctions aimed at really tackling, really crippling the Russian economy. Is this starting to bite on the ground? For everyday Russians, is this starting to become something that they're feeling? I'm not sure if our colleague in Moscow can hear me. Perhaps we can try and confirm that. No, seem to be having some trouble. Yeah. Matt, getting through. Trouble getting through to our colleague in Moscow. So we'll leave that there, but we can talk about the U.S. side of this.
Yeah, let's get to Washington, D.C. right now. White House Secretary Jen Psaki spoke about sanctions aimed at isolating Russia's economy and finance system. Take a listen.
We want to take every step to maximize the impact and the consequences on President Putin while minimizing the impact on the American people and the global community.
The U.S. response there, or at least a little bit of it. Let's get more with Bloomberg's Washington correspondent in Washington, D.C., Anne-Marie Horder. And so, Anne-Marie, what do we know right now about the U.S. response?
Well, it's pretty similar to what Maria outlined in terms of the European and the UK response, because this is something President Biden has really focused on, making sure there was a multilateral approach and that they were in lockstep with their European partners. And as soon as the Europeans confirmed our scoop that they were going to be de-swifting some banks and also targeting the Russian central bank, we then had the White House put out a statement and then reporters were briefed on a call. So you have a number of banks that are already sanctioned that are going to be booted out from SWIFT. And then really probably the most impactful of that news over the weekend is going after the Russian central bank. This is what many analysts have called Putin's so-called war chest, about $643 billion in reserves. Now, Jen Psaki there talking on ABC this week, we should notice she was talking about the fact that they want to make sure that they have an impact on Moscow, but mitigate the risk for the global economy and U.S. consumers. She also did note in that answer that energy sanctions are on the table, because at the moment, the U.S., the European Union, the UK have not targeted Russia's oil and gas sector directly, but obviously that sector is still feeling some of the heat given the other sanctions indirectly.
Well, Anne-Marie, obviously a lot of the action taken thus far has centered around the actions of the executive branch. When Congress returns to Capitol Hill from recess, do we expect any further action on the legislative level?
A lot has gone on in the executive branch. It's exactly right. And so much on the executive branch has gone on that even Republicans were pushing for that maybe now they potentially don't have to. And I could think of Nord Stream 2, something that Senator Ted Cruz has been blocking some of President Biden's picks in the Senate to try to get through those Senate committees. And now, potentially, you're going to have a little bit more of easy access in terms of how Republicans and Democrats get on board. We could certainly see legislation in terms of what they want to do in terms of Ukraine. There's been a number of meetings going on. And then, of course, really the big event in Washington is going to be tomorrow. The president will be giving his State of the Union. And Jen Psaki over the weekend, talking to ABC this weekend, said that, of course, the president is going to address what's going on right now, given the fact that we have this invasion of Russia into Ukraine and everything the president had tried to do to mitigate that.
Yeah. Okay, thanks very much. Bloomberg's Anne-Marie Hordern live for us in Washington. Let's think about commodities now. The price of oil jumping after more sanctions were imposed on Russia. Let's get more details with Bloomberg's Danny Berger. And as Anne-Marie was pointing out there, Danny, we are seeing reaction in energy markets. Yes, oil is a bit higher. Yes, we're higher on gas prices, but we've been volatile, really volatile over recent sessions. And we're not actually seeing these commodities being specifically sanctioned yet. They're sort of secondary effects of other sanctions.
Exactly. But even though they're secondary effects, we are seeing a rise of 5% for both WTI and Brent crude easily above $100. But yes, this is the interesting thing. We might not be directly going after oil and gas, but it's what happens if you have Russian banks frozen from that messaging system of SWIFT. As buyers and sellers try to figure out the rules, that means that the transportation, the flow of those resources of oil and gas too will seize up. And that's why we see this very volatile reaction in markets, despite, again, it not being directly targeted. Now, you think a picture of rising oil prices, energy, natural gas, also on the rise today, would also benefit energy companies. But in Europe, this is not something traders want to step in and buy. In fact, it's something that they are selling heavily. BP, really the poster child for this. BP announcing over the weekend that they would sell their 20% stake in Rosneft. But the question is who can buy it? Who can buy this Russia exposure? They might end up having to just take a write-off of $25 billion. So other energy companies with Russia exposure also dropping, the assumption being that they too will face the same dilemma.
Yeah, how much will we see corporates reacting to specific sanctions, Danny, and how much will this be about preempting or getting ahead of political pressure? We'll keep watching that story. Danny, thank you very much. Bloomberg's Danny Berger with the latest on commodities and some of the corporate fallout we're seeing as a result. Coming up here on this program, James Athey, Senior Investment Manager at Aberdeen. What does he make of the volatility we're seeing in markets today? And more on Russia and Ukraine. We will talk to Judy Dempsey, Carnegie Europe non-resident senior fellow. Just how crucial was the big move on German defense, German foreign policy over the weekend? How much of a game changer is that? Plus, an exclusive interview with JP Morgan CEO Jamie Dimon later in programming from their Leverage Finance Conference in Miami. Look for that at 2 p.m. in New York, 7 p.m. in London. This is Bloomberg.
This chip shortage is going to last longer than many people believe, likely straight through this year. And I wonder what that means for prices. Will this get worse before it gets better?
I don't know that it will get worse before it gets better, but there's no reason to believe it's going to get meaningfully better anytime soon. The Commerce Department put that data out yesterday, and what it showed is that there's a real shortage. Demand is 20% higher than it was a couple of years ago. There's a huge mismatch in supply and demand. Prices are high. Prices are higher. So what has to happen is we need to make more chips. Unfortunately, there's no easy solution. The solution is increased domestic manufacturing of chips, which is what we need to do.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Earnings season continues.
To the Metaverse, to Spotify, to Qualcomm and beyond.
Bloomberg is fastest with the numbers and analysis.
Peloton becoming a proxy for this pandemic.
I think there's tremendous opportunity.
Bloomberg, the fastest numbers and analysis you trust.
Welcome back to Bloomberg Surveillance. This is the early edition. We are simulcast on Bloomberg Radio and on Bloomberg Television. I'm Matt Miller with Kaylee Lyons here in New York, Anna Edwards in London. Now, there's going to be a lot of talk about the value of the Russian ruble. Obviously, there have been sanctions put in place and some de-swifting that we heard about earlier, making it more difficult for Russians to buy dollars. Anna was talking about the possibility maybe they're going to buy Bitcoin or for some other digital currency. And right now we see the official rate at 102, pan right a little bit, at $102.60. For those of you listening on radio, we're looking at a chart. That's pretty dramatic, but I don't think this tells the whole story because our intrepid producer, Valerie Sarasulo, was reporting over the weekend that some people were buying 150 or selling 150 rubles for $1 on the black market this weekend. Kriti Gupta joins us, a cross-assets reporter, with a look at everything we should be following. But the ruble is, I know, front and center for you.
Yeah, it absolutely is. You mentioned 150. I think this morning that number for people on the ground has gone to 166 at its highest. So it really tells you just how much pain there is in the ruble right now. What's important to keep in mind is that the central bank has also tried to kind of shore up ways to protect its currency. Let's just list through them really quickly. You have rates going up to 20% from 9.5%. Remember, Russia is one of those commodity-focused currencies. They've also been dealing with a lot of inflation. So that 9.5% rate that they already have, well, that's followed a series of 100 basis point hikes. So this is on top of that. So you are seeing quite a bit of a move. And also keep in mind, it's not just about the currency moves that you're seeing right now, but go back into history to say to 2014 with Crimea, where you saw that weakening from 25 to, I believe, 80, or I believe 70 was the number. And then before to 2008, where you saw the war with Georgia. And then even before that, you can go back to the 1998 economic crisis, which once again was a kind of combination of those oil prices declining, coming from less demand in Asia, and a war, a Chechen war as well, which created a lot of debt for Russia. So what's important about this simply is that in those previous circumstances, you had a much, much lower demand for oil and for commodities right now. That's what makes this situation so much worse, because the global economy is far more tied to it.
Well, on the subject of demand for commodities, Goldman Sachs saying they see Brent at 115 in the next month, that the only thing that's going to bring oil prices down is demand destruction. At what level do we actually start to see that?
Yeah, well, I believe for gas prices in particular, which would be the American read-through, right? I believe the $4 level was pretty significant when it comes to people choosing different cars that have more mileage, when people have perhaps are choosing different travel plans, not taking that road trip over the summer. And that's a rate that seems very plausible. We saw it.
But with regards to Russia, people are buying more oil and gas from them than they have before, and at much higher prices.
They are, but I mean,
so they're making a lot more money in that business since the invasion.
They are, but think about the sanctions, right? We've seen sanctions, but we haven't seen them target the energy space yet. This is all in anticipation of the energy payments that are going to be targeted. And if you do see the target, you lose a lot of supply that I think previously was discussed that the SPR, Iran nuclear deal, would add more supply. But we don't know if that's the case yet.
Yeah, big if.
Kriti, thank you very much. Bloomberg's Kriti Gupta with the latest on some of the market themes. Remember, you can get full market analysis from the Markets Live team. MLIV Go. That is the function to use on your terminal. This is Bloomberg.
What do you think is the impact of the Prime Minister on the market?
As Mr. Suzuki, who is the Financial Services Minister, he mentioned at his own press conference, and share buybacks is widely used to return profits to shareholders and improve ROE. And how to share out the profits from growth is totally the decision of the management of each company after carefully taking all the stakeholders into consideration. And I believe Mr. Kishida has a quite cautious stance on the uniform regulation of share buybacks. And I think because he is giving a consideration to each company's individual circumstance and decisions.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
This is Bloomberg Surveillance Early Edition. Some breaking news coming through to us from the Russian news agency Interfax, saying that the Russia-Ukraine talks have started. These are the talks that are set to take place or are taking place now then, according to the Russians, on the border between Belarus and Ukraine. The Ukrainians had refused to go to Belarus, given that some of the invasion had come from there. When we come back, we'll get back to the market response to all of this. James Athey, Senior Investment Manager at Aberdeen, joins us. What sign of broader stress are we seeing in markets? What parallels with history? We'll talk about that. This is Bloomberg.
We know that it's highly transmissible. We know that 2 doses of vaccines, Pfizer vaccine specifically, neutralize the virus, but not as efficiently, because various studies showing that reduction up to 40-fold, meaning that a 3rd dose is a must for it to successfully neutralize the variant. What we don't know is still that what are the effects of mix and matching between vaccines, and what are the capabilities of antibodies produced from this mix and matching in neutralizing Omicron. Because as we know, many parts of the world use different types of vaccines. And that would be a great data to look at. It will be also great to look at, because majority of the studies done, uses a small sample number, and most of the time, when you translate it to real world, the data changes. So it will be really good to look at large-scale data of the ability of antibodies from vaccines to neutralize this variant. Grateful here today that the virus Omicron variant still uses ACE2 receptor as its main entry. It means that all of the vaccines which are designed with spike in mind still works. Imagine if it uses a different receptor other than ACE2. None of the vaccines would work today. So I think that is the best news that we got from all these studies which came recently, the past couple of days.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. Ukraine is holding talks with Russia today aimed at ending the fighting. President Volodymyr Zelensky questioned whether much will come from the discussions, but he says he felt bound to make an attempt if it meant a chance at peace. The West ramps up sanctions after the first round failed to get Vladimir Putin to withdraw his troops. The new penalties punish Russia's central bank and will exclude some Russian banks from the SWIFT messaging system. The Russian ruble plunged in offshore trading. The central bank more than doubles its interest rates. Markets are hit by the aftershocks. The price of oil jumps and analysts expect it to go higher. Meanwhile, BP may take a financial hit of up to $25 billion by moving to dump its shares in Russian oil giant Rosneft. The British energy company is given little chance of attracting a buyer. I'm Anna Edwards in London with Matt Miller and Kaylee Lyons over in New York. And so, Matt, the focus of the market's attention, very clear to see this morning, a whole host of news lines to keep up with over the weekend. The sanctions coming thick and fast once again. What are you focused on ahead of the U.S. Open?
Well, I think the most interesting story over the weekend is the question of what the Fed should do to provide liquidity. You're going to see apparently maybe some big overdraft issues, some bills not getting paid because of the de-swifting. Maybe you're seeing some of that liquidation in U.S. assets today. S&P futures down now 1.8%. Okay, we closed up, I think, 2.2% on Friday, but still these are decent drops, especially as they get worse headed towards the open. The U.S. dollar index is strong right now, 1184, 1185, and that's 10 more points than we were seeing basically last week. Investors are also buying treasuries today, looking for the perceived safety of U.S. debt. 190, 165 is the level there. And then Bitcoin, it's up almost mysteriously, really, if you just look at it as a risk indicator that moves with stocks as it has been. But maybe people are making the bet that as Russians look to exit ruble assets and they have trouble buying dollars, maybe, just maybe, you're seeing the possibility that they're buying digital currencies instead. Kaylee, what do you see in terms of the pre-market?
Yeah, so maybe a window of opportunities for cryptocurrencies here, Matt. In terms of the pre-market trading, a lot of it is moving on that geopolitical story. On the one hand, you have oil and natural gas prices higher on the back of this today. That is leading to some outperformance for some of those players here in the U.S., like Cheniere Energy. The ticker is literally LNG. It obviously is a big LNG player. It's higher by 6%. You're also seeing a lot of defense stocks moving higher as well. Anna was talking about that story in Europe, which I'm sure she'll touch on in a moment, but the idea of Germany shoring up its defense spending, maybe that will translate into more military spending as well when it comes to some of these companies. Raytheon and Northrop Grumman higher by a little more than 6% and 5% respectively. Plunging to the downside, though, is Yandex. This is a Russian internet giant. Already in the last 6 days, it's been down on every single one, lost 65% of its value over that time period, looking set for a 7th straight day of declines today. Anna, down another 17% before the bell here in the States.
So in the European session then, Kayleigh, a couple of hours in, 2.5 hours, in fact, into our European trading day. And risk-off certainly is the mood that we are experiencing here for European risk assets. So stocks moving to the downside, down by 1.7% on the stock 600. A big focus on commodities. They're not yet fully sanctioned. They're not yet sanctions in place against Russian oil and Russian gas. And in fact, they're still being bought. Russian gas still being bought by European entities this morning. But nevertheless, there's still a concern that perhaps with some of the taboos being broken over the weekend by G7 governments, that perhaps this other taboo could be broken and we could see sanctions being imposed there. So the Brent price up at 103. That's not even a 7-day high, but it is 5% higher than we were on Friday. BP of interest in the context of that higher oil price, not seeing the share price of BP jump because, of course, we've heard the news that they are going to exit that position. Just 20 days ago, I asked the CEO of BP about the politics of holding that substantial exposure to the Russian energy space. And he confirmed that that was still a priority for BP. But 20 days seems to be a long time in this geopolitics, and we have seen the about face on that one. Kayleigh, you mentioned, of course, the German shift in spending on defence, and Thales is another example of that. I had Rheinmetall in last half hour. I've got Thales in. This is a French defence business. That stock up by nearly 14% as a result of this big pivot we're seeing now from Germany. They plan to spend more than 2% of their GDP. There's a NATO target busting amount of money they want to spend on their own defence. Kayleigh.
All right, Anna, well, it's a big pivot from Germany on defense spending, but a big pivot from the West more broadly when it comes to SWIFT and the decision, the agreement to exclude some Russian banks from that messaging system, further isolating Russia's economy and financial system. Michael McKee, Bloomberg International Economics and Policy Correspondent, is here with us. Mike, why is this so consequential?
Well, people don't realize how big Russian banks are, and they've sanctioned at least 13 of them and perhaps even more. Sberbank and VTB have 50% of the Russian retail market. So this is a huge impact. Now, it's not really so much SWIFT, but everybody's focused on that. So we'll call it de-SWIFTing. It's the fact that these banks and financial institutions can no longer access dollars, euros, yen, pounds. So that's a big problem for them. Now, what would normally happen is the Central Bank of Russia, which built up its Forex reserves in anticipation of this, would call Frankfurt or call New York and say, send some of our Forex money to a Russian bank and we can then distribute it to the people who need it. But that's not going to happen this time because there's no euros, there's no dollars, there's no pounds, there's no other. They can sell gold. They have a lot of gold. But who's going to buy it at this point? And they can exchange for Chinese yuan. But then they'd have to buy stuff from China. They don't make much in Russia in terms of consumer goods, so they import almost everything. And that's going to be a real problem because they can't pay for the imports and they can't receive money for whatever they export. So the Russians at this point are at the mercy of the markets. That's why we're seeing the ruble crash, and that's why we're seeing so many problems ahead for the Russian economy. Now, Zoltan Pozsar of Credit Suisse said this could be a real problem if it leads to some defaults in the money markets by Russian funds that can no longer exchange them. He suggests central banks might need to set up special liquidity provisions this week if we see some of those defaults ahead.
Yeah, I think Posner says they might need to do that today. So we're prepared to hear some news on that front. Mike McKee, thanks very much for that. Let's get over right now to James Athey, Aberdeen Investment Director. And I'll start with that question, James. Are you concerned that we could see some defaults? Posner comparing this to maybe a Lehman Brothers moment or March 2020 moment?
Yeah, I mean, who am I to tell Zoltan anything about the plumbing of the financial system? You know, that really is a topic on which he's an expert. And, you know, we speak to Zoltan reasonably regularly and, you know, he really does understand that plumbing very well. So if he thinks it's a concern, I'm going to suggest that it most certainly is a concern, and logically it makes sense. You're essentially impeding the ability for institutions to exchange payments with one another, and we know that we live in a hugely interconnected global financial environment. So it's, you know, this is a ridiculously complicated situation. It's very difficult to analyse. I think we have to consider all of these risks are live. A
lot of risks then to talk about, James. Are you seeing any signs of of funding markets seizing up at all, James? Is that something we need to guard against, keep watchful for here? I was looking at the FRA OIS spread, so thinking about how much banks will lend to each other over and above the overnight risk-free rate. And yes, it's spiking up, but if you take it back to 2008, it's not anything like it did during the financial crisis. It's not even anything like it did during the pandemic, not yet at least. Is this the kind of indicator we need to look at? Where do we look for that kind of stress? Are you expecting to see any?
Yeah, I mean, again, we will see stress. For example, the gap between Russian onshore and Russian offshore liquidity. You know, you have a deliverable Russian ruble market and you have a non-deliverable Russian ruble market, and even the non-deliverable market is fixed against the MOEX fix, so it's fixed versus an onshore traded rate. But you start to see gaps appearing, a basis appearing between those two, which tells you something about stress and the ability for that gap to be arbitraged away. Of course, that's logical. That should be less the case in broad dollar markets. You know, when we see real stress in LIBOR OAS, that's because you have a squeeze in dollar offshore liquidity, whereas this is more of a squeeze in obviously Russian liquidity first and foremost, and that non-Russian ruble liquidity, which is being provided to or from Russian institutions at the entire financial infrastructure level. That's still a relatively small number, but you know, FX markets, which are just about the most liquid markets we deal with it on a daily basis, and the most liquid cross, something like euro dollar, is already trading, you know, 10 times wider than normal this morning, and that tells you that of course there are knock-on impacts.
So, James, obviously we alluded to potential action that the Fed and other central banks may need to take for liquidity purposes. What is the read-through with this geopolitical crisis in terms of monetary policy and what the hiking path is going to look forward for both the Fed and the ECB?
Yeah, you know, ultimately, Kayleigh, that's the really big question that, you know, I certainly would love to have an answer to. The answer, I think, should be, for now, it should not shift their path forward, because realistically, the way I see this, it really is exacerbating, magnifying existing trends, which is to say, you know, glibly put, we can call this a stagflationary shock. It is going to impinge to varying degrees on growth in these Western nations. It is at the margin going to push inflation higher. And realistically, when inflation is already 5, 6, 7% or above, I think the central bank is overwhelmingly mandated to be more concerned about the inflation outlook than a marginal impact on growth. And the central banks have talked about this. The Bank of England in particular has been explicit about how horrible a trade-off they are facing, but the fact that they need to try and get, you know, less far behind or even ahead in terms of inflation and inflation expectations. So listening to Jay Powell this week is going to be crucial. I think that the correct course of action for now is to stay the course and take away some of this monetary largesse which has put us in this position.
Yeah, is the focus on growth or is the focus on how this is inflationary? Big questions for this week. James, thank you very much. James Athey, Aberdeen Investments Director, thanks for joining us. Coming up on this programme, Judy Dempsey, Carnegie Europe non-resident senior fellow. Just how significant has the change in German foreign policy, and what does that mean for NATO? What does it mean for the world? We'll talk about that next. This is Bloomberg.
lot's happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
This is Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kaylee Lines in New York. Now, the Bank of Portugal and ECB Governing Council member Mario Centeno says Europe's recovery remains despite the war in Ukraine. Centeno spoke earlier with Bloomberg's Carolyn Look in Lisbon, Portugal.
I think the spirit of the recovery will remain, but we need to take into account this new situation. So the concerns are there. We need to follow it very, very closely. Russia is not the biggest trade partner of the euro area, less than 5% total global trade for the euro area, but still in some sectors it is very important. And furthermore, of course, this situation is not desirable, and we need to adapt all our policies as well to it.
You sound quite optimistic still on the underlying recovery, but obviously one channel through which this may impact the European economies through energy prices, which, as President Lagarde said last week, could drive up prices in the short term. What risk do you see of a stagflationary impact on the European economy?
Yeah, the two biggest channels through which this new situation can have an impact in the euro area are through commodity prices, as you mentioned, and through confidence. We were quite optimistic that the second channel, which was quite amazing how well it performed during the recovery from the pandemic crisis, could be damaged, and that's something that we really need to take into account. So yes, prior to these developments, energy prices represented more than 50% of the increase in inflation in the euro area. This can only increase in the near future. We need to be prepared to that, and of course, a scenario close to stagflation is not. I mean, it's not out of the possibilities that we can face. So we need again to adjust our policies to that.
And that was Mario Centeno, Bank of Portugal governor, speaking with Bloomberg earlier. Looks like he was sitting in front of their vault. Joining us now is Judy Dempsey, non-resident senior fellow at Carnegie Europe. Judy, you know, the financial sanctions look to be really taking hold now. We're starting to worry about funding problems in the market and defaults as well. How much is this pressuring Vladimir Putin?
Well, if you read some of the statements coming out of the Kremlin and out of Moscow, clearly very, very worrying. And he regards this, and the language coming out of Moscow is resenting the fact that the West has got its act together, that the Europeans are imposing a whole raft of sanctions. And I think actually President Putin has been really surprised and hit by this extraordinary development on the part of the EU and the Americans, and of course Germany, which is pivotal.
Judy, good morning to you. So we currently expect, or we think that these talks are currently ongoing between Russia and Ukraine at the Belarus border. What kind of outcomes could you see coming from that would actually lead to an end to the violence, Judy? Because does that require some kind of commitment to neutrality? That has been something that has been mentioned previously, but what is the appetite for that kind of agreement right now?
Well, first of all, very little, I think, will come out of this meeting. I'm quite surprised that President Zelensky sent his defense minister, given how important his role is. But the Ukrainians actually want to show that they do want negotiations, but without conditions. This is the first thing. Secondly, questions of neutrality and other issues, they're completely off the table now, given the kind of resistance that the Ukrainian forces are pushing, and given the kind of public support for Zelensky and the huge anti-Russian sentiments now. Ukraine is going in here if diplomacy works, but it doesn't seem to be from the Russian side. But at the moment, Ukraine wants to do the military strategy combined with, yes, we're willing to talk, but.
All right, Judy. Well, I think that the forcefulness with which Ukraine has responded to this Russian aggression, definitely something that took Vladimir Putin by surprise. Something else that I think may take a lot of people by surprise is the dramatic pivot we have seen from Olaf Scholz, the German chancellor. Just weeks ago, he was being criticized as being weak on Russia, not taking a firm stance. Now he's ramping up defense spending. He's sending weapons to Ukraine. What caused the shift?
Enormous pressure, first of all, from the United States. Secondly, from inside Germany, public opinion and the younger generation. And thirdly, I think Olaf Scholz's own personal realization that Germany has to make this pivotal shift, that Germany cannot be seen as a free rider, that Germany has to actually beef up its security and defense spending, and that Germany has to really embed itself deeply in the West now. Balancing this act between Russia and the West, these days are over. It's a fundamental shift in German outlook, and it'll be a fundamental shift for Europe.
Like a paradigm change. I mean, is this going to be the moment where we can mark the rearmament of Germany? I mean, yes, I know they have a military already, but you know, they use broomsticks when they're practicing since they don't have enough rifles. Are they going to really start to build up their military force?
Well, they have no choice now, and Olaf Scholz has said this, and he's supported by the finance ministry, which is run by Christian Lindner, the Free Democrats. But I mean, this takes time. Do you know that the German troops up in the Baltic states now, they're deployed as part of the NATO contingent, they even lack sort of warm underwear in minus temperatures. I mean, this is an old story, and it keeps repeating every 1 or 2 years. And somehow we'll muddle through. But the muddling through now is over. And this turning a blind eye or believing, well, nothing will really happen. The warning signs were with Georgia, the warning signs were with Crimea, the warning signs were with Navalny, the warning signs with the assassinations in London, endless warning signs. And now the signs have become reality and really hit Germany very, very hard, to such an extent that actually Putin has lost its most important ally in Europe.
Judy, thank you very much. Judy Dempsey, non-resident senior fellow at Carnegie Europe. Really good to get your perspective on what has been a big shift in perspective in Berlin. Coming up on Balance of Power, former U.S. ambassador to China, Max Baucus. Really important to think about the role of China in all of this, the way they have talked about Russia's attack on Ukraine and the way they have voted at the United Nations. That's at 12 p.m. in New York, 5 p.m. in London. This is Big Bang.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Lyons with Matt Miller in New York and Anna Edwards in London. Well, we're going to talk more about what we're watching today, what everyone is watching today, and that is the situation in Ukraine, the sanctions the West is imposing as a result, and the ripple effects across the market. Of course, we know that the Ukrainian delegation, led by its defense minister, has arrived at the border with Belarus for talks. So, Matt, we look for the outcome of that. But in the meantime, the market is not waiting. Things are getting sold. They're getting sold now.
Yeah, it does look like there's some liquidation going on here. We'll wait to the open to see how serious it is in equities, but we do see investors looking to the safety of the dollar, looking to the safety of treasuries, even I don't want to say looking to the safety of Bitcoin, but we do see Bitcoin rising in price and other digital currencies as well, which you can see on the Bloomberg terminal by typing CRYP-GO. So it will be interesting to see how this pans out, especially considering the Zoltan Poznar note that we've all been talking about today. Will the Fed have to come in with some extra liquidity?
Yeah, absolutely. So will we see tension in funding markets and how will that compare to periods of tension we've seen in the past? Certainly something we'll keep an eye on. I'm watching the energy side of this. We have Brent at 102.90, up by 5%. So we are seeing elevated levels for oil prices. We're watching to see if we get releases from strategic petroleum reserves. That's going to be something that will be a big focus for the markets as we go through the day. Goldman Sachs saying the only thing that will weigh on these prices is going to be demand destruction. And if we're not going to see that, then are we going to see anything bring these prices down? What will the role of Iran be in that context? They're also talking at Goldman's about disrupted flows because, of course, shippers are not quite so keen as they were to head to the Black Sea and to take oil and other energy products through the Black Sea. More Bloomberg surveillance is ahead. We'll hear from Kevin Foley, head of global debt capital markets at JP Morgan, among others. This is Bloomberg.
Is this going to primarily be chips for your own business, or is this going to be more centered around the foundry business and external customers?
It's going to be both.
And what we said today is we're announcing 2 fab modules. It's a large location, 1,000 acres, because I'd hope to build out a full 8 fabs or more on this location. And if we do that full project, it would be $100 billion over the course of the decade or so. So a massive project. Initially 3,000 jobs, 7,000 construction workers, supply chain, et cetera. I mean, this is just fabulous. And the products will be our most leading edge chips. So as we said, this will be the angstrom era when we're going to 2 nanometers and below into the angstrom era. So it'll be the most advanced chips, potentially the largest manufacturing location in the world. We'll use its output for our internal products, but also for those of the foundry customers as well. So it's going to cover both.
As a company grows, there are more challenges. What do you worry about the most?
The market opportunity for us is enormous, and so our challenge is to continue innovating, driving, and pushing ourselves every single day to go after the most attractive profit pools in this incredible global beauty and wellness market.
Things can turn fast, and when they turn fast, it tends to be transmitted through those financial shocks.
I think you're trying to hedge broad market risk.
You need to have some exposure to value, and I think really it's going to be quality value.
One wants to have portfolios that are liquid, resilient, and agile in this climate.
This situation is fluid, and the narrative could change very quickly on it.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
Things are moving so quickly from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance Live on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro. Futures down 1.3% on the S&P. TK, what a weekend.
Absolutely extraordinary weekend, truly historic. I love how Greg Villiers partitions it, John. This volatility harkens back to 1945, and we'll have that coverage all through the morning.
And right now, Tom, happening right now, the hopes for talks on the border with Belarus between Ukraine and Russia.
Yeah, the talks are there. It's a mystery. I know Maria's better briefed on that than I am, but I would say in the last couple hours, John, the real talk of will Belarus to the north of Ukraine, will they enter this war in support of Mr. Putin?
Lisa, that's the military issues. Let's just go through the financial ones over the weekend, step by step. The West cutting some banks from SWIFT. Russia's central bank gets sanctioned. Germany's big foreign policy shift. Just went through this piece by piece. Lisa, any other day, BP dumping its Rosneft stake would be the leading story. That's how busy this weekend was.
And the idea that BP may not be able to unload this particular stake because people are not buying. How much the world has changed as the Western allies really gave a sign that they are willing to incur some wrath on their own people, that basically they're willing to bear the costs in order to go hard financially against Russia. Now we see how far that does send some of the commodities markets and other markets, frankly, as we assess.
Lisa, you said people aren't buying. Tom, some people can't sell. And I just wonder how much that's behind the move in dollar ruble today. Would we have seen a bigger move if people were able to sell what they wanted to sell?
And not only ruble, John, what surprises me on this Monday as we frame out, and we'll do a data check and all, but what surprises me, John, is what has not moved. There's so many things, yes, they've moved, but they're within range. And you wonder when we get true openness and true liquidity, then will we see things jump out of range?
Well, the Central Bank of Russia's moved, Lisa, 20%. From 9.5.
Basically saying the world has changed. They've also, as you said, have prohibited certain people from selling the currency, from trying to transfer their foreign currency incoming flows, if they're companies, to rubles. I mean, all of these things, the idea that they're trying to intervene to freeze markets gives this feeling of an issue of liquidity. How much does that take before things break?
Let's start with the price action and whip through it for you. Futures are negative by more than 1% on the S&P. If you want to see some equity price action, look to Europe. The banks getting absolutely hammered again. Yields are lower by 4 basis points to just south of 192 on 10s at 191.82. And into the commodity market, Lisa, crude 95.61, up a little more than 4%.
But I take Tom's point here with crude, both here in the U.S. as well as Brent. Why isn't up more? A lot of analysts have come out and said, look, the sky's the limit here. If some of these sanctions really do go into effect, if they start to target some of the oil majors in Russia. Right now, what I'm watching is a series of meetings throughout the day. We have a UN Emergency Council meeting, but Germany's Olaf Scholz is going to be meeting in Paris with Emmanuel Macron as well as Ursula von der Leyen of the European Union. I am very curious to hear how Olaf Scholz talks about his pivot that he outlined over the weekend. You were talking about this, John, that he's going to talk about $100 billion of euros that he's pledging to modernize the military. He pledges to spend 2% of the gross domestic product on defense by 2024. This is in line with what NATO's wanted, and it's what Germany has underplayed for a long time. And over the weekend, he agreed to supply Kiev with weapons, such a pivot after saying they were not going to supply war zones with weapons before, after 1989, really, they pared back. Meanwhile, we're going to be watching the Atlanta Fed President Raphael Bostic, who's taking part in a discussion about the economy. How much does he talk about Fed intervention as we start to see some possible fissures, particularly in the money market accounts? We heard from Zoltan Pozsar of Credit Suisse talking about the potential there. You do see markets expecting more from the Fed, less in terms of removal of accommodation with more negative real yields, yet again, for all the wrong reasons. And at 11:15 a.m., President Biden is hosting a call with the allied nations on the Russian-Ukrainian invasion. How much they talk about the fact that oil prices are surging. Brent crude above $100 a barrel, 102 yet again. And meanwhile, over in the U.S., gasoline prices at the highest levels going back to 2014. How much does President Biden talk about a coordinated oil reserve release? Because that is really the step that a lot of people are looking for.
Elisa, thank you. Tom, we'll go through that Goldman note a little bit later this morning, but Jeff Curry, 115 is the 1 month price target now on Brent, up from 95.
Yeah, there's any number of ways to get there as well, John. But, you know, again, what I would say is framing where we are right now, John, so many things are within range with huge exceptions like ruble. And I take your point. We don't need to do some fancy charts on ruble. But, John, I take your point that it doesn't pulse on the Bloomberg like the markets are really open. I wonder what's going to happen when we actually get liquidity.
Team coverage starts right now with Bloomberg's Anne-Marie Jourdain down in Washington, Maria Tadeo in Geneva. Maria, over the weekend, something changed. What changed?
Well, everything changed. That's a short answer. We see a mega sanctions package from the European Union, which now will supply weapons to Ukraine. Of course, we've had restrictions, big restrictions on the Russian central bank. Yesterday, the top European diplomat told me, well, 50% of their assets are essentially de facto now frozen. They're in G7 jurisdictions, and then big humanitarian aid and the Russian TV networks being taken off European airwaves. The Europeans say that this is a propaganda machine and they want it out. So everything changed. Why? For two reasons. First of all, there was a big change of heart in Germany. When the Germans get going, everyone else in Europe follows. And then secondly, I was told it's Zelensky. He has proven and he has shown that he can rally his people and his army can resist. Once that decision gets made, the Europeans change course and decided this is the time and it's our duty now to help Ukraine in this fight.
Maria, I am absolutely fascinated what your reporting is on the effect if Belarus enters this war. The distance from Warsaw, northeast of Minsk, is 339 miles. I feel like I'm talking out of the history books of 1945. What happens if Belarus attacks?
Well, this is the key country to watch out for, because we'll see that Vladimir Putin, of course, lied through his teeth when he said, I have no intention of a full invasion from Belarus. But then, of course, when you look at the map, and the map is so important right now, Tom, this is a country that is connected to Poland. For the Polish, this means that essentially they could be surrounded by a country that is right now in a war with Russia and a country that would become officially a puppet state for Vladimir Putin. We already know that Lukashenko Lukashenko, the leader of Belarus, is a puppet for Vladimir Putin. But you're talking now about big weapons, including potentially nuclear weapons. Vladimir Putin is already bringing that up to the table. So, of course, for the Europeans, that would be a real escalation now, moving away from Ukraine into a country like Poland that is a member of NATO and is also a member of the European Union.
And Marie, talking about the escalation that we've seen on both sides, we're looking for some sort of additional response, additional sanctions from the White House. Is there any discussion about including oil majors from Russia, considering the carve-outs that currently are in place?
Well, first from the administration, what we had from Dalip Singh is that they were going to try to protect the oil and gas sector because this had massive implications to the global economy. But over the weekend, we heard from Jen Psaki, the president's press secretary, on ABC this weekend, saying that energy is on the table. And she said it twice. Energy remains on the table. What the administration was trying to do is have enough impact on President Putin and the Russian economy, but mitigate American consumers. But at the same time, they are now saying that energy remains on the table. And I spoke to a very senior European official over the weekend when we were working on finding out what they were going to do in terms of SWIFT and really trying to encroach on the Russian central bank. And he said right now it's about giving a very strong message to the Kremlin and almost suffocating the Kremlin. And this does seem like the West is going to come out with a plan of you don't know what to expect the next day. It's harsher sanctions after harsher sanctions. And at the moment, it doesn't seem like there's really anything in terms of the Russian economy that's not being hit right now. Because even if oil and gas isn't targeted, everyone I've spoken to all the weekend says, find me a ship, find me a vessel that's going to go pick up Russian crude right now. The rates are astronomical.
Maria, how is Europe preparing for the likelihood that oil majors from Russia, the gas majors, are going to get cut off?
Well, like Anne-Marie said, there's a lot of secrecy about this, and she's been asking, I've been asking this. This is really the question that they don't want to get into. The reason also, by the way, why it's not a full blank ban on the SWIFT for Russian banks is related to that. By the way, we don't know exactly what banks are going to be included in there, but we hear it's around 7, 8 Russian entities, and probably the ones that were targeted last week. How do you prep for this? Look, it's the peak of winter. This is the time of the year where Europeans are the most concerned, but the question is, and this is really the big question, whether Germany, which, as you said, made a big U-turn over the weekend, could potentially do that when it comes to nuclear. Remember, they said they were shutting down 3 plants. Maybe they want to think about that twice again.
Maria Tadeo, Anne-Marie Jordan. Our team coverage will continue throughout this morning. Tom, on the energy focus, Anne-Marie said something really important there. What if banks choose to self-sanction? In theory, and we've spent the weekend talking about how these sanctions will work in theory, how they work in practice, Tom, could be quite different. Where the Europeans, the US talk about sanctions ex-energy, an energy carve-out, how will that actually work in practice? Will banks just choose to pull back wholesale?
My reading on it, John, right now is we don't know. It's a huge unknown, but I would go. I'm thinking of Ed Morris and Daniel Yergin scheduled to be with us later today. John, I would suggest that what's really important here is Saudi Arabia, where they have been silent. Turkey's not been silent over the weekend. Where is Saudi Arabia given this war?
Flows of capital and flows of commodities. Lisa, you mentioned Zoltan. Polls are over at Credit Suisse. This was the quote that jumped out for me. I know everyone jumped over Lehman and 2020, but we're dealing with pipelines here, financial and real. In the present context, they are two sides of the same coin. Inability to receive may mean unwillingness to send. How this works out in practice is going to take days, weeks, maybe even months to understand.
I would agree with that. I think that that is the key quote, because we're talking about the plumbing, not only of the financial system, but the plumbing of the energy system in Europe and beyond at a time when it is highly perilous because of how high prices already are.
Tom, the morning just getting started. What a lineup we've got through the next couple of hours.
It is absolutely. Daniel Yergin scheduled to join us on foreign exchange in the ruble. Jane Foley will be with us with Rabobank as well, and Hans Carstensen and the nuclear threat.
Looking forward to it. Futures down 1.2% from New York. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. Ukraine is holding talks with Russia today aimed at ending the fighting. President Volodymyr Zelensky questioned whether much will come from the meeting, but he says he felt bound to make an attempt if it meant a chance at peace. Meanwhile, Russia's plans for Ukraine face rapidly rising costs. Tougher than expected resistance has slowed the military advance, even though Russia retains overwhelming advantages. Western nations have agreed to impose more sanctions aimed at isolating Russia's economy and finance system. The agreement includes measures to prevent Russia's central bank from deploying its international reserves to undermine sanctions. Plus, some Russian banks will be excluded from the SWIFT messaging system, which is used for trillions of dollars worth of transactions. And the European Union has agreed to send $500 million in military aid to Ukraine for lethal weapons. It's the first time the bloc has supplied arms to a country at war. The package may include supplying fighter jets to the Ukrainian Air Force. And the price of oil soared after more sanctions were imposed on Russia. Brent futures jumped more than 7% before pulling back at slightly to $103 a barrel. Russia is the world's third largest oil producer. Any disruptions to flows could exacerbate the tightness in the market. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
The U.S. has announced it's moving 8,500 more troops to Eastern Europe. If they're not being deployed to Ukraine specifically, why is that so important, and does that risk further provoking Russia?
Well, there's two things going on. So what the United States recently announced is that we are going to put 8,500 troops that are part of the NATO response force on high alert. That means they'll be ready to deploy on a moment's notice should we need those forces anywhere in Europe to protect NATO territory. In addition, the United States is also looking at possible additional moves that they might make to move U.S. force posture into Central and Eastern Europe. The reason we're looking at that is because a lot of the members in that neighborhood in Central and Eastern Europe feel concerned. And so we are looking at what measures we might take in the name of reassurance and deterrence.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
Tuesday night, March 1st.
We are ready to respond decisively.
Bloomberg brings you live coverage of the State of the Union address.
America is back to work.
Hosted by Joe Matthew.
Inflation is kind of the #1 talking point so far.
Reaction, analysis, and what it means for Wall Street.
He did leave this door open.
Those are the words Democrats wanted to hear.
Biden may get a little bit of a lift on this.
The State of the Union address, followed by the Republican response. Coverage begins Tuesday night at 8:30 Eastern.
President Putin is continuing to escalate this war in a manner that is totally unacceptable, and we have to continue to condemn his actions in the most strongest possible way.
Not just words over the weekend, action. Linda Thomas-Greenfield, the U.S. ambassador to the UN, on CBS over the weekend. From New York City, with futures down 1.4%, the price action looks like this. Yields down 5 basis points on 10s to 191. Crude up by almost 5 percentage points to 95.78. The ruble lower, aggressively so. The Russian central bank responds by hiking rates to 20% from 9.5. That's the cross-asset picture. Look at the single names out of Europe. The banks. UniCredit down 10%, SocGen down almost 11%. Take a look at BNP, Tom. Take a look at some of these names right now. SocGen, UniCredit, Deutsche Bank, BNP. Take your pick in Europe, Tom. They're down hard.
Now, about global demand, you wonder what ECB will do here. It'll be interesting to see how that moves forward. Here's a tweet of the morning for me, and he has been red hot. Richard Haas with his wonderful book, The World and the World in Disarray. Ambassador Haas, in this war, Ukraine is winning if it is not losing, and Russia's losing if it is not winning. Question is how long this remains the case. Is most likely next development is not diplomatic breakthrough, but conventional military escalation by Russia, more troops and more destructive munitions, with the Council on Foreign Relations. John, that really captures the moment, doesn't it?
Yeah, the moment's really difficult to figure out, though, Tom. We touched on this briefly. We've got all the theory of the weekend. Now let's see how it works in practice, then all the consequences off the back of it. I mentioned the banks there briefly. You sound, then you ask questions. The questions we ask now: what's your direct exposure? What are the indirect consequences, the spillover into Europe? Energy prices up, growth may be rolling over. And what does it mean for the ECB rate hiking story? Tom, most people assume now that might be dead in the water. Yeah. That's why you're seeing these banks get absolutely pummeled in the first few hours of trading.
On the markets, Russ Costers joins us now with Global Allocation Fund at BlackRock. Russ, good morning to you. What did you do over the weekend? What does a money guy, what does BlackRock do in institutional investment over a weekend as we've seen?
Well, Tom, good morning. Look, I think we're all trying to figure out what's going on now, and it's very hard, if not impossible, to predict what Vladimir Putin is going to do. But I think what we do know is some things have changed, and you've got to position the portfolio. So we, for months now, have been bringing down risk. We've been controlling our equity beta. We've been looking at some of the early growth names that are really exposed given the rate volatility, and thinking about the long-term implications for Europe, for energy infrastructure, for macro volatility. Again, it's not a bold statement to say that the world has changed fairly dramatically over the last couple of weeks.
Have you changed your allocations yet, Russ? Or are you still just thinking about the ramifications?
You know, thankfully, we had been bringing down risk for several months ahead of this. And again, I won't pretend that we had the foresight to see what was going to happen in Russia. But certainly as that became more evident, as you deal with a very tough balancing act for the Fed, even before the invasion of Ukraine, it was prudent, given tighter financial conditions, given the uncertainty about rates, to bring down risk in the portfolio. And obviously the events the last week or two only support that.
Russ, there's an idea that the Fed will be forced to come in and actually support market liquidity, be market makers in the next couple of days and possibly even weeks as some of these sanctions ripple through the financial markets. What's your view on the Fed moving away from tightening financial conditions, moving away from the balance sheet reduction, moving away from even rate hikes in response to this conflict?
You know, it's a great question. And I certainly think the Fed has to take this into consideration. We are now in a world where there is very significant two-sided risk. The impact on confidence, the effect of higher oil prices. Having said that, it's not obvious that the Fed has to completely or can completely rip up their game plan, because you still have a world in which domestic inflation is at a 40-year high, it's broad, it's sticky, which means the Fed is probably still going to have to hike. Where I think this has an impact is how much do they go in March? How quickly do they start to change the balance sheet? But the direction of travel still has to be towards the removal of some accommodation.
Russ, where and what are you focused on in this market at the moment through today? What will you be laser focused on?
So I think there are a couple of things. You know, Jonathan, you were talking about the European banks. Obviously, that is a big deal, as well as the impact on the overall European economy. You know, just given the geographic proximity, given the spike not just in oil but in gas prices, you know, what is the economic effect in Europe? I think the second, as we're just talking about, is the Fed. The third, are we seeing any change in the behavior of U.S. consumers? So far, the answer to that is no. When we look at high-frequency data, there's still an underlying strength to the U.S. economy. But does that change given higher oil prices and these just very, very significant events going on in Europe?
Russ, where would you look for stress? And do you see any signs of that now?
Well, I think the stress obviously is going to come in a couple places. One, the names that are most exposed to Russia. You know, again, fortunately, outside of energy, outside of particular commodities, you know, this is not an economy with tremendous links to the rest of the world. But the transmission mechanisms really are about banking, about the financial system, and, of course, energy. We keep coming back to energy. And the reason for that is, you know, again, if this would have happened 5 or 6 years ago, when oil was a lot lower, it would have created less stress economically than obviously it's created in a moment when you already have very high inflation in the U.S., in Europe, and already elevated oil prices.
Hey, Russ, thanks for being flexible this morning. Great to catch up with you, buddy, as always. Russ Kostrick there of BlackRock. Tom, let's stay on energy and the note that came from Jeff Curry and the team over at Goldman Sachs. They upped their forecast, 1 month forecast to 115 on Brent from about 95. We're somewhere in between that at the moment, Tom. This was the line, though.
Please.
Barring a breakthrough in peace negotiations, we believe this leaves commodity prices having to rally sharply as we see demand destruction as now the only significant remaining balancing mechanism.
Yeah, I'm going to go with that, John. The wheat, you know, I looked at wheat this morning, John. I did a moving average study, wheat up 16%, and that gives you an indication to follow on from oil. We need to remind ourselves, John, that oil back a number of years when it was quote unquote above $100 a barrel is in today's dollars about $118 a barrel. So what Curry's saying is we're going to get back to that normality above 100 that we knew a number of years ago.
What he's suggesting, Lisa, is that we're not going to get the supply response to bring crude back down. The only thing left, in his mind, the base case, is you get demand destruction.
And what it is damned if you do and damned if you don't. What it is either the slowdown in the economy or it's oil prices that will eventually slow the economy down. Either way, it's pointing to something rather bleak for markets, which you're seeing really reflected in debt markets today.
We are in equities too. We're down and down hard, off by 60 on the S&P, by 1.4% in Europe, much more so in Russia. Lisa, no trading.
Yeah, they closed the stock market today. They don't want to see it.
Yields down 5 basis points on 10s to 191.30. Crude, 95.85, up by 4.6%, and some real dollar strength out there. Euro dollar down to 112.15, negative 0.5%. Up shortly, Sarah House of Wells Fargo. This is Bloomberg.
the Omicron variant and the latest wave have an impact on not only consumer trends, but your business? And do you expect the booster shots to make a difference?
Yeah, booster shot will make a huge difference. I think it's been accelerated by the huge leadership of the current Prime Minister Kishida. And I'm hopeful that our business will come back in Japan around perhaps mid-February to end of February, because we expect that a peak time will come around that time. And then the government will shift toward the reinvigoration of consumer. That will help us. And we had seen the huge comeback of the business in December when the things were toward the normalization. So I believe the business will come back, and I'm very much hopeful.
After the weekend we've just had, we're moving in the direction you'd expect us to be moving into. Equity futures off by 1.5% on the S&P, on the Nasdaq down by 1.4 in Europe. Down by more than 2 percentage points on the DAX. The banks over there, the ones to watch at the moment, down by 10, 11%. The likes of SocGen, Deutsche Bank, BNP, UniCredit. That's the equity story. Let's look at commodities and let's look at FX together. Dollar ruble, Brent crude up by 4.85% to 102.68. That's Brent, the 1 month price target over at Goldman. We mentioned that briefly. They go to 115 from 95. On dollar ruble, the Bank of Russia, the central bank, goes from 9.5% to 20%. Tom, record weakness, a monster move, a move we haven't seen since the late 90s. But as you and I, at least, have been discussing this morning, could be a whole lot worse. Because at the moment, the people that hold Russian assets haven't been able to sell them.
Yeah, John, it's really important. I've been looking at correlated safe haven assets, and they haven't moved. Euro Swissy, just as an example, John, really hasn't broken out the new Swiss strength. So I get the sense that a lot of currency pairs are waiting to see how ruble pans out over the coming hours. Jane Foley with us later.
We're still trying to figure this out, the theory of the weekend, how it all works in practice, day by day, week by week, month by month. And more specifically for crude and energy flows, can you really do a carve-out here, Lisa? X-Energy for the likes of SWIFT. If you eject a bank from SWIFT, X-Energy, do banks still want to deal with the other bank?
Well,
do they self-sanction?
Yeah, that's and how much can they actually transmit money to another bank for payment for some of these oil and gas flows? How much does that lead to a freezing in some of the flows in response to the financial sanctions?
It's really complex, difficult to work out. The flows of capital, the flows of commodities. We'll try and do that with you through the next coming weeks, months, and who knows how much longer. In the bond market, I want to get to this. 2s, 10s and 30s. The Federal Reserve and Goldman's Jan Hatzius pricing in an extra hike for next year, sticking to 7 this year, Tom. So they stay at 7 this year. They go to 4 hikes next year. 2s right now, back to 150.
When the facts change, everyone will change. And maybe the facts haven't changed quite yet for Goldman Sachs. We'll have to see in a very fluid early March. It is early March, and we are distracted by what we see. Daniel Yergin's scheduled to be with us later, and we're going to have one of the world's leading experts on nuclear missiles, the statements of Mr. Putin over the weekend. But right now, we recalibrate, as you will this week, on the economic data. Sarah House joins us, senior economist at Wells Fargo. Sarah, you and your team are in an incredibly unenviable position. What will you do with the onset of March data up to the jobs report on Friday? How will you use that given war?
I think ultimately when we step back and look at the events of the past few days, so this is a stagflationary event. So looking at higher inflation, lower growth. I think in terms of the magnitude, though, there's still a lot of uncertainty. So we see the U.S. coming into this period in strong shape. We saw that with some of the data last week in terms of the spending numbers. And so we're at least starting from a position of strength. But I think ultimately the developments are negative for the U.S. economy, and particularly for the inflation outlook.
So inflation up, real GDP down. How do those dynamics work? What do you propose will be the animal spirit nominal GDP adjustment we're going to have to make?
I think if you look at just oil, for example, so we looked at some scenarios where if you raise the price of oil $25 per barrel just for Brent, that's adding roughly about a percentage point to inflation, and it's shaving off about 0.3% for GDP growth. So I think that gives you some idea of the magnitude of these changes. But I think you also have to consider where we're starting out from an inflation perspective. So already at a 40-year high. So this really piles on to the pain that consumers are already feeling. Now, thus far, they're spending through it, but I think there's a lot more pain to come, and we could see that an acceleration of the slowdown in growth that we've been expecting this year.
Sarah, when does stagflationary events turn into recessionary fears?
So I think we're still a ways away from there. As I mentioned, we're coming into this period in strong shape. So our outlook for GDP ahead of last week was roughly 3.5% for the year. And so there is a good bit of tolerance for the U.S. economy to withstand some of these developments. Now, in terms of just the fear of recession, that can come about much more quickly, as I think it's not uncommon for markets and other watchers to basically extrapolate the direction of change. But I think you have to keep in mind where our starting point is.
The idea of faster inflation and slower growth puts the Fed in a real bind. And we've seen a plethora of different views over the weekend on exactly how they should proceed. Do you foresee more hikes or fewer hikes in response?
So I think ultimately this could be a position of fewer hikes where financial conditions are already doing the work for them in some respects. So they might not have to actually tighten the Fed funds rate quite as much. So right now we're still looking for 5 rate hikes from the Fed this year. We think, given what we know about the current inflation environment, the current labor market, again, that strong starting point for GDP growth, I think tightening in March remains the base case scenario. So we're never in the 50 basis point camp, and I think that's looking a bit of an easier call now, given recent events. But I think we're still on track for the Fed to go through a series of rate hikes, just given the overall position of inflation in the labor market in the U.S. today.
Sarah, Russ Kostrich with us earlier with BlackRock mentioned microdata that shows the consumer is still buoyant. Do you agree?
I agree. We saw that with the January PCE data. So despite really the first month where we saw no fiscal support, so the end of that, the end of the child tax credit in terms of the enhanced benefits there, we saw income stagnate, but you saw real consumer spending up 1.5 percentage points, up 1.5%. And so I think we are seeing consumers still willing to go out there and spend. They're griping about inflation, but it doesn't seem to have that big of impact on their spending right now. And ultimately, they still barely touch those excess savings.
One final question, Sarah. I'm going to go all John Sylvia on you as well. The jobs report on Friday. What do you look for?
It all comes down to average hourly earnings in this particular report, given the inflation dynamics and inflation concerns right now.
Almost forgot there was a payrolls report, Tom.
That's why I did it. No, seriously, we're going to stop the show. John, this is really, really important what you and Ms. House just said. We almost forgot about it. And we can't. With all the news of this war, we have a responsibility to continue to look at economics, finance, and investment, and that's what we're going to do this week.
The estimate 400K from a previous number of 467 for this Friday. Sarah, thank you. Sarah House there of Wells Fargo. Tom, you want to focus on getting to business. TD making a move.
Yeah, this I know. First Tennessee Bank, of course, is one of the great franchises of the middle Mississippi. This goes back to the Civil War. It is a franchise where the Canadians, TD, parachutes in and picks up more of American retail. I wonder, John, given the turmoil that we're in, and you mentioned the European banks earlier, Is this a future where people say, let's go? First to rise index is to 25-ish. That's below where they were in 2006, 2007. But they get somewhat back to the wonderful days of the early 2000s.
It's TD saying let's go. As you mentioned, Tom, the price here, 25 a share in the pre-market, Lisa, 24 and 7 cents, Lisa, in the pre-market.
So we're going to see more of this. That's what a lot of people speculate, because there really has been power for the biggest banks. They've had the most lending power, and we are expecting consumer lending to pick up, which you've heard from the big banks. I just wonder how much people are going to try to get ahead of the turmoil and execute some of these mergers before things get more complicated.
Can we discuss BP as well? I mean, over in London, Tom, this would be a major, major story if we didn't have the news taking place right now. Of course, we wouldn't have this story if we didn't have what's taking place right now either. BP down by more than 6%. This Rosneft stake, Tom, goes back to the days of TNK BP. Do you remember that? They had to sell that. They gave it to Rosneft. As part of that deal, they got a 20% stake. Now they've got to dump it. Who's going to buy it, Tom? What are they going to get for it?
I will not editorialize, but state that Lord Brown and Mr. Dudley have been wonderful supporters of all that you and I have done. And I'll tell you, this has been a busted transaction from day one. And now Mr. Putin flat out breaks it.
Elisa, just going through some of these numbers, Rosneft accounting for half of BP's oil and gas reserves, a third of its production, according to Reuters. I mean, those numbers are just incredible.
Well, now the focus goes to the other majors. What about Shell? What about Exxon? How much are they forced to cut some of their stakes? How much does that get discounted at a time where it's becoming politically toxic for them to hold on to these stakes? And then how much do they actually meet with absolutely no buyers whatsoever? Because who's going to be on the other side of that?
This is reality meets theory. Again, Lisa, where does the investment come from into Russian oil and gas? They don't want to disrupt the flows of energy. Can you actually achieve that with the sanctions we've seen over the weekend?
So before we saw these sanctions imposed, we saw gas imports from Russia, from Ukraine, increase dramatically in the Eurozone because of some of the financial issues and some of the dynamics. How much do they have to stop? Because of sanctions, because of political pressure? And then how do you deal with countries that are trying to shore up their own domestic production in order to keep some sort of oil independence while also penalizing Russia?
And Tom, I know you were focused on this going into the weekend. Coming out of it, we learned from Norway, of course, that the sovereign fund will be dropping Russia.
Yeah, I mean, it's on and on and on, John, and we've seen micro data like this. The other thing this weekend, John, that I think is a little bit below the American zeitgeist is what the foreign minister of Turkey said about the Bosphorus Straits. And that's a story that needs to be developed today of how Turkey will respond. They say they're reviewing the 1936 Montreux Agreement, which is very, very complex. Stalin was dead set against it as far back as 1939. But there's lots of these little stories financially and militarily that dovetail together.
If you're just tuning in this morning, equities are lower in Europe, much more so than here in the United States. On futures, we're down by 1.4%. The main event, I think, Tom, taking place today, there is a meeting between Ukraine's defense minister and Russian officials on the border with Belarus. As I understand from reports, Ukraine is demanding immediate ceasefire and full troop withdrawal.
Yeah, Maria Tadeo in Geneva is on top of this story. And John, the symbolism, a Polish helicopter ferrying them to this meeting as Belarus considers attacking from the north. Wow.
The coverage continues. We'll get the view of Eurasia Group very, very shortly. From New York City this morning, good morning to you all. Futures down 1.4%. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. Officials from Ukraine and Russia are meeting on the 5th day of the Russian invasion. Ukrainian President Volodymyr Zelensky Russia more than doubled its key interest rate to the highest in almost 2 decades, and it imposed some controls on the flow of capital in a bid to shield the economy from the impact of sweeping Western sanctions. The interest rate will increase from 9.5% to 20%. And BP has moved to sell its shares in Russian oil giant Rosneft. It may take a financial hit of up to $25 billion by joining the campaign to isolate Russia's economy. BP has been in Russia for 3 decades. Just weeks ago, it was staunchly defending its presence there. And Airbnb is offering short-term housing for up to 100,000 refugees. The San Francisco-based company wrote to the governments of Poland, Germany, Romania and Hungary with the offer. The housing will be funded by Airbnb hosts on the site and donors. In other news, coronavirus restrictions in New York will be scaled back in the coming days. Indoor school masks mandates will be ended. So will requirements to show proof of vaccination in New York City restaurants, gyms and other venues. Daily cases have plunged from more than 90,000 statewide in January to less than 1,700 on Sunday. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
This chip shortage is going to last longer than many people believe, likely straight through this year. And I wonder what that means for prices. Will this get worse before it gets better?
I don't know that it will get worse before it gets better, but there's no reason to believe it's going to get meaningfully better anytime soon. The Commerce Department put that data out yesterday, and what it showed is that there's a real shortage. Demand is 20% higher than it was a couple of years ago. There's a huge mismatch in supply and demand. Prices are high, prices are higher. So what has to happen is we need to make more chips. Unfortunately, there's no easy solution. The solution is increased domestic manufacturing of chips, which is what we need to do.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
How difficult was it to go to investors and say, invest, give money, put money into a travel tech company within this environment?
It wasn't that difficult because TravelPerk is doing much, much better than the rest of the industry. In fact, we are at the moment growing at 4 times revenue of pre-COVID numbers.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
From New York City.
Here in London, in Sydney, in San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
So recap the headlines.
You do not want to miss this story.
How are you thinking about those dynamics?
This is dangerous rhetoric. This is a behavior which is irresponsible. And of course, if you combine this rhetoric with what they are doing on the ground, in Ukraine, this adds to the seriousness of the situation.
Jens Stoltenberg, the NATO Secretary General, on CNN over the weekend. From New York, equities down 1.5% on the S&P 500. And on the Nasdaq, we're down by a similar amount. In the bond market, a bit into treasuries, as you'd expect. Yields are down by 5 basis points to 191. Crude up to about 96. 95.98, up by almost 5 percentage points. Dollar ruble is a 22% move. Tom, it was a 40% move at one point. We're off session highs.
We're off session highs and a lot of other stuff range bound. We'll keep you abreast of this in equities, bonds, currencies, and commodities. Jane Foley with us here a bit on the ruble. Right now, he is practice head at Eurasia Group, which barely describes the complete knowledge he has of the continent of Europe, working with Dr. Bremer, Alex Bordeaux of Eurasia Group this morning. Alex, how does Europe adjust to a new Belarus far more attached to Russia than we thought?
Well, I think we are going to see decisions being made by NATO going forward about how to deploy troops more substantially in countries that are on Russia's western border, that are on Belarus's western border as well. I think there's still going to be a great deal of care taken amid the war going on right now, not to directly intervene in any way. But I think, for the U.S., for other NATO members, they want to show the Baltic states, they want to show Poland that their support is there, that they're going to continue to help them in what's going to be a much more tense environment.
There is phrases from other follies called boots on the ground. Does Russia have enough boots on the ground?
Well, I think that they do. I think that they also have a significant amount of force still not yet committed to this fight that's sitting on the Ukrainian border. And I think what we've seen so far is strategy or tactics by the Russian military that's maybe not been as aggressive as was initially expected. I think the concern in the coming days is that those decisions may start to shift on the part of the Russian military, that they may become more aggressive. They may start to attack urban centers in Ukraine more directly, leading to higher civilian loss of life, unfortunately, and also leading to increased anger amongst Western countries at the actions of the Russian military.
Alex, your base case hasn't changed. That's what jumps out to me, even after the events of the weekend, when so much happened. Your base case has not changed. Run us through your base case, and then if you can tell me what would change it.
Well, we still think that one of the Russian objectives here is regime change in Kiev. We think that there's still a good chance that they could accomplish that, depending on what they bring towards Kiev itself. We also think that the intent is to political control over the entirety of the country. And certainly we've seen that initially the Russian military has not made the successes that I think they anticipated at this point. I think they're very surprised at the resistance that they're seeing. But there, as I said, there's a lot of force that they can still bring to bear here to carry out these objectives. I think to a certain degree, what we would want to see is what happens on the ground with the negotiations between the Ukrainians and the Russians at the border with Belarus. I'm not very optimistic that this is going to lead to some sort of a deal or cessation of hostilities. If it did, then we could see something different on the ground. But for now, I think that the Russian military operations are going to continue. And if these talks fail, I think there's a real risk here that the Russians basically just say that they've done all they can on the negotiation side and they press ahead.
Alex, what do you make of the reports of some of the unpreparedness of Russian troops, whether it's supply lines that didn't keep up, whether it's the fact that people didn't turn their phones off and Google Maps was tracking the progression of tanks?
Well, I think some of this has been surprising in terms of how the Russian military has actually acted on the ground. Some of the tactics being used, many defense analysts have sort of been analyzing this and seeing things that are different from what was anticipated. To a certain degree, I think that there was a sense in Moscow that this was going to be easier than it actually has been. And that to a certain degree, the Ukrainian public was going to be more receptive to a Russian intervention than they clearly are in places, not only in Kiev, but in the east, in Kharkiv, in the south, in the west. I think they're coming up, seeing more defiance than had been initially expected. And I think that may also explain some of the planning or some of the execution of what we're seeing.
Alex, there have been a number of reports about oligarchs and how much they're very concerned about the economic ramifications of what Vladimir Putin is doing. Have there been any signs of pushback? Can there be? Or is Putin just that much more isolated and really operating on his own and at his own whims?
I think there's been some limited pushback, but very limited pushback. And the reality is that for Russia's elite, even to a certain extent for the security services, there are limits to what they can say, what they can do to try and change the situation. And they do face the risk, to a certain degree, of crackdown if they do speak out. And I think what we saw last week was President Putin trying to show the public and to show the elites that he's the one in control of the situation and that he's the one that knows best. And I don't think that there's much that we're going to see, especially coming from the business elite, that's going to really change things in terms of Russian decision making.
Alex, what do you make of the protests happening domestically in Russia, not by the oligarchs, by the public?
That potentially, I think, does have a bit more weight here, because I do think to an extent that the Kremlin really does pay attention to what the public is thinking. Now, to a certain degree, they're going to dismiss, Putin in the past has dismissed public protest as not being genuine, and in some cases even fomented by Western governments, and that's a way to kind of delegitimize what's taking place. But if we continue to see lines at ATMs at banks, concerns about the economy, those are the domestic issues that Putin has tried to protect and guard against. And with these sanctions in place and the fears that are being generated by the sanctions, I think that's going to be a real concern for him in terms of how to deal with this. And I think that's some of what we're going to be seeing today in the messaging coming from the Russian government to the domestic audience.
Alex, thank you, sir. As always, Alex Brodeur, the practice head of the Eurasia Group. And Tom, just to sit on that for a little bit more time, because I think it's so important. We face financial instability risk in Russia now. That's clear and obvious. Economic pain for the Russian people. Today, waking up to see these central bank hike rates to 20%, Tom, from 9.5%. That's going to hurt.
Again, and this is the mix here in the rationalization of fancy people like oligarchs that own football teams, and that they have a foreign calculation. A huge body of 160 million, whatever the number is, don't have a foreign calculation. They have a domestic calculation, and it's brutal. John, I think there's a lot of micro data that matters. I went to the Faro heart of the matter, and of course, this is south of Venice on the Adriatic Sea. Bologna, am I pronouncing that right, John?
Just about.
Okay,
you can
there?
carry on.
Okay. The price of durum wheat, which is what I guess you make pasta with, John, up 160% from 2016, up 70-some% in the latest surge. These are micro data that matter.
These are headlines that matter, Tom, and headlines banks never want to send out. From Raiffeisen, they say their Russian subsidiary has strong liquidity, has a strong capital position. They're things you never want to have to say, Tom, at a time like this.
Lisa Bramwitz mentioned this earlier. Liquidity is worth watching. Some of those LIBOR OIS statistics are elevated.
It's tough for those banks in Europe this morning. Raiffeisen, of course, out of Vienna. Futures down 1.5% on the S&P. On the Nasdaq, down by 1.5%. I'll take a miss, Tom.
At the Keene household?
I'll give that a miss. From New York, this is Bloomberg.
It's almost the end of the year, but Bali is still quiet and empty. I am here in Kuta Legian, one of the main walking streets here that is used to be a tourist spot for beach, dinings, shopping, but many shops here are still closed. Most of the outlets are either for rent or for sale as they have run out of business.
Saya kerjanya di sini udah lama, udah ada 10 tahunan di sini kerja. Masih sepi sih, nggak kayak dulu. Kalau dulu kan rame, sekarang ya ada 1-2 itu ada. Tapi Nggak kayak dulu. Kalau dulu ramai sekali. Sekarang paling dapat jualan ya 100, 120 gitu. 200 ya. Kalau dulu sih ya nyampe dah 1 juta, 1,5 tuh nyampe dapat jualan. Bisa sampai 2 juta dulu. Sekarang nggak pernah lagi dapat segitu. Sama aja. Belum ada turis ke Bali. Masih ya domestik aja.
While Bali has reopened its borders for foreign tourists since October, they're still not coming in. Many international airlines are yet to reinstate their direct flight to the island. Balinese people here really hope they can see more people from Australia, China, and Europe to come visit next year.
The capital markets can really help the shift to sustainable and decarbonized global economy. What are you noticing in that as ESG is now the buzzword literally everywhere?
It is definitely the topic of conversation in most meetings I have with company CEOs, with investors, with industry groups. It's amazing.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Things can turn fast, and when they turn fast, it tends to be transmitted through those financial shocks.
I think you're trying to hedge broad market risk.
You need to have some exposure to value, and I think really it could be quality value.
One wants to have portfolios that are liquid, resilient, and agile in this climate.
This situation is fluid, and the narrative could change very quickly on it.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
A lot changed this weekend from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance Live on TV and radio. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Farrow. TK equities down 1.4% on the S&P.
They're down. I'm going to call it a contained down with the VIX out 5 points. We had a 33 level on the VIX moments ago. John, the Bloomberg shows a lot of data and the correlations and cross currents of it. And I would suggest all in all, it's better managed this morning than I expected last night.
Our focus this morning, Tom, talks between Russia and Ukraine on the border with Belarus. That's where the big effort is taking place right now.
It is. And moments ago, David Hellier, John, and you've got to translate this because I think this is germane to the debates of this morning on international relations. The gentleman from the Chelsea Football Club, according to the reporting of our David Hellier, Abramowitz said to be contacted by Ukraine to help broker peace. Are we surprised, John?
I don't know, Tom. Let's see how that plays out. I've got no idea whether someone like Roman Abramovich can make that happen, because there is one man that matters at the moment, Lisa, and it's his decision and his decision alone that brought us here, Vladimir Putin in Russia.
And the isolation of him. Who is going to convince him to do something else? And there has been a number of reporting talking about how increasingly isolated he is. I'm watching Russia right now, and also from China's perspective. China has not necessarily come out with a hard line on what they want to do with Russia, and they provide a lot of their foreign currency reserves at this point. There is a big interconnection, and there is pushback internally in China against the lack of a stance.
Well, Lisa, let's do a couple of things. Let's talk about dollar ruble, that weakness we see this morning, and the central bank's response to it. To move rates to 20% from 9.5, that's a monster move.
It recognizes how monster the moves are of the sanctions and trying the efforts to isolate Russia financially from the world system. Honestly, this is unprecedented in its scope and in its potential scale as some additional sanctions are considered.
Let's work through the price action of this morning, and good morning to you. Futures are down by 1.3% on the S&P. On the Nasdaq, we're down by 1.2%. In Europe, it's much harder, much harder, with the European banks down and down hard. Into the bond market, a bit where you expect it in treasuries. 10-year yields lower, treasuries up 191.65. Treasury yields down by 4 basis points. Crude at $96 a barrel, up about 5%. And Lisa, once again, Brent through 100.
Although a lot of people are wondering why Brent isn't even higher, given the fact that there are additional sanctions. And we've been talking all morning, John, about how can oil majors avoid taking a move like BP? How can banks continue to transfer money to Russian gas majors in order to get the supplies? Today, what I'm watching, Germany's Olaf Scholz will be at the European Roundtable for Industry in Paris, along with France's Emmanuel Macron and the European Union's Ursula von der Leyen, talking about how to proceed with gas, with other issues. I'm really curious to see what Olaf Scholz says about this pivot, committing 100 billion euros to modernize the military, spending 2% of Germany's gross domestic product on defense by 2024. That is the NATO's goal. They have missed it for years, and the agreement to supply Kyiv with military supplies, a big shift away from a very neutral stance post-World War II. We're also looking at Atlanta Fed President Raphael Bostic, who's taking part at 11:30 in a discussion hosted by Harvard about the economy. This is really a huge question. How does the Fed respond to a stagflationary event where you have inflation rising and growth coming down? Do they hike more or do they hike less? Right now, the market is pricing in a more accommodative Fed than we previously were expecting, with real yields falling yet again for all the wrong reasons. And at 11:15 a.m., President Biden is hosting a call with the allied nations on how to deal with this. Really front and focus is the gas prices, oil prices, as oil prices do surge to the highest going back to 2014, and gasoline in the United States rising to the highest since 2014, also at a time when this is going to impede directly on consumers' ability to spend some of the discretionary funding.
Elisa, thank you. A lot to watch this week as well. Payrolls on Friday. Chairman Powell speaks a little bit later this week too. Tom, dollar ruble 101.
Dollar ruble 101, and I went back, John, and I looked at the 4 terms of President Biden. He has had President Putin, and he has had a Putin devaluation. We moved from 27 ruble to the dollar out to 101, 103 ruble to the dollar, and that's a 70% plus Putin devaluation over a good 20 years.
What we're all thinking about, Lisa, is how much worse it could be. How much worse it could be if foreign owners of Russian assets were actually able to sell them today into the Russian market.
Look, why would you close the exchange in Russia if you were not concerned about an absolute tanking in the valuations?
That's why it's going to take a long time for this to play out, Lisa. The first move, yes, that's the knee-jerk reaction. It always is. But, Lisa, this could take days and weeks to figure out.
Well, and we were talking to Russ Kostrich of BlackRock, and we asked him, what are you specifically doing right now? And, John, he said he had prepared already. But do you sell this? What are you selling into? What's your conviction rate at a time when things are moving faster than we could have imagined?
Let's get to Brian Bowski, the Chief Investment Strategist at BMO Capital Markets. Brian, can we just start with the question we've asked a lot of guests over the last week or so? What's changed for you?
Well, good morning, and sorry I had to do this phone here this morning. Nothing, and you're probably not going to like that I'm saying nothing, but we don't want to be reactive. You know, the market is dealing with things right now that it doesn't know and it thinks it knows. It thinks it knows that this is going to be over kind of quickly, and that's what history shows, and we wrote a report on this last week in terms of what happens following geopolitical events, and the market tends to gravitate around things that we know. We don't know the effects of growth. We don't know the effects of inflation. We think we may know, and that's why everyone's pointing towards 6 or 7 interest rate increases, everyone meaning consensus. I'm not as clear on that, Lisa and guys, but at the end of the day, this is a reactive, momentum-driven market, has been for the last couple of years, and that is why you have to kind of do nothing right now. You don't want to make a binary decision, meaning buy or sell. You want to have those positions that you want to be in longer term, but you want to have a process and a discipline with respect to looking at companies that have consistent fundamentals, great cash flow, strong balance sheets, and great earnings, meaning strong earnings, and that's the U.S. stock market.
The U.S. stock market, and Brian, what's so important here within your optimism is we need to know how you feel about big tech, about Apple, about Amazon, because they describe what you've just described. They're getting beat up right now like the Minnesota Vikings.
Well, they are, and the Vikings have a lot of work to do over the next few years. As you know, Tommy, great to hear your voice. You know, big tech, I think, should be a part of most people's portfolios, especially if they are equity investors, Tom. And the stocks that you mentioned in big tech are those consumer staple-ish big tech names that are being kind of thrown out with the bathwater in terms of all tech. And I think you can't paint technology with one broad brush. You have to be a stock picker. And I believe the market has been discriminating to the high multiple tech areas, and that's exactly right. But I wouldn't consider these names high multiples. I would consider these names consumer staple-ish and cornerstones to either growth and or value portfolios. And so we want you to continue to nibble on these names as the market is discriminatory toward these names as they treat all tech with the same thing. But at the end of the day, we want you to be a balanced investor both in growth and value, small, mid, and large, be discriminatory in terms of fundamentals, and don't be reactive in terms of making these binary decisions of selling everything.
But Brian, there have been some pretty significant changes, and particularly with respect to sanctions, and particularly with respect to exposures of specific companies, whether it's banks or whether it's oil companies, like BP forced to sell its Rosneft share. How much do you start to factor in and game out the perspective for something similar to happen at Shell, at Exxon, at other energy majors that are grappling with a new regime?
Great question, Lisa. Again, great to hear your voice as well. I would say that, energy is 3% of the market, and it's had a heck of a run. And from our lens, we want you to be more neutral energy because of this huge move, and it's excessively consensive to like energy now. Remember, 2 years ago, energy companies were paying you to take physical delivery of oil, and we've kind of forgotten that already. And we do know that the supply issue has been where demand has outstripped supply for 5 or 6 straight quarters. We haven't seen that in decades, and we do believe that's going to roll off. Now, if you take a look at energy a year from now, oil prices are going to be lower. And so oil companies have about 12 months now to take advantage of this higher price, and they've had a poor time being able to add capital because of the whole COVID and pandemic situation in terms of getting employees to add capital and invest in. So they have to kind of hurry to get things going. In terms of the financials, this is why you want to own money center banks, because they have multi-divisional assets. And if rates do end up going lower here, the Bank of America, the Morgan Stanleys, the Canadian banks are exquisitely positioned because of their multi-divisional assets. Regional banks are going to be the ones that have harder times. So I do think that this is why you have to really focus, Lisa, on less about the sector and more about, specific names. With respect to BP and some of these other international oils, that's why you want to be more domestic and or Canadian, because you don't have the exposure with respect to what BP and Shell have.
Brian, great work as always, buddy. It's good to hear from you. Brian Bowski there of BMO. I want to turn to the European banks. Some of these names, Raiffeisen down by 12.9%. Out of Vienna, out of Italy, UniCredit down by 12%. Out of France, SocGen down by 10.4%. Big banks, Tom, with a big presence in Russia.
Well, the Austrian bank, Raiffeisen, RBI space AV is a Bloomberg symbol, has a Deutsche Bank-like book, 0.38 on the Austrian bank. And John, just to show the compare-contrast here, Deutsche Bank off the acclaimed BQ function on the Bloomberg, 0.40 book value with their latest plunge. And you compare that to an American giant, JP Morgan, 4.2 times greater book value.
Crazy.
At JP Morgan. Crazy is the CFA designation.
Well, Tom, and how's it going to change? Because we started this year hoping for people who were long European banks that the ECB would hike interest rates. Feels like that story, for now at least, is gone, dead and buried.
This is the heart of the matter, and we really haven't talked about it with the news flow, John. But I don't understand how central bankers get political cover by raising rates into a war. That's original to me.
The Federal Reserve up next. Chairman Powell speaking later this week. Their decision, March 16th. Futures down 1.3% on the S&P and the Nasdaq, down by 1.2%. From New York City, for our audience worldwide, on TV, on radio, this is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. Ukraine is holding talks with Russia today aimed at ending the fighting. President Volodymyr Zelensky questioned whether much will come from the meeting, but he says he felt bound to make an attempt if it meant a chance at peace. Meanwhile, Russia's plans for Ukraine face rapidly rising costs. Tougher than expected resistance has slowed the military advance, even though Russia retains overwhelming advantages. Russian credit default swaps are now signaling there's about a 56% likelihood of default on government debt. It costs about $4 million upfront and $100,000 a year to insure $10 million of Russian bonds. Tougher sanctions have prompted Moscow to take emergency measures to shield its financial sector. One of the penalties prevents Russia's central bank from using its foreign reserves to blunt the sanctions. And the European Union has agreed to send $500 million in military aid to Ukraine for lethal weapons. It's the first time the bloc has supplied arms to a country at war. The package may include supplying fighter jets to the Ukrainian Air Force. And the price of oil soared. More sanctions were imposed on Russia. Brent futures jumped more than 7% before pulling back slightly to around $103 a barrel. Russia is the world's third largest oil producer. Any disruptions to flows could exacerbate the tightness already in the market. And Canada's TD Bank has agreed to buy a Tennessee-based First Horizon in a deal valued at $13.4 billion. The price represents a 37% premium to First Horizon's close on Friday. TD will use excess capital on its balance sheet for the transaction. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
为开春的时候，为各国运动员和随队官员提供热情周到的服务。
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
What do you think is the impact of the Prime Minister on the market?
As Mr. Suzuki, who is the Financial Services Minister, he mentioned at his own press conference, and share buybacks is widely used to return profits to shareholders and improve ROE. And how to share out the profits from growth is, totally the decision of the management of each company after carefully taking, all the stakeholders into consideration. And I believe Mr. Kishida has a quite cautious stance on the uniform regulation of share buybacks. And I think because he is giving a consideration to each company's, individual circumstance and decisions.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
energy sanctions are certainly on the table. We have not taken those off, but we also want to do that and make sure we're minimizing the impact on the global marketplace. And President Biden's view is the fact that we need to reduce our dependence on foreign oil, on oil in general, and we need to look at other ways of having energy in our country and others.
Jen Psaki there, the White House press secretary from New York, with futures down a little more than 1%. We're off session lows. On the Nasdaq, we're down by 1.1%. In Europe, down more than 2% in some places. Into the bond market, a bid into the havens, a bid where you expect them. 191.50 on 10s. Yields lower by, let's call it 5 basis points. Crude at 95.94. We're up there by 4.73%. And dollar ruble, Tom, we're looking at a move of about 20%. And a move from the central bank to take interest rates to 20% from 9.5.
Range bound, I'd call it here on dollar ruble. Also, we quote euro ruble in a so-called ruble basket as well. But on dollar ruble, it is at a 103. And with what, John, overnight Sunday, obscure bank tweets was out at 170, I think.
Oh, Tom, I mean, at the moment, what have we got? What kind of trades are we looking at the moment? If you're a holder of foreign assets, we keep saying of Russian assets, a foreign holder of Russian assets, and you can't sell them right now, is dollar ruble at 98 a decent read of what's taking place?
Yeah, we're going to have to see. Let's do this. We got so much to talk about. I'm going to come in here with an interesting angle, if you will, with Anne-Marie Horton in Washington. And Maria Tadeo planted in front of the water fountain in Geneva, which is a beautiful shot for those of you on radio. Clearly, Maria has a lovely day in Geneva. Anne-Marie, I'm going to go to your expertise here, and it can be on the gentleman of the Chelsea Football Club. It could be on the guy of aluminium. But what I'm really interested in is Mikhail Fridman, the oligarch, and his comments. He grew up in Western Ukraine. His parents live in Western Ukraine. And these three guys, led by Fridman of his bank, Alpha Group, they're going after their guy.
Well, yes, and they're doing it in a very diplomatic way, but they are certainly stepping up. I mean, the response from oligarchs as well as Russian celebrities has not gone unnoticed in the press. Friedman writing a letter to individuals in his company. Tom, you're right, talking about how he's actually Ukrainian and Russian. His family is still in Lviv. Right. Lviv is his favorite city. And then you have Oleg Deripaska on his Telegram channel. I was just viewing it because I subscribe to his Telegram channel. And he's talking about an end of all of this state capitalism and that it's necessary to change the economic policy. That's what he says today. Over the weekend, he was also calling for peace. And then you have Roman Abramovich being called by the Ukrainians to help with a peace agreement. The oligarchs at the moment are starting to step up and voice their opinion about this war.
Maria, how does that fit in with your day in Geneva? If the capitalists, I guess I can call them that, of the Russian Federation, and even some reports of the military looking at a very lonely Putin, how does that fit into the complexity of this Monday?
Got no audio there for Maria Tadeo, Tom.
We've got a loss in audio there as well. Could have been the Chamber of Commerce of Geneva. Let me go back to Anne-Marie. Anne-Marie, I think you heard that same question as well. It folds into the complexity. Does Mr. Putin call up the gentleman from the Chelsea Football Club and say, hey, we're on your side, what can we do?
This is going to be a difficult position for the oligarchs. I mean, we should note that they're taking huge gambles by speaking up right now. Putin has an incredibly small inner circle. What I'm hearing is that it's likely just individuals from the security apparatus, the FSB. You saw that meeting he held with a number of oligarchs. Oleg Deripaska was actually not at that meeting, but a number of them were there, like Igor Sechin, Elekperov, a number of individuals. And Putin basically said to them, I had no choice. I had to do this because he knew it was coming, and that was going to be crippling economic sanctions and those individuals being cut off from Western financing and the likes. We have to see where this plays out, but it is, I would say, the first time, having really watched Putin and the oligarchs and the business community interacts there, never publicly you would hear these statements. Potentially a little bit in person, you can get a sense of where people stand in terms of how they feel about the president since 2014, especially the annexation of Crimea. but never publicly you're seeing this kind of pressure on President Putin from the business elites.
Maria, let's try you again. We hear that the audio has been restored. What is the sense among European leaders about the unity there when you start to talk about some of the sanctions that will have not only harsh effects on the oligarchs and others in Russia, but also on themselves?
Yeah, and you know, to answer that question, I think we've seen over the past 24 hours incredible unity from the European Union. But to go back to the point that Tom made about how are oligarchs perceived here in Europe, what an official told me yesterday is that the party's over. If you want to get on a private plane to go to Cannes to have a nice day, well, that's not going to happen. If you want to go skiing right now in a nice chalet in Courchevel, that's not going to happen either. So this is going to have a real impact on their everyday life and their lifestyle. But they do say you have to be very careful about not overplaying and overhyping the oligarchs, because the only reason why Deripaska and why, of course, Abramovich are rich is because they're close to Vladimir Putin. Their fortune, in some ways, belongs to Vladimir Putin. So they always say, I would not play up the oligarchs facing up to Putin because they know what they owe him. And they also say the protests that we're seeing in Russia, of course, it takes a lot of courage to do this, but we've seen this play out before. We would need to see a level of social unrest we haven't seen in Russia for about 20 years to actually believe that this can change and force change from the inside. If anything, the focus is on the military and the Russian military, whether they believe that it's worth sticking with Putin.
Maria, thanks for sticking with us. Maria Tadeo out of Geneva this morning. Anne-Marie down in Washington, D.C. Getting some comments from Stanaris of the ECB, the governor of the Bank of Greece. Stagflation in the short term. The call coming out of an ECB member this morning, Tom.
I have trouble with the word stagflation here, John. I get the idea, the dynamics here of slowing growth and higher inflation, but the jump condition here is so much more than the way I perceive Lawrence Summers talking about stagflation. I look at that as a more gradual process, a more normative, economic dynamic. We're not dealing with that now. We're dealing with war. And I don't know if that's a growth crush, a growth collapse, or a gentle slowdown, but to me it's not stagflation.
I think it's a short way of saying, Lisa, we're going to have growth problems and higher inflation. Yeah.
Well, and Sarah House addressed this. At what point does stagflation turn into recessionary fears? And she said we're quite a way away from that because of the strength of the consumer, because of what they've been able to absorb. If gas, though, gets to $4 or $5 a barrel, how much does that equation change? I mean, how quickly can we see that shift at a time when we're still recovering from a pandemic?
Well, it goes back to that Jeff Curry note over at Goldman Sachs. They upgraded their forecast short-term call for Brent to 115 from 90-something. And Lisa, they basically said, barring a breakthrough in peace negotiations, the only way to get this one back down is to get it up high enough to cause demand destruction, and that's the rebalancing mechanism.
And take it a step further, if it hasn't caused demand destruction at this point, how much further does it have to go in a dynamic economy that is growing to get that effect?
Futures recover a little bit here. We're down by 0.9% on the S&P. Over in Europe, the stock 600 down just 1 full percentage point. The talks this morning where the focus is between Ukraine and Russia on the border with Belarus. Any headlines when we get them, we'll bring them to you. From New York, this is Bloomberg.
this going to primarily be chips for your own business, or is this going to be more centered around the foundry business and external customers?
It's going to be both. And what we said today is we're announcing 2 fab modules. It's a large location, 1,000 acres, because I'd hope to build out a full 8 fabs or more on this location. And if we do that full project, it'd be $100 billion over the course of the decade or so. So a massive project. Initially 3,000 jobs, 7,000 construction workers, supply chain, et cetera. I mean, this is just fabulous. And the products will be our most leading edge chips. So as we said, this will be the angstrom era when we're going to 2 nanometers and below into the angstrom era. So it'll be the most advanced chips, potentially the largest manufacturing location in the world. We'll use its output for our internal products, but also for those of the foundry customers as well. So it's going to cover both.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
Live from New York City, here's the price action. We recover off session lows just a little bit, down about 1% on the S&P, on the Nasdaq down by 0.9%. Some headlines just dropping across the Bloomberg. Allow me to bring them to you. The US banning transactions with Russia's central bank to allow some energy-related transactions with Russia. US sanctioning Russia's Ministry of Finance. Tom, these sanctions continue. The actions are effective immediately. Just to say, Tom, they also sanctioned Dmitriev, a close ally of Putin as well. The sanctions hit Russia's National Wealth Fund, Russia's Direct Investment Fund, the Ministry of Finance, the central bank. I mean, take your pick, Tom. These headlines just drop in now.
They've got to go with the Russian central bank, is to me, John, the lead here as well. And again, they're going to dovetail into further sanctions and further headlines through the evening in Europe. And to me, John, what we saw moments ago before that on the embassy in Belarus is just as important.
They are going to do what, Tom? Remove their staff from that embassy in Belarus?
The U.S. is, I believe, going to remove staff from Minsk, and to me, that's a big deal. I mean, and I'm looking here at ruble. I haven't even had time to look. Ruble's pretty much unched here off of where it's been with a 19 big figure move. But,
yeah.
John, these kind of headlines continue to add weight, a cumulative weight.
Elisa, those transactions with the central bank, and this headline right here, to allow some energy-related transactions with Russia, a minimal energy carve-out, whatever you want to call it. I just wonder how this is going to work in practice. This is the theory. How does it work in practice?
If you're banning transactions with specific banks, let's say those banks do business with specific oil companies, how do they end up transferring the funds if there are sanctions that are unrelated to oil? It's just an incredibly complicated mix at a time when it does seem like Moscow is all the more isolated.
Futures down 0.9 on the S&P, on the Nasdaq down by 0.9% as well. We'll stay on top of those headlines for you. Let's get you some single names, some movers. Here's Kriti Gupta.
Yeah, John, let's just talk about the purchasing power and simply what you're going to see and how the read-through is as you start to see Russian purchasing power decrease, what the read-through is into the United States. And here are some stocks that actually show that. McDonald's, for example, down 1.4%. Remember, 9% of their revenue comes from Russia and Ukraine combined. A similar story when you look at Coca-Cola, down 0.5% in the pre-market. I'm looking over 20% of their volume comes, once again, from Russia and Ukraine. You can't forget Yandex, of course, the Russian search engine listed here in the United States, down a whopping 21%. Tom, John, and Lisa, just 2 sessions ago, this was trading at double the price. Let's talk about some of those defensive names, though, because those are also moving quite a bit in the pre-market. You are seeing quite a bit going into the defense names like Lockheed Martin. Raytheon is another example of that, as well as those energy names that are following Brent and WTI even higher. But remember, the ones that have far more exposure to the United States, those are getting the bigger bid. For example, Occidental up 0.5%. I'm going to end here with BP. Of course, we know as they look to offload that Rosneft stake that they have, a 20% stake in that state-owned oil giant. Their stock is actually dropping 7.2% in the ADRs.
Kriti Gupta, thank you so much. Greatly appreciate it. Right now on foreign exchange, Jane Foley joins us, head of foreign exchange strategy at Rabobank, with all of Rabobank's commercial relationships across Europe. Jane Foley, from your strategy standpoint, what is the state of liquidity within the European financial system?
Well, I think the liquidity, quite clearly, there is none really in the Russian ruble, or very, very little. But I think if we move into the agricultural space, I think that's where perhaps the spotlight is beginning to shine. Certainly, it can be a little bit more difficult. We're not used to having crisis that affects agricultural prices or commodity prices in this area. So we are seeing signs of a little bit of stress, really unfamiliar conditions in those sorts of markets really throughout.
We've been talking, Jane, about how ruble will open for trading beginning last evening, 6, 7 p.m., whatever time that was. Is ruble fully open for trading from where you sit?
I don't think it's going to be fully open really for a long time. You've got to bear in mind that because of the sanctions, so many banks are just unable to trade with Russian counterparts, and therefore automatically you get a real crushing of liquidity. So the prices that we see on the screen, just seem, well, we've seen an enormous spread traded in the course of today compared with where we would normally see the Russian ruble. But again, that's just a reflection of the fact that very few people are able to trade it right now. So that really is not a proper market, and it's probably going to be like that for some time.
Jane, taking a step back, over the weekend, the backdrop changed materially in a lot of people calling the U.S.'s actions and Europe's actions a weaponization of the hegemony of the dollar, basically saying that they are using the dollar's predominance here to push Russia out of the financial system, and that it would have ramifications longer term for the dollar and it would weaken it. We're not seeing that in the market. It's quite the opposite. But do you think that there is validity to this argument?
That is an argument that is not new. That is an argument which has been going on really at least 8 or so years. Or, we can take it back to the Crimea, for instance, 8 years ago, where Russia really then tried to protect itself against some Western sanctions, really ramping up those foreign exchange reserves, increasing its self-sufficiency in food also, and also trying to have more invoices that were not US dollar denominated. Now, the dollar is, of course, the primary currency in the global payment system. That is why sanctions have been used by the US government, to such an extent. Think Iran. And certainly it is a weapon, if you like, to try and force another country to really back down on what they want to do. And it's been used very powerful in this instance, and really, with the blessing of all of the US's Western allies.
Jane, there's a concern that there will be frictions. There'll be huge liquidity issues within the major markets, money markets, dollar financing. And there's been some speculation, including by the likes of Credit Suisse's Zoltan Pozsar, that the Federal Reserve will have to extend FX swap lines and do other types of intervention. Do you see any signs that will be required?
I think sometimes the fact that a central bank is willing to do it might be enough. Because often what creates these liquidity shortages is just sheer panic, and people trying to get their hands on dollar liquidity just in case, not that they need it now or even in a few days' time. So the fact often that the Fed may promise that it's there, that these liquidity lines are possible if needed, could be enough to see the tension. So this is really about stopping market panic. And we've got to remember that, yes, on Friday we did see some ports being shut down in the Black Sea, but right now we don't have a huge amount of disruption yet to food, certainly, or energy, and this is where the panic could come from, and this is perhaps why some of the sanctions that have been announced with respect to the SWIFT system haven't yet been universal. I think Europe would like to know that it can still get its hands on some Russian supplies of energy. That's really necessary for a country like Germany, which of course has a huge amount of industry which will be using Russian energy. So it's really important how it's managed to stop that panic that may then require some of those extra liquidity lines.
Jane, just to build on something you mentioned earlier, the ruble's not a proper market, certainly not this morning, and to build that out just a little bit more, when foreigners can actually sell their Russian assets, when the market reopens again, what kind of pressure would you expect on this currency?
a huge amount of pressure. We've seen, for instance, that the news from BP, that's just one that you mentioned a little bit earlier on, selling its Russian stake. I think also that the Norwegian Sovereign Wealth Fund, the biggest sovereign wealth fund in the world, and it wants to sell its Russian assets. It owns bonds as well as a lot of stocks in Russia. Those will be going now, even if it's delayed, not just today or another few days. At some point, that selling will come, and therefore we can expect a lot of downside pressure on the ruble.
Jane, thank you as always. Wonderful work out of London. Jane Foley there of Rabobank. Some of these headlines out in the last 15 minutes, widely expected. Some of them not. Allow me to read them for you. The US banks bans transactions with the Russian central bank. Lisa, sanctions a close ally of Vladimir Putin, the Russian president, sanctions the Russian Ministry of Finance, sanctions the Russian National Wealth Fund, sanctions the Russian Direct Investment Fund. Just on top of the effort we've already seen over the weekend.
Over the weekend, I was really struck by some of the notes saying that we've been focusing so much on the SWIFT financial system and removing Russia from that. But really banning transactions with Russia's central bank is possibly more consequential for the nation and possibly could have greater ramifications. We'll see, but it really does feed into some of the liquidity stories we've been talking about today.
There was a briefing this morning with reporters from US officials. Our team down in Washington putting out a couple of those quotes, Tom, from US officials. Here's two. No country is sanctions-proof when we act together. Fortress Russia will be shown to be a myth. The strategy from the US is, quote, the Russian economy to go backwards as long as Putin decides to go forwards.
Yeah, dead on, John. And you and Lisa really emphasize this more than me. And this is not just official sanctions, but the individual actions of capitalism against this war. Here is Christine Lagarde's law firm from decades ago, John, her tenure in Chicago with Baker McKenzie. And this is Catherine Gemmell out of London. Baker McKenzie to cut ties with Russia clients is sanctions bite. That in itself is a sanction from a major global law firm.
So there is supposed to be an energy carve-out here, Tom, and what's going to be really interesting is to see how much this spreads beyond and into energy as well. When you disrupt capital flows, can you make sure you carve out, Lisa, one particular part, one specific part of an economy? And I would suggest that's very, very difficult to do.
Especially if a lot of companies, as you pointed out, are self-sanctioning. They are avoiding really getting in the crosshairs of any of these regulatory issues, especially even the likes of China. There was reports that China's state bank stopped providing certain payments, funding for gas purchases and oil purchases in Russia because they didn't want to get caught in the crosshairs of the U.S.'s sanctions, just giving a sense of how far this can go.
Well, as Jane Foley just pointed out, Tom, we've still got the Norwegian Wealth Fund that needs to sell down assets. We had BP move on Rosneft, announced that.
Yeah.
They didn't have to. They faced pressure from British politicians. Others will too. Shell was in the news over the weekend as well.
John, I'm going to have great respect for the black market, and on Sunday that unofficial market was $150, $170 ruble. Right now, 104. Maybe a cut in between, and that's another 30 big figures south.
Big conversation coming up later in the next hour. Dan Yergin of IHS, the master of the crude market. Looking forward to that a little bit later. Crude right now at 4.4%, 95.64. This is Bloomberg.
Keeping you up to date with news from around the world with the First Word, I'm Ritika Gupta. Officials from Ukraine and Russia are meeting on the 5th day of the Russian invasion. Ukrainian President Volodymyr Zelensky is skeptical that the talks will lead to results, but he says he's willing to try if there's a chance for peace. Meanwhile, more sanctions have been imposed. The new penalties target Russia's central bank, plus some Russian banks have been barred from the SWIFT messaging system. Russian markets were paralyzed and traders struggled to price the ruble today. The Russian currency lost a third of its value in offshore markets. At one point, it hit an all-time low of 109 per dollar in Moscow. The central bank more than doubled its key rate to 20% and introduced some currency controls. And leasing firms may have to recall jetliners worth billions of dollars from Russian airlines. Sanctions imposed over the Ukraine invasion threaten carriers' ability to fund and operate rented planes. More than half of the active commercial aircraft based in Russia are leased, mostly from companies based abroad. And BP has moved to sell its shares in Russian oil giant Rosneft. It may take a financial hit of up to $25 billion by joining the campaign to isolate Russia's economy. BP has been in Russia for 3 decades. Just weeks ago, it was staunchly defending its presence there. Canada's TD Bank has agreed to buy Tennessee-based First Horizon in a deal valued at $13.4 billion. The price represents a 37% premium to First Horizon's close back on Friday. TD will use excess capital on its balance sheet for the transaction. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
A lot's happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
The U.S. has announced it's moving 8,500 more troops to Eastern Europe. If they're not being deployed to Ukraine specifically, why is that so important, and does that risk further provoking Russia?
Well, there's two things going on. So what the United States recently announced is that we are going to put 8,500 troops that are part of the NATO response force on high alert. That means they'll be ready to deploy on a moment's notice should we need those forces anywhere in Europe to protect NATO territory. In addition, the United States is also looking at possible additional moves that they might make to move U.S. force posture into Central and Eastern Europe. The reason we're looking at that is because a lot of the members in that neighborhood in Central and Eastern Europe feel concerned. And so we are looking at what measures we might take in the name of reassurance and deterrence.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
European Union steps up once more its support for Ukraine and the sanctions against the aggressor aggressor, that is Putin's Russia. Under this package, important Russian banks will be excluded from the SWIFT system. We will also ban the transactions of Russia's central bank and freeze all its assets.
The US and the EU moving in lockstep at the moment. Ursula von der Leyen there, the President of the European Commission, with futures down 0.9% on the S&P. A similar move on the Nasdaq 100 as well. That's the story for equities. For the bond market, yields down 4 or 5 basis points. Commodities crude up to 95.64, up 4.4%, Tom. A big move on dollar ruble, up about 20% on that currency pair.
Well, a big figure move, and at 101, 102 right now. Ruble's been range-bound here in the last number of hours. I'm going to call it, John, would you agree with me, markets range-bound within all of the news flow we're seeing?
Sure, after a massive gap at the open, Tom, yesterday evening.
What we've wanted to do through the weekend with Lisa, John, and I working with our team in London and in New York is to bring you the best voices we can find in economics, finance, investment, and yes, in this war, in our combined international relations. And suddenly, in the last number of days, the word nuclear has come forward. Hans Christensen is definitive in researching nuclear. He's director of Nuclear Information Project. He is iconic to his time decades ago with Greenpeace, and we are Greenpeace, I should say, and we are honored that he joins us this morning. Hans, before we went to air, we moved away from the continent of Europe to what is a Hollywood movie, except it's not. And that is our submarines and their submarines. Are their submarines, given Mr. Putin's rhetoric, a threat?
They are if they're used, that for sure. We don't hope it doesn't come to that level, of course. But we hear indications this morning that the defense minister in Russia has reported activities of the strategic nuclear forces. We don't know, we haven't seen it confirmed. We don't know what it is. But if it involves the ballistic missile submarines, of course, in the Northern Fleet and the Pacific Fleet, then it means they would be taking steps to increase the readiness of their nuclear forces.
To more conventional warfare, and folks, I should mention that Dr. Christensen is the kind of person who counts satellite photo images of Chinese weapons. He's that particular about counting the beams. What does dual capable mean? In the fear of those weapons in Belarus and Russia, what does this word dual capable mean?
It means that the launcher of the weapon is capable of launching a weapon with a conventional warhead as well as a weapon with a nuclear warhead. And so that can create some misunderstandings and overreactions, of course, if there's a tense nuclear crisis going on. You don't know what they really are launching, but so far we have not seen movements of nuclear custodial units in the context of the Ukrainian crisis for these types of weapons that are there.
Hans, the prospect of a nuclear altercation is so nerve-wracking that people don't even want to talk about it. We haven't heard about it that much, at least publicly. If you talk to a lot of market participants privately, they raise this first up, that this is their biggest concern and their biggest tail risk. You still think it's unlikely that it would come to that and that it's mostly just rhetoric. Why do you think that it really won't escalate to the degree that a lot of people are worried about?
Because rattling the nuclear sword is sort of a normal part of the Russian way of doing business. This is one step further, I would say, but it's still far from an actual exchange, of course, for the simple reason. It's hard to see any real justification that such enormous destruction would be justified by any of the things that are going on right now, despite what's happening in Ukraine. Well,
but Hans, this was the rationale behind why a lot of people thought that Putin wouldn't necessarily invade Ukraine on the timeline that they did. And now people are wondering whether Vladimir Putin is in fact a rational actor, whether he is going to respond in a predictable manner. Is there any sense about the operations below Putin possibly not responding to his command or any kind of upheaval? Or are people very concerned about the irrationality that we just talked about?
Yeah, definitely. There's a sort of a new level of whether he's in a bubble, cocooned in there with his advisors and doesn't quite sort of see the picture. But still, nuclear is at a level that is far beyond what is happening right now. So that's why I'm sort of confident that we won't get to that level.
Again, you have decades of experience in what is so emotional for us. Explain to us, Mr. I believe I'm pronouncing it correctly, Valery Gerasimov head of the Russian military and the Russian military's relationship with Mr. Putin. Explain that from your vantage point.
Well, it's a very small circle of people. They've been there for many years, and it's not like you have a group of people that seems to be giving him frank advice and disagreeing with him. It's more like these are his people that are carrying out his orders. And so that's kind of the most dangerous of situations, because you can sort of get into this, into this vortex where things are sort of getting more and more weird. And that seems to be what's happening right now with the nuclear saber rattling.
A depressing conversation at the moment, Hans, that's for sure. Stay close. We'll catch up with you soon. Hans Christensen there of the Nuclear Information Project. The headline that's just come from the Wall Street Journal. The US informed Saudi Arabia of a possible coordinated stockpile release, according to sources over at the Journal, Lisa. Just to repeat that, the US informing Saudi Arabia of possible coordinated stockpile release.
Yeah, this has been something that a lot of people have been expecting in order to offset some of the increase in crude prices that we've seen. We're also getting headlines about OPEC Plus set to boost output by $400,000 barrels a day, which is in line with predictions. How does Saudi Arabia factor in? If you have a coordinated release, is the U.S. trying to say, if you don't provide more supply, we will, and we'll benefit from it? So get on board.
The sources indicating for a while, Tom, that the president would tap the SPR again. We've been talking about that, I think, for much of the last month. In fact, year to date, we've talked about it over and over again. I would suggest it did not do much at the end of last year when this happened.
You suggest correctly.
And I would suggest that its potential to do something now is limited too.
Far more interesting to me, John, and I think the whole SPR thing, not that I'd editorialize ever, John, but it's just total baloney. But we were talking about Bologna earlier in Durham wheat, up 16% in Chicago. But John, what's so important to me is this new phrase, OPEC Plus. Says who? Where OPEC just everyone else is removing themselves from Mr. Putin. Why can't Saudi Arabia as well? It's fascinating.
Well, the issue at play, Tom, has been that they haven't hit their output targets. Even if they were increased, would anyone hit them? And who's got the capacity to actually hit? Brent crude actually comes off the highs off the back of some of this at $100.58 now, up by 2.7%. WTI with a 95 handle, Tom, 95.26 and up about 4%.
Yeah, the market, as a general statement, the VIX, John, just as one thermometer from a 33 level into a 31 handle right now. Again, I would say in the uproar of the weekend, John, it's a very contained, range-bound market. But help me here, Lisa and John. We don't have headlines out of these talks on the border, do we?
Not yet, no.
Yeah.
And that's what we're waiting for. So that's the main event today. We have these talks between Ukraine and Russia at the border with Belarus. Tom, we know what the Ukrainians want. Full troop withdrawal, ceasefire right now. What do the Russians want?
What do we see tonight in the Kyiv and the Kharkiv night? I mean, terrible.
Futures recover a bit. We're down 0.9%. I won't make too much of that. Crude 95.29, up 4%. From New York, this is Bloomberg.
En nuestro estudio, en nuestro experimento, no hemos pintado todos los edificios de blanco, sino estos más asequibles de pintar. y ya hemos detectado reducciones medias en el área metropolitana de 0,8 grados aproximadamente en un periodo de ola de calor y con picos máximos de 4 grados de disminución en un momento puntual del día, en una zona puntual del día. Y como dices, en una ciudad como Barcelona funciona incluso mejor que las zonas verdes, según las modelizaciones nos detectan incrementos, o sea, disminuciones de temperaturas mayores con tejados blancos que con incrementos de zonas verdes como tienen planteados el plan director urbanístico.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Things can turn fast, and when they turn fast, it tends to be transmitted through those financial shocks.
I think you're trying to hedge broad market risk.
You need to have some exposure to value, and I think really it could be quality value.
One wants to have portfolios that are liquid, resilient, and agile in this climate.
This situation is fluid, and the narrative could change very quickly on it.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene on radio and television. Again, an historic Monday. Headlines coming in across all of the Bloomberg world. John, moments ago, Russia bans airlines from 36 countries for using its airspace. It is a tit-for-tat Monday.
They react after many countries did the same to them, Tom. The Central Bank of Russia reacting as well, taking interest rates to 20% from 9.5%. We have a news conference starting with the governor of the Russian Central Bank right now, TK, so look out for headlines from that. And here's a headline from Dow Jones. We talked about it briefly in the previous hour. Let's do it again. US and major oil consumers mull releasing 70 million barrels of oil. So this is a reserve release again, potentially, Tom, on the table.
Brent crude, $100 a barrel, I believe, $4 higher earlier. And again, Jeff Curry, John, modeling out as all of our audience, all of global Wall Street, remodeling, readjusting this morning.
Well, Jeff Curry goes to 115 in the near term. That's his one-month price target. But what he suggests in his research, Tom, released over the weekend, and I think it's fascinating, what they're actually saying is the only rebalancing mechanism left in this commodity market is demand destruction. Not a supply story that gets boosted, but demand destruction. And that's the fear that a lot of people would have, Tom.
Right. Here we are capturing the moment. This is the woman as head of the Bank of Russia. She's a legit economist. Elvira Nabiullina is speaking in Russian. And John, to link this into the collapse of Russian society, she was the leader of Sberbank for a good amount of time.
Well, her central bank has now been sanctioned, TK, and we talked a lot about this through this morning and over the weekend. Those new sanctions, in theory, how will they work in practice? What does it mean for her central bank? And ultimately, What does it mean for the economy?
Lisa, and we'll show this on television and radio. All you need to know is off a cliff describes a chart. I mean, Lisa, to see Sberbank is just one tea leaf of the collapse of Russia capitalism.
Well, and we can't get that many other tea leaves because for all intents and purposes, the markets for Russian assets are pretty much closed, whether in actuality or in practice, simply because people don't know where to trade them. How do they then support an economy that's getting increasingly isolated? And what does that mean to John's point about the transmission of gas and oil deliveries at a time when they can't necessarily be receiving the payments necessary to compensate them for those deliveries?
And this from Scandinavia, John Erickson, to suspend all deliveries to Russia. Just another example of the moment.
Well, this starts to build, and Tom, I keep going back to this because I think it's so important. We've talked a lot about an energy carve-out, and I'm thinking about self-sanctioning. How many banks just pull back wholesale from dealing with anything to do with Russia? We saw the headline about BP's effort to ditch its Rosneft stake. That's really important to BP. They're walking away from it. What they get for it, Tom, I have no idea. One headline that the central bank governor just mentioned, TK, so I've got two now. New sanctions have limited our use of reserves, that we know. She goes on to say rates need to compensate for higher inflation risks. So that's where the effort will be, through interest rates, and they have moved already
and we can get
in a substantial way.
Yeah, dollar-ruble moves. There's no other way to put it, folks. I want to point out U.S. dollar versus ruble at 108. That is a substantial move here as we begin to hear from the head of the Bank of Russia. John, let's go through the data quick to get to Vishy. It's just so important to have a conversation. I'm going to look at a VIX that was 33, went to 31, and it's turned around here with these comments from the Bank of Russia.
Futures down by 1.2% on the S&P 500. Talk of a reserve release from some of the major commodity producers. What's that going to achieve? We'll see. 95.12 on WTI right now, up 3.9%. And this is central bank speak for a really tough conversation, Tom. The financial system is facing a non-standard situation. The line from the Russian central bank governor, I think that perhaps understates the situation.
Ruble 108 out to a weaker 109. We'll monitor that through this hour. A perfect time to speak with Vishy Chirapatar, Global Director of Fixed Income Research at Morgan Stanley. Vishy, an open question. What was your morning call like?
It's particularly challenging, Tom. I think as we all get caught up in the markets and the economies, et cetera, you know, these developments have a substantial human cost that we should not forget. So that's at the top of my mind is the tremendous human cost that all of these things will entail. But in terms of the markets, there is a substantial tension here between growth and inflation, and that's it has on the other hand, on the one hand, a lot of these things will lead to higher prices, higher inflation, at the same time, then a negative on the growth front. So I think it's a particularly challenging for the central bankers to manage this conflict between the trade-off between growth and inflation.
Do we just assume, Vishy, that inflation hurts growth? Is that just the base case assumption now, that we've got to move up our inflation forecast and move down our growth outlook?
It's yes, broadly speaking, yes, but I think it's not uniformly across the world. So certain regions have a much bigger exposure than obviously Europe does, and we think that the net effect of the higher, say a 25% increase in energy prices and the effect on the consumer and business confidence in Europe could shave off maybe 1% of growth in the euro area for 2022 and 23. On the other hand, in Asia, the effects are much more muted. And the U.S. is somewhat in between those two things. I think the near-term economic growth is on a firmer footing in the U.S., but we will really be watching how financial conditions or they develop over the course of next few weeks and months.
Vishy, do you think anything changes for the Fed? Goldman came out, Jan Hatzius and the team, and upgraded their PCE forecast to 3.7 for the end of 22 from 3.1% previously. They've kept 7 hikes for 22, threw in an extra hike for 23. Does it change anything?
So we think that what changes is what it does not change and what it changes. It does not derail the removal of the policy accommodation altogether. It does reduce the chances of particularly aggressive removal of policy accommodation from the from the DM central banks in general, including the Fed. So we expect that the next couple of months, the next couple of meetings, the 25 basis point hikes that we expect to see, that we had been expecting to see in the next couple of meetings, will continue to be there. Our economists have not revised their full year path, which is 6 hikes for 2022. They have not revised it up or down. I think what we will be looking to see is how financial conditions, particularly to the access to credit markets, will evolve over the course of next few months. So near term, very much on track. How this will translate in the future depends upon how financial conditions will evolve.
Vishy, to build on that, how constructive are you on credit, on the corporate default risk, given the fact that we now have a double whammy of both faster inflation and slower growth because of what's going on?
So notwithstanding the two factors that you just mentioned, if you compare where we are in the credit fundamentals from all the previous episodes of where policy tightening, at the onset of the policy tightening, the fundamentals are in a much better shape. Lower leverage, gross leverage, and net leverage, significantly better coverage, and cash on debt ratios are all significantly better today than they were either even before COVID onset in March of 2020 or before the onset of any of the previous hiking cycles. But the challenge really is a bit more on valuation. Fundamentals are fine, and I don't think that this will, at least what has happened so far, we will engender a spike in default rates. But valuations, we think, still have adjusted quite a bit over the last week. We think there is probably more adjustment in valuations that are still required.
Vishy, awesome, as always, buddy. You know, we appreciate your time. Vishy Tripator there of Morgan Stanley. We're all trying to work out what this means. Dollar ruble with a 30% move now. Out to 110 briefly, right now 107. This is what the central bank governor of Russia has got to say about the situation, calling it a non-standard situation. That understates the difficulties of Russia right now, going on to say that all banks will continue servicing liabilities. The central bank recommending that banks restructure loans. Just on FX interventions, and this is fairly intuitive for people in the business who understand all of this, but to explain it, Tom, the central bank has been sanctioned. That means that basically today, without access to a lot of those reserves, no interventions in the FX market. They did conduct FX interventions, Tom, on Thursday and Friday, but as the central bank governor suggests, no interventions today because of sanctions. And that's the difficulty you have stabilizing the currency, Tom, and why the efforts on rates to take him from 9.5 to 20%. That's why the effort's there on rates.
And I go to Javier Blas, who's talked about 3 days ago, John, the reality of margin calls and how the commercial space folds into the economic and central bank space as well. John, the U.S. 10-year real yield has plunged in the last 5 minutes. I'm using that word judiciously, and it's right down to pretty much the support that we've seen over the last 5 days, rounding down to a negative 0.70%. I'm not going to link that to ruble, but I just think it shows the tension we have as the central bank, the Russian Bank of Russia head speaks now.
Can I just make a point as well, Tom, that by the time we've worked through all of this, I have no idea where it ends, and I hope it ends soon for everybody's sake in Ukraine, Tom. By the time we're done with this pandemic looks like it's over because the exclusive focus of news coverage is on this, as it should be. But in the background, Lisa, the governor of New York, Kathy Hochul, saying that it's time for school districts to make mask decisions just slowly, day by day. More of these restrictions are getting peeled away as our focus is elsewhere.
You know, we would be focusing on this. It would be the top news if it weren't for Ukraine, Russia. It's over, and yet we're on to the next crisis.
Futures down a little more than 1% on the S&P. We'll focus on sanctions with a sanctions expert, Dan Tannenbaum of Oliver Wyman, next. This is Bloomberg.
Keeping you up to date with news from around the world with the First Word, I'm Ritika Gupta. Ukraine began talks with Moscow in a long shot bid to end President Vladimir Putin's invasion. President Volodymyr Zelensky questioned whether much will come from the meeting, but he says he felt bound to make an attempt if it meant a chance at peace. The Russian army has offered to let civilians in Kiev leave the capital by a single high away. That raised fears that it is planning a full-scale assault on the city. And the Biden administration has banned U.S. nationals and companies from doing business with Russia's central bank. Similar bans were placed on the Russian National Wealth Fund and the Ministry of Finance. The moves effectively immobilize any Russian central bank asset held in the U.S. And the European Union has agreed to send $500 million in military aid to Ukraine for lethal weapons. It's the first time the bloc has supplied arms to a country at war. The package may include supplying fighter jets to the Ukrainian Air Force. And BP has moved to sell its shares in Russian oil giant Rosneft. It may take a financial hit of up to $25 billion by joining the campaign to isolate Russia's economy. BP has been in Russia for 3 decades, and just weeks ago it was staunchly defending its presence there. Canada's TD Bank is expanding in the U.S. Southeast. It's agreed to buy First Horizon in a deal valued at $13.4 billion. The price represents a 37% premium to First Horizon's close back on Friday. First Horizon operates 412 branches in 12 states. TD Bank says it has a large presence in Tennessee and Louisiana. Global News 24 hours a day. I'm Ritika Gupta. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
The Omicron variant and the latest wave have an impact on not only consumer trends, but your business. And do you expect the booster shots to make a difference?
Yeah, booster shot will make a huge difference. I think it's been accelerated by the huge leadership of the current Prime Minister Kishida. And I'm hopeful that our business will come back in Japan around perhaps mid-February to end of February, because we expect
As a company grows, there are more challenges. What do you worry about the most?
The market opportunity for us is enormous, and so our challenge is to continue innovating, driving, and pushing ourselves every single day to go after the most attractive profit pools in this incredible global beauty and wellness market.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Tuesday night, March 1st.
We are ready to respond decisively.
Bloomberg brings you live coverage of the State of the Union address.
America is back to work.
Hosted by Joe Matthew.
Inflation is kind of the #1 talking point so far.
Reaction, analysis, and what it means for Wall Street.
He did leave this door open.
Those are the words Democrats wanted to hear.
Biden may get a little bit of a lift on this.
The State of the Union address, followed by the Republican response. Coverage begins Tuesday night at 8:30 Eastern.
It was very clear from the West energy was off limits. But what happened yesterday is a clear escalation in potential sanctions, and the fact that energy now is being an industry that is being reconsidered as being off limits.
Cannot overstate the importance of the shift over the weekend. Jeff Curry there of Goldman Sachs. I can tell you that we've had understatement of the year, though, from Russia's central bank governor. The financial system is facing a, quote, non-standard situation, for sure. Futures down by 1.3% on the S&P. The Nasdaq down by 1.2%. The crude market looks like this, 95.29 up by 4 percentage points. The call out of Jeff Curry and the team over at Goldman, 115 on Brent. That's their 1-month Brent price forecast, up from 95 previously. The number on the screen right now is WTI at 95. Brent, Tom, just north of 100.
Yeah, 104 down to 100 as well. The market's churning here. I do want to state that we did see the bids